Okay, good morning everybody. Welcome to day 3 of the Traders Conference presented by Metastock. We are very excited to have you here today. We are going to be getting started, it looks like in about 9 minutes here. My name is Kelly Clement. I am your YouTube host today. Jeff Gibby is our host overall. He will be taking you and guiding you through today's presenters. We have a great lineup of presenters today that we will be talking about in just a moment. But first of all, let me introduce you to Metastock, who we are. We are providers of technical analysis and charting software, also real-time data and news. If you are not familiar with Metastock, I'm going to show you just a quick video showing you what Metastock is, who we are, what we do, and then we'll be back to talk more about the Traders Conference. So let's go ahead and get that video going.
Stick around for about 3 minutes and I'll tell you. Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, sorry about that. The sun started to come up and I had to stand up and close the blinds in front of me there. Well, welcome again. My name is Kelly Clement. I am your YouTube host this morning. In a few moments, we'll be bringing on Jeff Gibby, who will be your host throughout the day, also guiding you through the presentations and presenters and everything going on. I would like to show you who we're going to have speaking today. We've got a great lineup today. We did ask people yesterday how long they'd been attending the conference so far, and we had quite a few that had already been through the first 16 hours. So if you are among those sitting through the first 16 hours and ready to go into day 3, kudos to you for all the education you are receiving and everything that you are learning. So great job there. Let's go ahead and bring up the conference page. Now, what you're looking at here is today's schedule. We will be starting here in about 5 minutes with Jeff Tompkins. He will be our first speaker of the day. Then from there, we are going to be having Oscar Carboni. Both awesome speakers to start out the day. I'm also very excited for Perry Kaufman, who will be our next speaker, and then Scott Brown. From there, we'll bring up the page and go through our other presentations. I always have a problem with scrolling here. It doesn't like to scroll great in this software. And then we have the Trader Chick, along with Ken Calhoun. To wrap up the day, Sonny Harris. So we have a great lineup set for us today. I'm very excited for today's lineup, as I have been for the last 2 days, and what we have coming the next 2 days as well. So be prepared to learn, to drink from that hose today, and really take in the information. I'm going to go check with our speakers, make sure that we are all set on the GoToWebinar side so we can start our stream. So I will be back with you in just a moment. Okay, well, once again, everybody, welcome to day 3 of the Traders Conference. If you're just joining us, we are just about to get started. We have about a minute and a half to go. Again, my name is Kelly Clement. I will be answering the YouTube questions for you today, along with Jeff Gibby, who is our host for the conference. Jeff will be coming on here in about 1 minute to introduce the day, get us started. We are excited for another day of learning. I hope you are too. So as you're coming into the room, I see that we're starting to fill in now. Please go ahead and say hello and tell us where you're coming from. As Jeff just mentioned in the chat, so we're excited to have you here. I'm going to get everything ready to go, and we will get started in about 45 seconds. Thanks, everybody. Let's get going. Okay, Jeff, we are live and ready to go. Jeff, Jeff, I think you're muted.
Just talking about our lovely sponsor, Stocks and Commodities Magazine, while they work on the control room issues with the sound. So Stocks and Commodities is a sponsor of Metastock. They've been sponsoring the conference, I should say. They've been sponsoring the event for a number of years. We certainly appreciate the work that they do and appreciate it. They've been supporting the event since we started doing them. We've been doing these things for about a decade. This is by far the largest ones. And there you go. Christoph says, could you write the website address where the course is being recorded? So today's event, that's a really good question. Good morning, Fortunate PT. If you guys can hear me, regardless of whether you're in GoToWebinar or YouTube, let me know. That would be really, really appreciated. Christoph, if you go to youtube.com/Metastock, all of the events for every single day, Monday, Tuesday, Wednesday, and including Thursday and Friday will be up there. So there you go. All right. Cool. All right. Okay. All right, no problem. Not a problem at all. Things happen. Might as well get those technical hitches out in the morning, right? In any case, I do also want to say thanks to CMT Association. CMT has also a great organization. They basically do a lot of work in risk management, quantitative systems development, portfolio management. They work with some of the biggest brokers in the world to do accreditation with the traders and their institutional hedge fund traders. They started to support the events. We absolutely love their support. CMTassociation.org for us. All right. Thank you, Carl and Steve, for letting me know that you can hear me. That always does feel better. I hate it. And also, Greg, thank you for letting me know. And PT, thank you for letting me know you can hear us. It always feels better when we're not talking into the void. We, of course, are Metastock. We'll be talking a lot about Metastock today. I've been here for about 25 years. For 28 years now, we've won Best Software in our price category. We are offering a special where you can get 3 months for the price of one. You can give us a call if you have any questions all day long. But let's move on. To our first speaker today is Jeff Tompkins. Jeff is been a partner of Metastock for probably about 3-4 years now. He does a great job. He actually taught a lot of people how to trade through udemy.com, and that's kind of how he got his start. Now he's a hedge fund manager, and he still teaches a lot of people how to trade. He's definitely a great speaker to have, and we invite him a lot. He's a regular here on the Metastock channel. So, Jeff, I apologize for the technical hiccups, but we're going to get started pretty close to on time. How are you doing today?
I'm doing well, Jeff. Geez, 25 years. I didn't realize you started at Metastock when you were 5 years old.
Yeah, well, yeah, it was probably more 27, I think. But, you know. Hello, Mohammed from Mumbai. All right, I just said I can hear you. How's everything going this morning? You're up in Idaho, right?
I am up in Boise, Idaho. Not far from
nice
you.
Place. Yeah. We can hear you really well. I can see your screen, and I'm just going to get out of the way. It's your turn.
All right. Well, thanks for having me. It's great to be here. Welcome, everybody. Thanks for joining this morning. Wherever you're calling in from, looks like we've got people from all over the world, which is exciting. I love that. So today on our session, you'll discover how to use volatility to help predict markets over the course of the next 30 days. We're going to be looking at some leading indicators that can be used for momentum and trend analysis. So I know that, and hopefully everybody can hear me and see my screen okay. Obviously, if there are any audio or video issues, please let us know in the chat or the Q&A. Jeff did read a nice little disclaimer, but I'm going to quickly read our own. We know that trading securities and options involves risk. And of course, prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standard options. Investors need a broker to trade securities and options and must meet suitability requirements. We will be going over some results based on our Metastock indicator today, and know that those are not necessarily indicative of future performance, although the performance figures are based on trade signal algorithms. Due to the time-critical nature of trading, brokerage fees, and the activity of other subscribers, there's no guarantee that subscribers will mirror our performance. And again, performance numbers shown are based on trades that can be applied to the signals that we'll be looking at today. I'll also be sharing some of my own personal trading account results with you guys. So by the end of our session, you'll discover how to use predictive indicators to spot turning points in the markets. And this is really valuable information that can be used to help predict markets over the course of the next 30 days. So whether you're just starting out or you're a seasoned pro, this is must-have information for today's markets. So let's start out by understanding volatility. And for any of you out there who have been in the markets recently, you're probably no stranger to volatility. We've had very volatile markets over the last couple of years. And we're going to talk about how that impacts us as traders and investors, what it means and how we can use it to our advantage. So we're going to be looking today on our session in depth at the VIX, or the CBOE Volatility Index, which is often referred to as the fear gauge. So the VIX is the ticker symbol for the CBOE Volatility Index. And what it measures is the stock market's expectation of volatility based on S&P 500 index options. Volatility measures the frequency and magnitude of price movements that a security experiences over a specified period of time. So the more extreme the price swing in the market or any specific security, the higher the level of volatility. And the VIX index is a measure of expected future volatility. So this is an important key point here, because it can actually give us forward-looking information into the markets and what the markets are expected to do over the near term. So it estimates the expected volatility by aggregating the weighted prices of the S&P 500 index, put and call options over a wide range of strike prices. And the prices used to calculate the VIX index values are midpoints of the real-time SPX, or S&P 500 option bid-ask price quotations. So how do we interpret that? Well, the VIX can have a wide range of values. Typically, the consensus is if the VIX has a reading greater than 20, we're in volatile market conditions. If it's less than 20, we're in relatively normal or low volatility market conditions. Okay, so we're going to be looking at this 20 level, more in depth and how it might tell us what the markets are likely to do over the near term. So let's look more in depth now about what the VIX actually tells us and how we can use it. So again, this is a real-time volatility index that represents the market's expectations for the relative strength of price changes of the S&P 500. And we know that a lot of the indices in broader markets tend to move in unison. They can certainly experience divergences, but this information really can be applied to the broad range of indices as well as individual securities. But what we need to understand is the VIX is derived from prices of the S&P index options. And what it does is it provides us a 30-day forward projection of volatility. And again, volatility is basically, in its simplest terms, how fast prices change. And it can give us insight into market sentiment, especially the degree of fear among traders and investors. And that's often why it's referred to as the fear index. Typically, when the VIX spikes, there's a lot of fear in the market, and we tend to see market sell-offs or panicking in the market. And it's typically inversely correlated with the S&P 500. So when the S&P goes up, the VIX tends to drop, and when the S&P drops, the VIX tends to go up. So that there's an inverse correlation there, as we'll look at here in just a second. So how does volatility impact most indicators and trading systems? Well, it largely depends, of course, on the type of system, the methodology being implemented, but on a basic fundamental level, when we're looking at volatility as it relates to trading and investing, it can make things very difficult for us. Volatile markets can be hard to trade. They can create whipsaws and make it more difficult for us to follow and adhere to a system. particularly if the volatility gets out of control. And we've, again, seen that quite a few times over the last couple of years, and we'll look at some different examples. But when we consider volatility in the markets and how it relates to a trading system, certainly if we're using a trend following system or a momentum system, or some sort of directional bias in our trading, volatility can make things difficult. So obviously, if prices of securities just went in a nice, smooth, straight line, trading and investing would be remarkably easy, right? But unfortunately, that's not the way it works. It does, price doesn't move in a straight line. There are retracements, corrections, and these, can be issues that we face that can make it difficult for us to navigate the markets and trade them effectively. So more realistically, this is what you're going to see in the markets, right? You're going to see periods of up movements followed by periods of down movements, and often they can be quite erratic. So again, that can create some difficulties for us, and none of us have a crystal ball, and so we are unfortunately stuck with navigating these twists and turns in the market. And the good news is there are different tools that we can use to help interpret these shifts in the markets and improve our consistency regardless of what strategy or methodology we're using. And here's what I'm going to give you guys today to make it easier to navigate these types of market conditions. We'll look at how to use the VIX as a forward-looking predictive indicator, and that's really what it's designed to do, unlike most other indicators out there that are lagging and giving us basically information from the past. The VIX is a real exception to that. And we'll look at how to use it to spot potential market sell-offs and corrections, and it can be a very valuable tool for that. We can also use it to protect our portfolio, right? So if there are concerns of a correction or sell-off, or the VIX is telling us that we may be seeing increased volatility over the course of the next month, we can use that information to help protect any open positions we might have in the market, any long positions. It can also help us insure our portfolio. So when used correctly, it can be a great way to buy cheap insurance, and I'll show you how to do that when it makes the most sense. I'll show you how to apply volatility and momentum to any market in any time frame. So what I share on the session today is really quite universal and can be applied to virtually any market or time frame. And I'm also going to give you some tools and tricks to help prevent entering bad trades. We all have bad trades. We all have losing trades. In fact, it's really our biggest overhead as a trader and investor. And there are a lot of things that can obviously go wrong between trade entry and exit. So one of the best ways to mitigate that is to prevent getting in bad trades to begin with. So we'll look at some ways to do that. We'll go over some examples on our session as well, some different trade examples, and then stick with me to the end, and you'll see how you can get my top indicator that I use in the markets. So I'll give you a little quick background on myself before we get into all the fun stuff. I do have over 20 years of experience trading the stock options and futures markets. I received professional training at the Morgan Stanley Trade Desk. I'm also the founder and chief investment strategist of Altos Trading, where we currently have over 50,000 members in over 100 countries across the globe. I'm also a hedge fund manager, so I do manage capital for my clients at Altos Capital. And I'll be sharing some of the core methodologies and systems and indicators that I use in my actual hedge fund today. And I'm also the founder and creator of the Trade Trend Signals software, which is a built-in indicator for the Metastock platform, which I'll be demonstrating for you. All right, so let's start out looking at Trade Trend. This is, again, one of my top indicators that I use and created to navigate the markets, in particular volatility. And so to give you a little background on Trade Trend and how it works before we look at it in the Metastock platform, and what really sets it apart from other indicators out there in the market is the advanced notice of a anticipated move in a security. So whether that's up or down, Trade Trend gives us buy and sell warning signals up to 3 candles in advance of an anticipated trend. And it does it with a proprietary momentum algorithm that can read the market in real time and tell us where it may be most likely to head in the near term. It also includes trailing stops. So when we get into a successful or profitable trade, the algorithm gives us levels to lock in any profits we may have achieved in that trade. And it can, as you'll see here in a second, can do an excellent job at predicting short-term and long-term trends with any security. So whether you guys trade stocks, futures, Forex, also show you guys how you can screen for opportunities using the Metastock scanner. And again, you can do this in any time frame. So whether you're trading off a 1-minute chart or a daily chart, this will all be applicable. And we have a lot of members who also use it for options, and I certainly use it personally for options. I found it to be a great tool for helping me more accurately pinpoint trends and shifts in momentum in the markets, and then applying those to a variety of option strategies. Now, the indicator does not repaint. That's often a question that gets asked as it relates to virtually any indicator. Unfortunately, we see a lot of indicators out there that do repaint, and what that means is a signal could potentially appear and then be validated, but when market conditions change, it disappears right off your chart. And that, unfortunately, is not going to give you an accurate picture of what the indicator did in the past. So this one does not repaint. We have built-in protection to avoid whipsaws. So it's also designed to keep you out of the market when conditions are not favorable, so that you can ideally capture most of the trend before it reverses on you, right? And that's, again, relating to volatility. One of the things that we struggle with as traders is a situation where we get into a nice trend, but then it very quickly reverses on us and we see any profits we might have had in a trade wiped out. And it's designed to limit losses and let profits run. Just like any other indicator, it has wins and losses. And the key is to have a positive expectancy where our wins outpace our losses. It can be used with any other indicator system for added confirmation. In fact, we're going to be looking at using it with another indicator on our session today. So the idea here is to help you guys trade with a higher degree of expertise without guesswork. And that's what Trade Trend is designed to do, is to help you guys with your entries, your trade management, and your exits without having to use any guesswork or levels of discretion that might cause you to not adhere to your system or methodology. And those are really key factors in successful trading. So let's go ahead and get over into the Metastock platform so I can show you guys how this works. And we're going to look at the VIX together so that we can see how it correlates to market trends, sell-offs, and buying opportunities, right? So we're going to look at the VIX, and hopefully you guys can see the Metastock charting platform. If not, please let me know in the chat box or the Q&A box, but hopefully that's showing up just fine for you. And so I've got a chart of the VIX here, and this is a bounded instrument. So it basically cannot obviously go below 0. We've seen a lot of spikes in the VIX lately. The most extreme we saw back in February, March of last year during the so-called Corona crash, where the VIX spiked up to around 90. And typically it's going to range between roughly 10 and 30. It's more unusual to see it go outside of those ranges. So let's look at how to interpret movements in the VIX. And you'll see that I've got the trade trend indicator plotted on the VIX chart. So first what I want to do is draw the line in the sand, right? So I mentioned that a reading above 20 would indicate more volatile market conditions. A reading below 20 would indicate relatively low volatility in the markets. And right now, the VIX is below 20, it resides below 20, indicating that we're in a relatively low volatility conditions. And again, we'll typically see that when the market's in a nice smooth uptrend. So let's talk about how we would use the trade trend indicator to determine if the VIX may be primed to spike, right? To go up above the 20 level. And that's where we may want to consider some type of a hedge or protection for our portfolio, using the VIX for insurance. And by the way, for those of you who aren't real familiar with the VIX, there aren't shares of the VIX that can be traded on the open market. It's again options based, and in order to take advantage of the VIX and trade it, we need to use options to do that. So if we look at the trade trend signals, you're going to see a series of diamonds and arrows and exits, right? So let's talk about what those mean. The diamonds are a warning signal. So I mentioned that what sets trade trend apart from other indicators is it gives us some degree of advanced warning of anticipated move. So a green diamond, and I'll just zoom in a little bit more for you guys so you can see this, is going to indicate that the likely directional move is going to be to the upside. A red diamond will indicate that the likely directional move will be to the downside. Now, if that move follows through, and again, that's simply a warning, a notification telling us that the anticipated move is either up or down. Now, if that follows through, we're going to see an arrow. Okay, so we'll just we'll look at this one from early September here, September 7th. So we see the green diamond, that's our warning. At that point, the entry is going to be slightly above that candle. And if there's follow through, you'll see that with confirmation of a green arrow. So this particular buy warning gave us a one-day advanced notice of a potential move up. And in this case, we did see a significant spike up in the VIX, which reached a high on September 20th of 28.79. All right, when the signal came in, we closed at 18.14. All right, so that's a really significant move in the VIX, right, in a relatively short period of time. And we'll look at the S&P chart in a second to see how that correlated to moves in the S&P. But what we want to look for on the VIX as it relates to the trade trend indicator are buy warnings. Again, that's the green diamond that occur below the 20 level. Okay, then that's our line in the sand for measuring whether we're in relatively calm market conditions or more volatile market conditions. And typically, buy warnings below the 20 level are going to give us a really good indication of a potential spike in volatility, which often correlates to a sell-off in the markets. So hopefully you're seeing how this can give us really nice forward-looking information as it relates to what's happening in the broader markets. Okay, and we see a number of these buy warning signals. So I'll just go ahead and click on this one from September 7th, and I'll show you what the indicator, what the trade trend indicator is telling us. So if we look at the expert commentary, and we go ahead and go over to September 7th, it doesn't quite want to let me go over there. Well, I'll cycle back. Won't let me click on the candle for some reason. So while I'm doing that, what the commentary is going to give us is the directions for each particular buy or sell warning signal. And it's going to give us an actual entry price, an order type, and if that entry price is triggered, in other words, if the underlying security reaches that entry price, it's going to tell us how to manage the position. And so I'm now here on September 7th, 2021, when this buy warning signal came in right here. And you'll notice in the commentary that it tells us the criteria for a buy setup has occurred. Again, this is a warning. It's designed to be forward-looking, so that doesn't mean that we want to necessarily buy a call option or take a directional position on the VIX at that point. But what it is telling us is the suggested entry price would be around 1843. So again, that's going to be just above the high of this warning candle on September 7th. So if there's no follow through over the course of the next 3 days, then that signal would no longer be valid. It also tells us the suggested order type. So we would want to use a buy stop limit order if we were to take a position on this buy signal. It also tells us that if there's a move in the VIX beyond a predetermined range, that we don't want to get in. It may have moved too far. In other words, it may have like gapped open the next day beyond where we would want to enter at that point. So it gives us some degree of protection there, where if price gets away from us, we don't want to chase it, right? And it also tells us if the trade's entered, the initial stop value is going to be set at 1563. Okay, so if we go fast forward to the next trading day, September 8th, so now we're looking at this candle right here on September 8th, where you see the green buy entry. That is going to show that the suggested long entry trigger price was reached, initiating a long trade. And again, it gives us that initial stop value. Okay, and it will continue to give us a stop value for each consecutive day. And that's going to help us manage the trade, and would be applied more to individual securities that we'll take a look at. But for the purposes of the VIX, what we want to really pay attention to is any buy warnings below the 20 level, followed by a trigger. Okay, and you can see that that's given us some very nice opportunities to be forewarned of a potential market sell-off or correction. We want to ignore buy warnings that come in above the 20 level, because the VIX has already spiked and has reached volatile territory. So we would look at ignoring anything above the 20 level. Conversely, a sell signal above the 20 level is going to be an accurate indication of a decline in volatility. So a retreat back into lower levels of volatility. And you can see that after this September spike, we received that on the 22nd of that month, followed by a decline in the VIX. Okay, so that's one kind of step in the process of determining market volatility and using the trade trend indicator to tell us if there's a likelihood of a potential market sell-off. So let's look at the S&P as it relates to a market sell-off. And I'm going to go ahead and pull up a separate chart here so we can look at that correlation. So recall that I mentioned that the VIX is inversely correlated with the S&P, right? We'll just use the SPY. Most people trade the S&P 500 ETF. Let's go ahead and open this chart. Oops, mistyped the symbol there. Okay, so let's go ahead and stick with that with the September example, because we did have a significant correction throughout the month of September, and in fact, if we look at the S&P, you'll notice that we had hit a new all-time high on September 2nd. We start to see price retreat a little bit on the following trading day, the 3rd, and we actually got a sell warning signal from Trade Trend on the 7th of September. So remember, looking at the VIX, right, we had a buy warning. And so when I see this type of confluence, when I see a buy warning below the 20 level on the VIX coincide with a sell warning on the S&P from the trade trend indicator, that tells me with a high degree of likelihood that there's going to be some significant degree of sell-off in the market. We certainly saw that again in September. And let's see what happened here. So if we look again at the S&P, the sell warning comes in on September 7th. That would have triggered an entry the following trading day on the 8th. So you'll see that that's confirmed by the arrow, and there we get the nice sell-off. And as this sell-off ensues, we can use the market commentary to help us manage the position. You'll see it was exited down here, almost near the bottom of the correction. That might be a little bit difficult to see, but you can see there is a sell exit right here on the 21st. So it captured this move very nicely, and also coincided with what the VIX was telling us was likely to occur sometime in the course of the next 30 days. That's one way that we can use the VIX to help us determine what might be going on in the market. And you can see the value of that, especially when we're in a very strong uptrend where we may be more vulnerable to market sell-offs or even corrections or conversion into bear market territory. That's really important, valuable information to have. So as far as insurance and protection or any sort of a hedge you might use for a long trade that you have in the market, again, we want to look for that when the VIX is low and below 20, and that's when insurance is going to be cheaper. So if we're using options, in this case, a call option to speculate on a directional move in the VIX and an inversely correlated down move in the S&P, then we can use that information to purchase insurance when it's cheap. As the VIX spikes, the option premium goes up. So insurance becomes much more expensive. So we don't want to be buying insurance. And really, when you think about insurance and how it correlates to other things we might insure, like a vehicle or our home, we want to buy insurance when it's cheap, right? We don't want to, go without insurance and then have a disaster. We, like a house fire or, God forbid, a car crash, and then try to purchase insurance after that happens, right? The insurance companies know that you're now considered a high risk person to insure, and that they're going to charge you higher premiums. Well, the options market works very similarly, right? So if there's already a catastrophe in the market, insurance is going to become much more expensive. So you can see the value of having these buy warning signals prior to insurance becoming expensive in the market. And you can also see how it can help us time what the market's doing and over the course of the next 30 days. And again, that's what the VIX is designed to do, right? And it's why it's the only true forward-looking indicator of what's expected to occur in the market in the near term. All right, so we'll go back to the S&P chart. And I'll just kind of give you a higher level overview of some of the signals. In fact, let's go back to last year, right? Because everybody's biggest fear is a black swan, right? And that happened last year with COVID. The market experienced the most extreme sell-off we've ever seen in terms of magnitude and period of time, right? It only took a couple of weeks for the market to lose over 30% of its value. So if we go back and see, how did trade trend navigate that? Did it give us a warning? Did it help protect us from the sell-off? Did it tell us that, hey, if we're long the market, we need to buy insurance? And let's look at the VIX too, as a matter of fact, during that same time period. Well, the punchline is it did. It gave us very good forward-looking information. So on the VIX, so now I'm back February 2020. The VIX was trading around between 14 and 15. Very tight range here on February 19th. What happened on the 19th? Well, we got the buy warning, right? The green diamond from the trade trend algo. And at that point, it would have given us an entry just slightly above the high of this candle on the 19th, followed by a trigger. And this is where I mentioned the VIX spiked up to almost the 90 level. So it was down, the close on the day, back on the 19th, was 1438. And then over the course of the next few weeks, we got a spike all the way up to the 85 to 90 level. This is very unusual, but we got the nice warning from the trade trend algo. So what happened on the S&P? Well, 1 day later, after we got that buy indicator on the VIX, we got a sell warning from the trade trend algo. See the red diamond. All right, so this is literally just 1 day after the previous all-time high in the market, which was put in place on February 19th. Then we get the sell warning. So our entry, if we were to take a short position on this sell warning, would have been just below the low of the candle. You can see that that was triggered on the 21st, right? So this occurred the very next trading day before the market tanked. Okay, so I also want to point something else out. I mentioned that I'm gonna demonstrate how you can stay out of a lot of bad trades, right? Maybe when things don't follow through as you anticipate. We've designed the trade trend algo to help keep us out of a lot of those types of situations. So it looked like after this initial part of the sell-off in mid to late February that the market was starting to rebound. And the algo actually picked up on that. So on March 4th, we see the buy warning. Now, this is where it becomes crucial to use a specific type of entry on a signal. And I also mentioned this doesn't repaint, right? So this signal still is showing up on the chart. It shows us that the algo anticipated a reversal back to the upside. But it also kept us out if we were to place an order to get into a trade on that signal. Again, because the entry on March 4th for the next trading day would have just been above the high of the candle. And you can see that didn't follow through. So after the course of 3 days, if we were going to take a trade off of that buy signal, we would go ahead and cancel out our order. The signal is no longer valid. And that's why you see that there's no actual buy entry or confirmation of an entry back to the upside, right? In fact, the sell-off continued. We get another sell warning on March 9th from Trade Trend 2 days later. So this one didn't actually trigger on the next trading day, but on the 11th, it did come down and reach the suggested entry, which would be just below the low of the candle. And you can see that the sell-off obviously continued all the way down to a low of 218.26. Now, the next buy warning signal, this one came in March 24th, had follow through. So you look at the incredible accuracy of this turning point in the market. Of course, nothing's going to catch an exact top or bottom, and if it does, it's very lucky. But when you can see consistently over and over again that these major turning points in the market are picked up by the trade trend algo, and in this case, did a very nice job of that before the market turned back around off of the March sell-off, we get a trigger on the 25th. So the next trading day, you can see the green arrow, price came up and hit the suggested entry. So again, you would use a buy stop order here if you were going to take a long trade and get in on that signal. And this one obviously ran significantly. We got a couple sell signals along the way, but no triggers. Again, so this approach and the algo would have kept us out of a potential bad trade, right? No trigger on those. We got a little bit of a small loser here. There was a sell that was triggered. Depending on how you were managing the position, you may have been able to take profits at a lower price. It did move down significantly the following day, but then we got a reversal. So this one did reverse on us. And then we get another really nice buy signal there, right, as the trend resumes. So let's look at some other charts in just a second, but I want to pause there and see if any questions have come through, Jeff, if there's anything we want to address before we go ahead and move forward. Looks like Jeff missed. Okay, I'll just go ahead and.
I'm cleaning off my desk with coffee.
Oh, okay.
Kelly here. Oh no! I don't have any questions right now. It looks like we do have a lot of people saying they really are enjoying the presentation. So, but I don't see any questions. If you do have questions, type them in. Jeff's really good at answering.
Yeah, sorry, I should have mentioned, if you guys do have any questions, put those in the chat or Q&A. It's difficult for me to monitor that while I'm teaching, so please feel free. I'll pause every so often just to make sure I'm not getting ahead of anybody, but it sounds like everyone's tracking well, so that's good to hear.
All right.
So
thanks. Thanks.
Okay. Yep. So can you guys see my slides again? Okay, good. All right. So let's go ahead and look at another way to use volatility. So the VIX obviously can give us a lot of good forward-looking information, but what if we want to analyze volatility on an individual stock or a forex pair or a futures contract? Well, we can certainly do that too, and we can use volatility, still use it as a forward-looking indicator. So let's look at how we can use a specific tool with the trade trend indicator that can help us identify when markets might be vulnerable to a sell-off, and how to also identify when the market's likely to turn around and go up, how far the market's likely to go up, and then I'll show you guys how you can get access to my trade trend tool, which I truly believe and have witnessed with a lot of our members change their trading for the better. So I like to use a slingshot analogy for this type of volatility analysis because it's identifiable and it's easily relatable to the market. So we know that as a slingshot's pulled back, the muscle energy in our arms and hand is transferred to elastic energy in the bands of the slingshot. And then once we release it, that energy is transferred to the stone as energy of motion. This is what's referred to in physics as kinetic energy. And kinetic energy actually occurs in the markets. And we just see it in a different context, right? So kinetic energy is basically the supply and demand or buy and selling pressure that we see in the market. And where this can become really useful is when we look at the volatility bands that we'll place on our chart in a second. Once they become overstretched, it gives us a buy signal when we use it with the trade trend indicator. And we can use that information with a high level of confidence that prices will return to the initial resting point of the band. And we're going to do that with a specific volatility indicator called the Bollinger Band. So the Bollinger Bands are actually going to tell us when prices move too far from a mean, but it'll also tell us when price may be vulnerable to a sell-off. And this indicator is available on virtually every retail broker platform, charting platform, and it's on the Metastock platform, and we're going to go ahead and take a look at it. If you're not real familiar with the indicator, I'll give you a little bit of quick background on how it works, but it's basically comprised of 3 bands, right? And there's a lot of ways to use it, but what we want to look for is a volatility expansion. So that's when price, as you see here, the red arrow, hits the lower band and begins to trail the lower band, right? This would be in the case of a security shifting into a downtrend. So it may have been in a sideways channel or an uptrend, and now we're seeing volatility expand, fear kick in, and sell-off ensue. And then what we want to look for on these types of volatility expansions is a buy signal from the trade trend indicator. And that's going to come in somewhere along the lower band. And then, and this is key, we want to look for the price to return right back up to the initial breaking point of the band. Okay, and the Bollinger Bands are going to help us do that. So the middle band is basically the moving average. The 2 outer bands, so the upper and lower band that you see, are standard deviation moves from that average. So it's the average variance from the mean or the middle band. And it helps measure volatility, how spread out numbers are from the average. And we don't need to go into the nuances of all the calculations and things like that, but it can be a really useful tool for measuring volatility because when the market becomes more volatile, the bands are going to widen. And certainly if there's a market sell-up, price will trail that lower band. And then when the bands contract, we enter more normal volatility, right? So hopefully you're seeing how this all ties together with volatility and the VIX and the broader markets. I typically just use the standard default settings. That's a 2-period SMA and a 2 standard deviation move from the mean. Okay, so those are really the only 2 settings you would change. So let's take a look at this on a chart and how it would work. So you can see that this is a daily stock of Apple. It's in a very nice uptrend, right, on the left half of the chart. But then something happens right there in the middle, right? The price starts to trail the lower band. In fact, we got 2 bullish reversal candles at the lower band, and a lot of people who use the Bollinger Bands would use this as a potential indicator for a reversal off the lower band back to the upper band. But I use a bit of a contrarian approach. I want to look for a failure of that uptrend, right, and a sell-off. In other words, the price trailing the lower band until I get a reversal signal. In other words, a buy warning from the trade trend indicator. Okay, so that would be where we would look at getting in at a lower price rather than falsely buying up around the 196 level. We wait for prices to go lower and get in at a lower, more opportunistic price before it rebounds back up into the level where that initial volatility expansion began. So we see this happen over and over again. This is going back to 2018 on the NASDAQ QQQ. You can see that we had another volatility expansion after the NASDAQ was in kind of a sideways ranging channel. Very significant sell-off there in October through December. And then we get a rebound right back up into the level where the volatility expansion occurred. And this can be applied to any time frame. It doesn't have to be on a daily or a weekly or a monthly chart. This is a 5-minute chart of AMD, Advanced Micro Devices. So you can see again, the price is respecting the upper and lower bands fairly well there on the left quarter of the chart. But then we get the volatility expansion, price trails the lower band, and that's where we want to look at getting in at a lower price if we're going to go long AMD as it returns back up to the initial volatility expansion, right? The breakout or expansion of volatility. This is going back to what we just looked at on the S&P in February, March of last year. So markets were very low volatility. The VIX was at a low level through the early to mid part of February. But what you'll notice when we look at this price action in the context of the volatility bands or the Bollinger Bands, price starts to trail the lower band. So this would have been confirmation on top of the trade trend sell signal, which actually came in much earlier, that price was vulnerable, or the markets were vulnerable to a sell-off. Okay. And so when we look at that sell-off in the context of the significant rebound that has since ensued, this would have been a great entry point, right, on this volatility expansion. And of course, the markets have since reached much higher all-time, much higher highs and reached new all-time highs in the market since this sell-off and rebound. But what I want to point out is this, what I call the slingshot setup, occurred very nicely, right? So you have the volatility expansion, late Feb, the buy from trade trend. We looked at that on the chart in Metastock just a moment ago, the buy entry. And there's the return to the volatility breakout that happened there in mid-June, right back up to that same level. So it kind of looks like an upside down triangle, right? So we'll go back over to the Metastock platform here real quick and plot those on the chart so we can take a look at how that's looking in current times. But I believe in backing up what I teach and the tools that I use and offer to our members with real money results, not just hypotheticals. So people are often asking me, well, Jeff, how did you do, and how did the trade trend indicator work for you back during the Corona crash? Since it was obviously a tough time in the market and wiped a lot of people out. There was billions and billions of dollars lost during that 30% market sell-off. So these are actual real money screenshots from my TD Ameritrade brokerage account showing basically how I did during that sell-off and rebound. And I was fairly cautious at the time. I was mostly in cash and had small position sizes on at the moment, but I was able to use that information that I've shared with you to do fairly well in February and March. So at the end of February of 2020, I was up in my real money TD Ameritrade brokerage account over $13,000. As I saw that rebound and the buy signal come in from trade trend in March, I started to load up a little bit more. And so I did even better in March. At the end of March, as the market rebounded, my net profit was over $27,000. So between February and March, during the sell-off and the rebound, so of course, a lot of people will show you, oh, this is how I did when the market was just in a nice, perfect uptrend, right? Well, I'm showing you how I did with this tool when the market experienced one of the worst crashes in history and then rebounded. So I'm showing you both sides of it and what occurred for me. So over $40,000 in profits in February and March. And I did that using what I've demonstrated on our session today, using the VIX, using the trade trend indicator, and the volatility bands. And that all helped me navigate that type of market situation. Okay, so let me get back over to the charting so we can take a look at how to use this with the Bollinger Bands. And actually, I want to go ahead and, while we're doing that, because it can take just a couple minutes, I'm going to go ahead and run a scan just to see how the trade trend indicator does across a basket of stocks. So we can run system tests within Metastock. I'm going to go ahead and run one for trade trend on the entire basket of NASDAQ stocks. So that's over 3,200 stocks. Let's go ahead and start a system test real quick on that. That'll just take a few minutes to run while we look at a chart of the, let's go ahead and pull up the, since we're running a test on the NASDAQ, let's pull up the QQQ. Oh, mistyped the symbol again, sorry about that. Okay, and oh, it actually defaulted the Bollinger Bands. I had those plotted, I guess, already. So let's go ahead and zoom in here. So what we want to look for, obviously there was a nice slingshot setup here. The sell signal came in just a bit late, but still caught some of that down move. Let's actually go back to, and you'll see these happen all over the place. Here's another slingshot sell, buy, rebound right up into that level. A lot of times it far surpasses the level of the volatility expansion. Here's another nice slingshot, right? So this is from February of this year. We get the warning, price trails down, the buy, the rebound up into the volatility expansion. You'll see these happen over and over again. Go ahead and go back. So this would have been the February sell-up of last year, the Corona crash, right? So there's the so the trade trend gave us that warning up at the upper band, and then we got the added confirmation of the slingshot or the volatility expansion on the way down. And again, what happens? Price returns right back up to the volatility expansion level. So again, you'll see these. Here's another one. There's our sell, volatility expansion, price trails the lower band, buy signal. So this one was back from June 2019. There's the buy warning. There's the trigger, and the nice rebound up until the volatility expansion. Again, this one far surpassed that initial level. I'll just go ahead and mark that for you guys so you can kind of see, right? So there's the initial volatility breakout. There's the expansion. There's the rebound. Okay. See how our system test is doing. It looks like it's about 35% done. So while that continues to run, let's get back over to our slides. I want to show you guys how you can use this tool to apply to any market, any time frame, any size account, whether you guys are just starting out or maybe you've been trading for quite some time. I'd like to offer you an opportunity to try out the trade trend signals for yourself. And you'll have access to the indicator to give you to receive the buy and sell warning signals before the move occurs, right? And it gives you that buy or sell warning signal up to 3 candles in advance of the anticipated move. And so if you're trading off a daily chart, that would be up to 3 days of advance notice. Let's say you're intraday trading off a 5-minute chart, you'd have up to 15 minutes of advance notice of where to place your order in the anticipated move. And here's some more examples. These are sell signals that came in on different market crashes from the trade trend indicator. And these are also really nice slingshot setups. This is the flash crash of August 2015. We got a sell warning and then a buy on the rebound on the double bottom. This is going back to 08, the 2008 mortgage crisis. If you guys were trading back then, you'll recall the market lost more than half of its value in the second half of the year. The trade trend algo actually spotted that back in late May before the sell-off ensued and the slingshot occurred with the buy signal rebound. And then this is the 2000.com bubble. There's the sell and a nice buy warning there in mid-September before the market rebound. Again, I was trading during these sell-offs, and they are very difficult to navigate, but having a tool like Trade Trend or something that can give you some sort of an advanced notice, especially when used in the context of volatility, can really help us navigate these difficult conditions. This is just more real money proof of, and I trade futures as well as stocks and options of situations where I use Trade Trend in the futures market, right? And had some really nice days here. Not every trade's a winner. There are some losers in here as well, but what I want to point out is you'll notice that the losers tend to be fairly well contained. The algo helps keep those contained as much as possible. And when we get into a successful trade, it helps the profits run. And that's the idea with really any system, right? Because we all have winners and losers. So I want to help you guys be successful in the markets. I want to give you an opportunity to join our members, and I'm going to give you access to my trade trend indicator starting today. If you want to have access to use in your own trading and charting platform in the Metastock platform and use it in your trading decisions. Again, you can use it in conjunction with any other system that you already are using, any other indicators. It works great with the Bollinger Bands, and I use it frequently with that volatility study. And so I want you guys to join me to help you become more consistent, and that's our goal for our members. And we don't hold anything back. We give you access to all the tools that I use myself, and we do a lot of teaching behind that. So we also give you access to a lot of the training and things that you need to be successful with our tools and indicators like Trade Trend. So you'll get 12 months of Trade Trend on Metastock. That again gives you exact entry and exit signals, trailing stop levels. We also hold live interactive sessions where I'm basically hosting those where I demonstrate the tool in a live market environment, and you guys can interact and ask questions, and you get full support and personal coaching from me. I'm also going to throw in my 2 top weekly Trade Trend picks. I send those out every Monday to our members who use Trade Trend in their own trading. And ultimately, my goal is to help you guys cut the learning curve and start trading with more consistency as early as really today, if you guys want to jump on this one today. So we built a lot of value in this package. You get 12 months of the Trade Trend signals on the Metastock platform. You get our live trade sessions. So normally the 12 months of signals comes in at $14.99 retail value. We're going to be cutting that price significantly today for the Metastock event. You get our live trade sessions. Those are a $550 retail value. Sorry, that slide should have updated, but didn't. I apologize. Our next session is actually going to be next Tuesday. You get coaching for me on the sessions. Normally that's a $19.97 retail value. You get access to our members only Facebook group where you can interact with other Trade Trend users valued at $199. We're also going to throw in our professional trading series online course. So I taught you just one of my most effective strategies on the session today. We have many, many more that we share in our professional trading series online course. Normally that retails for $900, but we're going to actually throw that in to the package as well today, as well as 2 bonuses. So you get, as I mentioned, my top 2 weekly trade trend picks. Normally that retails for $997. So you'll get over 100 picks per year on average, as well as my latest ebook, How to Create Risk-Free Trades. So the total value on the package is over $5,000 retail. We're slashing 80% off. You guys can get all of this today for only $997. And guys, that breaks down to less than $3 a day. So it's very reasonable. And as I've demonstrated to you on our session today, can potentially make a big difference in your trading and investing. We are going to limit this to 25 seats, getting everybody set up and running. And certainly Metastock offers a very nice white glove treatment. They'll get you all set up. They'll work with you to get up and running. And that takes a lot of manpower and a lot of time and effort. So we can't take on unlimited members. We only limit this to 25 seats. Once those fill up, we will shut it down. So if you guys want to claim one of those, and I believe Jeff will be putting this in the chat, you can go to altostrading.com/Metastock. I'm going to run back over to the platform because I'm kind of out of time here, just to see if that back test finished up for us here. Did it close on me? If it did, I ran one this morning. I can just pull that one up, but it looks like I was hoping to be able to, if
you click on the dollar sign, I think you can go to the report right there, or just go to the report.
Sorry,
yeah, so that if you right click on where it says trade trend right there, it should pull up the report. See where it says trade trend? So if you right click on that, go to report, and you'll have all the ones you've ever run. But
we want to run the one that we just did, right? So we have to go to the bottom here.
Number 471. You've run this a few times.
Yeah, I'd like to keep track of how it's doing. Let's see.
Yeah, of course.
So let's go ahead and sort this.
Wow.
It's a little bit scrunched up, and mainly because we had like some really, but this is based on 500 shares going back a year. So just on the entire basket of NASDAQ stocks. I don't know, Jeff, if there's a way to unscrunch this graph. But obviously there was some big winners, over 450,000 or 465,000 on 500 shares of MSTR. But you can see that profitability across the entire basket of NASDAQ is very, very good, right? So these are kind of probably more in the 25 to 50,000 range. Just a small number down here over the course of a year that were out of the profitable territory. And obviously, when we look at the loss ratio, loss to profit, you can see that the profitable trades have outnumbered and outpaced the losing. And the backtester gives you a really nice picture of that here, and gives you every individual ticker with results, percentage gains. And again, this is going back a year on the NASDAQ, 500 shares per trade. So that would be if you took every long and short position per trade. All right, well, I'm glad that we were able to run that. So I apologize, I went just a few minutes over today, but I want to again offer you guys the chance to try out Trade Trend in the Metastock platform for yourselves, and join our membership. And hopefully we'll see you guys on our next live session. Again, we're holding that next Tuesday at 7 p.m. Eastern. And hope to see you guys there. Maybe it did. No, the date is wrong on that. So anyway, next Tuesday.
I've never done that topic.
Yeah,
I do that all the time.
I don't even know what day it is anymore. So anyway, really appreciate it. Thank you guys for joining. Sorry I ran a little bit over. If there are any time for questions, I'd be happy to answer or take any. If you guys would rather reach out to us, let me actually get you. Oh, by the way, I should throw in the guarantee too. We do have a 30-day full money back guarantee. So if you guys aren't happy with it for any reason, we do offer a full refund within 30 days. Let me go ahead and get to our contact information. If we don't have time to answer all the questions, you can contact us at support@altostrading.com. And again, there's the link there at the bottom to take or claim one of the 25 spots that we're offering up today on the Metastock Summit. Jeff, back to you. Any questions that we can address before we sign off?
I think we answered most of them. There was a question about whether or not this produces signals at the same time VIX was running. And I said, no, it'll produce signals all the time, regardless of the VIX. The VIX is something you could look at in addition to the signals. So
Correct.
That was Ray that was asking that question.
And that's a great question. Yeah. So they're not directly, the signals aren't directly correlated. So you won't necessarily get a sell signal at the same time you get on the VIX, at the same time you get a buy signal on the S&P.
Sean says, thank you, Jeff. And I think he's talking to you, not me.
Thank you, Sean. I appreciate it.
I will say that we have been kind of helping kind of promote this package. I'm going to go ahead and try to share my screen for for a while now. And people really, really do like it. It's a really nice value. I would encourage you to get involved. A lot of people are renewing this. Try it out, altostrading.com/Metastock. If you want, you can also give us a call. We can answer questions. We can pull charts for you. Our support team, sales team is more than happy to kind of help answer any questions you have about this package. You can give them a call at 800-882-3040 or online at metastock.com/saleschat. So great job, Jeff. And
thanks so much.
Thanks for coming in. Nice name too.
Yeah, likewise. Thanks,
cool.
guys. Take care.
All right, let's go ahead and do this. Yes. And I assume my camera is coming on. I no longer can see myself, which is fine. Let's go ahead and, again, if you're interested in taking advantage of that, altostrading.com/Metastock, or give us a call, metastock.com/saleschat to chat online, or 800-882-3040. I'm going to move real quickly here. I do want to mention our sponsors. We are Metastock here. We are doing a special for everybody that comes to the conference. If you haven't tried out Metastock, it has been rated #1 28 years in a row. We're very, very proud of that. It's by the readers of Stocks and Commodities. If you pay for a month, we're going to give you the second and third month for free, which means you can use Metastock through the holidays. You can do all of your analysis. You'll be running it till February. Find out why it's been rated #1 so long. Metastock.com/conf promo. That's just shortened version of conference promo. 800-882-3040 or metastock.com/saleschat. I'm going to say very quickly, thank you for our sponsor, Stocks and Commodities Magazine. You know what they're going to do for you is if you do try a Metastock product today, anything, they're going to give you 5 months. And if you spend $300 or more, they're going to give you 2 years of Stocks and Commodities. And I want to say this very, very specifically. They're giving that to you. We're not paying for it. That's actually their gift to you. So they're great sponsors. They help us kind of get the word out, and they've been working with us since we started these silly conferences. So in any case, our next presenter, our next guest today is Oscar Carboni. Oscar is a friend of mine. He does OmniCamp. Which is a camp that he does down in Las Vegas, Nevada. He's been doing that for as long as I have known him. I've been down to a lot of the Omni camps. He does such a good job. One of the things that we love is kind of the energy he brings to the room. He certainly has a bit of a caffeine feel to him. So in that case, we love having you on, Oscar. Let's go ahead and bring you in here and get you going. How are you doing?
How about now?
There you go. Cool. So,
how are you, Jeff? Thank you for the invitation. Much appreciated.
Doing great. I can see your screen. I'm not sure if I'm pretty sure the webcam is coming through, but I can't see it over here the way something's up with my setup today. But
that's an important piece of today's presentation. Can we see the camera out there?
Yes, we can.
Yeah, let us know.
I can see it from my side on the YouTube side and on GoToWebinar. So you are both golden.
Sounds very good. All right, I'm going to get just out of the way, Oscar. Go for it. Your turn.
Well, then, thank you, Jeff, and welcome traders from across the globe. Thank you for tuning in. And how about this insane Metastock presentation with all of these fantastic presenters, a lot of great knowledge. So, Metastock, a round of applause to you. What a great service you provide. And thank you for inviting me. Traders, some of you know me, some of you don't. My name is Oscar Carboni. If you don't know me, I've been sharing and teaching tips, tricks, techniques, and you name it. If I've learned it down on the pits in Wall Street, I have been teaching it to my traders literally since 1982 when I hit the trading floors. My first technical analysis service was back in 1984. I mean, I might look younger, but I have been around for all of it. Since before there was technical analysis that made any sense, straight through electronic trading, I have been there for the whole gamut. And I am going to teach some fantastic tricks to you. Let me just show you a few things. What I would like to do is convince you of something. On Saturday, this Saturday, at 10 a.m., I am going to sit for 3 hours, and I'm going to pull back the curtain, and I'm going to teach some of the things I have never taught anybody else unless you are in Vegas, sitting with me in my home office. Now, traders, I am extremely qualified to teach technical analysis. I am telling you, I will show you, you will have the best session you have ever had if you join me on Saturday. I will teach you techniques that you can use immediately right after we're done with the session, well, on Sunday and Monday when markets open, and they'll be useful in stocks, commodities, ETFs, you name it, crypto. You will love what I'm going to show you. I am an authority at this, I promise you. I'll tell you right now that a chart is merely a visual look at all the government reports, all the reports from companies, whether they're quarterly, monthly, daily, all of the fundamentals that come out, that fire hose of fundamentals that comes out of the newsreels and all over the internet, all of that is built into a chart. It all comes out in the charts first. And if you can read a chart, you don't need to know any other information. I am living proof that that is true. So just to show you some of what I've done in the past, just to convince you that you should absolutely sit with me and Metastock on Saturday. I've had sites since the 90s. This is called, really, since 1992 was my first site. This is something called the Wayback Machine. You can look up anyone's website that's ever been on the internet, whether it's pulled away now, whether it's defunct, you can go find it. You will find me in the early 90s sitting in front of a screen where I'm giving daily trading recommendations. Look at this. You click on it, and this tells you where to buy, where to sell, where to place your stops, exactly what I do this day, 25, 30 years later. I am doing the exact same sort of system, the same sort of trading, and I'm still standing, and I haven't worked for anybody since I'm 21 years old. So if you look at this website, this is back from 1994, 95, 96. Then, of course, as time passes, we go out to 2000 and things get a little better on the internet. Now I've got an interactive site with things moving and gyrating, and wow, is the internet moving around. And here I am every Thursday night sitting for an hour teaching and answering questions back in the 90s. I've been doing this forever. So the instructional websites that you're looking at here, I've had since the beginning. So on Saturday, this 3-hour session that I'll be hosting with Metastock, I will pull back the curtains and I will show the attendees some of the very same techniques that I've only taught in person here at OmniCamp. So I've got a whole bunch of things I'd like to show, but I don't know that I'm going to show them today. I think I'm going to save these for Saturday. So what I am going to show you, I usually offer to 5 hand-picked traders from around the world who come to Vegas and spend 5 days with me. Now, I'm not going to give you a full OmniCamp. That won't happen here, but I promise you this. What I will show you not only will just be amazing to watch, it'll be amazing to use moving forward. Now, the big question, why would you want to even learn from me? What could you benefit from learning from Oscar? Well, I'm going to tell you right now, and it might sound a little grandiose, I am the best of the best of the best when it comes to reading charts. I have proven it for years and years. No one can come close to reading graphs like I can read them. And I'm very good at teaching others how to read those graphs. Now, let me ask you a question. Let me ask you two questions. First, how many trades do you think you've done in your life where you get a chance to actually test out a technique and see if it works? Now, a trade, if you bought one and sold one, that's one trade. If you bought 10 and sold 10, that's also one trade. How many trades do you think you've done in your life to test the system? Whatever your number is, imagine the system testing I got to do. There were days in the trading pit from 8:20 when the market opened till 2:15, 2:20 when it closed. I might have traded 5,000 times that day. And I get to test techniques. And you know what happens? You find out right away which ones don't work. I'll tell you that right now. Because when you trade 5,000, 6,000 times, 20,000 times in a week, you learn right away which ones to take and which ones not to. Now, not a lot of people on this planet have that kind of experience. I grew up basically in the trading pits on Wall Street, right through the whole gamut. I've got that experience. I'm going to show you some of it. Second question, and this is an interesting thing. You musicians out there, if there are any musicians out there, do you know how many music notes or music bars there are in the world? How many? So many songs, so many variations. Do you know how many music bars there are? 12. There are 12 music bars in the world, which means every song you've ever heard, from Beethoven to some techno craziness in a club, they're all created with the same 12 bars. That means if you woke up Mozart right now, woke him up, brought him to a techno club and said, "Sir, you were there when the original music notes were written. Well, listen to this stuff in this techno club. What do you think that is?" Mozart would listen to 30 seconds and go, "I got it. They took the B and did a B flat and an F sharp and a C." He'll know exactly what they did. Do you know why? Because he was there when the music notes were written. You cannot fool him today. He was there when the fundamentals took place. You know what this is right here? Have you ever seen one of these? This is called a point and figure chart. I stood on the trading floors in New York City holding these point and figure charts before there were computers, before there were any other forms of charts in the world. These are the music notes. This is when all the rules were written. And I was there to help perfect the rules over the years and help write the rules of technical analysis. When I started doing analysis on the trading floors, there were two analysts, me learning and a gentleman, Mark Kaplan. It was considered voodoo. It was considered ridiculous. And if you weren't a fundamentalist, you didn't know anything. I kid you not, over the years, via YouTube videos, via my websites, all of the announcements I've made, I have helped remold and reshape this industry and make them recognize all the information is in the charts. If you know how to read a chart, you got this down. Algorithms are nothing more than a variation of the 12 music notes when they were first written. And I was there when they were written. I kid you not. Ask anyone who knows me. Then we switched out to bar charts, but there weren't computers at home yet either. And I was able to start charting with pencil and paper on bar charts. This is the 80s and 90s, kids. I have been doing this my entire life. Now, what does that mean? Does that mean I can actually do anything with this information? Well, I'm going to take you on a little journey, more convincing of why you need to be there this Saturday, 3 hours with me exclusively. I want you to watch something if you've never seen this before. What would you have done if you knew the stock market high was going to come in 2007, what price it would come in at, and when? What would you do with that information? Let me ask you another question. If beforehand you knew the high of 2007 was going to come in and how low the crash would take us, imagine if you had that information prior to the crash. What do you think you could have done with that information? I'll tell you what I did with it. It changed my life. I ended up living out here in Vegas in a much better position than I was ever in before. Let me show you a little something. I do YouTube videos just about every night. In these YouTube videos, my job is to tell you what to do the next day. It's very important for me to make sure that I tell my Omniacs what they should be doing the very next day. So I also give a long-term projection in these videos. On my whiteboard, every year I give the Omni long-term projection for the year, starting January, what we'll do by December. I have put out that projection for 15 years in a row. I have nailed it for 14 of them. The only time Omni was wrong was 2012 when the market opened up, rallied, dropped, and came back to the exact same spot that year. So January was here, December was here, and there was no big move. It was the only year we didn't nail the year-end target because there wasn't one. 14 years running, this is what Omni can do. Watch this information. And of course, we have to wait until we get past the commercials. There we go. Listen to this.
We're at the top. We put another top in a little bit lower a few days later, and we put another top in that's sort of rounded. If we do not take those tops out tomorrow or the next couple of days, then they're going to push them right back down again.
Here's where it gets important.
Around the top, gets violated towards the upside, and NASDAQ makes new highs. Away we go. And if you guys recall, for months on end, I've been saying the 1577 level has been my target since this year began.
The high in 2007 before the crash was 1576. The entire year I called for 1577 to be the target. As soon as we hit that target, I make a new projection for the downside. Watch this. This is the information that I derive from using the same Omni that I teach people. Watch what comes next. So the high was 76. It shows you right there. Go back and look at a chart. The Omni knew that was going to happen in 2007. Now listen to this.
So if you both want to make a case, don't start today because I expect this to be way in the next year. I think we can see as low as 668 in the S&P.
This is me telling the world in 2008, we're in 2007 right now. Well, excuse me, we're in 2008. This is me telling the world next year in 2009, we're going to hit 666. That's going to be the low. You know what the low was of the crash? 668. Who can do that? I'm not responsible for it. The Omni is. I'm just a messenger boy. But wow, is that powerful information, right? So, all right, Oscar, you were okay in 2008 and 9, right? Maybe that was a fluke. You called the top, you called the bottom. Was that a fluke? Well, let's move a little forward now. Oscar was good in 2008 9. Is he any good in 2015? Here's another clip. I want you to watch this. Crude oil's trading at $103 a barrel. There's talk that crude's going to $140 a barrel. Everybody in the world is bullish, and I get invited on TV to talk about crude oil, and here's what happens.
Huge surprise to some. One guest predicted it right here on Money 2 years ago.
For perspective, in 1998, crude was only $9.91 a barrel. In 2001, crude was $14.59 a barrel. Then you move us out to 2009, crude was only $35 a barrel just in 2009. So that tells us at the rate we're moving, we should have crude oil back down under $40 a barrel by mid-2015.
I don't know about that. You had me until you said 40.
Now, let me tell you what actually happens here. I get invited to come on television to talk about crude oil. Oscar, what do you think about crude? Well, I think crude's going down. No invitation. The next day, I get another email. Oscar, you want to be on TV? And I write back, sure. What's the topic? And they write back, the topic is crude oil. And I write back, great. I think it's going down. And they write again, no interview. It's 2 days in a row. That week on a Friday, maybe it was a Friday, Thursday, Friday, I get another email. Oscar, would you like to be on TV? And I write back, sure. What's the topic? And they email back, the topic is crude. What do you think? And I write back, I don't know. What do you think? Enter. And they write back, we think it's going up. And I say, what do you know? So do I. Enter. Lying through my teeth. I get the interview just like that. Now I'm going to come on TV. There's no shot I'm going to talk about the upside in crude, but I got on TV, right? So when I said to her, crude's going to be back under $45 a barrel, she immediately stopped the set. She stood up and she yelled, he's a nut. Get him off my set. The guy's a nut. And I said to her, Melissa, I gave you a projection, not a prediction. Predictions are for crazy people. I gave you an Omni projection. Crude will trade $45, exactly what I told you it will trade. And she throws me off the set. Interview done. 2 years later, when crude hits my spot, I get invited back on TV. Watch this. Here's the second interview coming up.
Look who's right now. Joining me now, Oscar Carboni, president of Omni Trading Academy. So, Oscar, I gotta say, I love you. You're like tweeting at me the last couple of days saying, I was on your show and I predicted this was gonna happen. So I said, that can't possibly be true. We went back and we looked at the tape, and of course we found it. You saw it. You said it was going under 40 by mid-2015. We're pretty darn close. When do you think we go under 40 here?
I think it will continue to move lower. I think it'll actually see the price of 30, 35, and then 30 might be a floor. And it appears that they will not stop pushing the price of crude down right now. As you know, I made that projection for you. I use technical analysis always when I start a projection. Everything starts there. In fact, I spend about 20 hours a day in a live chat room on a camera and microphone doing analysis every day. So I've got so many logged hours, more than anyone, and here's what I did. I found the technical picture, and then I always go out and look for a fundamental reason why to prove out my technical picture.
Well, so a couple of years ago, what was your fundamental reason?
Well, what I did was I seen the price was going to come down on the chart, so I took the price of crude over 15 years, the price of the stock market, and the price of the dollar, crude relative to those two. And then I looked at how much crude production was being made, shale. I added it all together and extrapolated $40, which matched my technical projection. And then I came on the show to tell you about it.
So in 2009, 10, 2008, 9, I'm able to show you that I can do this really, really well. 2015, I'm still able to show you I can do this well. Want to see what happens next? The COVID lows. Ask anybody who's around me. Literally using technical analysis, we called the bottom in COVID when it hit. I spoke to my programmer. You could ask him anytime you want. Tony, I won't mention his last name. On that same week, I called him up and instructed him to put himself in 15, 20 different stocks. And I think he's had the best year he's ever had in his life. This is the power of technical analysis. I promise you, I can show you how to make fantastic calls and how to do something like this, which is really important. Even though that they might seem traditional or even old-fashioned. You see these formations I'm showing you right behind me right now? Well, these formations are extremely important, and I am going to take you on a journey on Saturday. Not only these, many other things, but I'm going to show you how to spot them, how to use them, how to make money going forward, and how to put your stops in just in case you've called it incorrectly. And that's just the tip of the iceberg. I've got a lot I want to share with you on Saturday. So to reiterate, I will unseal the vaults, and I will teach some of my Oscarisms for 3 straight hours on Saturday. I want you to sign up for this. I am not going to do much in today's presentation. You've seen many of my videos. You know my capabilities. Join me on Saturday, and I'll be more than happy to set you straight. Now, if time runs further on Saturday, I'm going to stick around. Don't you worry about it. Jeff, I'm going to now offer my time back to you, and I'm going to step off and go out and play with the markets and have some fun, and I will see all of you on Saturday. I thank you so much for tuning in, and make sure that you join me. If you want to hang out with me in between Saturday and today, come to livewithoscar.com, go to Omni Chat, and join me in my free trading room. All you have to do is click right here, and like that, you're in a live trading room with me. Thank you, traders. Thank you, Jeff. I will see you all on Saturday.
Oscar, do you have time for one quick question?
Sure, of course.
Earlier, you had mentioned the website you were using back in the 90s, and Sean asked what that was again, if you could look it up.
This is called the Wayback Machine. It is the coolest thing on the internet. You can
I love the Wayback Machine.
It's like the best spy device on the planet when it comes to the internet. If you've taken it to the website, I can pull it up and show it to somebody. All
right, Oscar. Thank you for coming in.
Very good. I will see everybody on Saturday. Thank you so much for having me today.
Sounds good. Thank you. Let's go ahead and turn on the heat lamps here. Thanks, Oscar. It's great having you. Let me go ahead and kind of get everything resituated here. Yes, I am. Okay, there we go. And then I need to also do this. And I need to do this. And I need to move this over. Okay. There you go, Silver. Great. I'm so excited about this class. I'm going to be here. I'm going to be there doing it. One of the questions we had was from Pebby. Pebby wanted to know if the class is going to be on YouTube. It's not going to be on YouTube. It'll be in GoToWebinar. It's going to be an invitation-only class for those people that register for it. We are going to record it. We're going to make it available, and you can watch it anytime you want to in the members section of the Metastock.com website after the event. So it'll take us usually a couple of days to kind of get it up to the download section of the website, maybe a day or two, but we'll be broadcasting it live on Saturday. I'll be there taking notes. I love watching Oscar. That's the funny thing is I've been to like so many classes with Oscar, the things that he does in Vegas, and I always learn something new. So I'll be there. I'll introduce him. I'll read a legal disclaimer, get out of the way again, and just watch what he's doing. So this is going to be 10 a.m. to 1 p.m. So basically, we're going to have a break in the middle of about 30 minutes, just so that everybody can kind of relax, kind of take a deep breath and a breather. He's going to be talking about all the flags that he showed, the technical formations on the chart. He's such an enjoyable and such a good speaker. I'd encourage you to come to this. It's, again, Saturday, 10 a.m. to 1 p.m. The normal price on this is going to be $499. Here at the conference, it's going to be $399. You can sign up by giving us a phone call at 800-882-3040. You can come to metastock.com/saleschat. So let's see. PK Rock says, way to go, Oscar. So there you go. And this is Eastern time. So that is Eastern time. Very, very good question. Something that I should have actually mentioned. To register, Patty, thank you for being interested. I look forward to seeing you there at the event, 800-882-3040. You can do it right now if you want. Metastock.com/saleschat. You can also do it online and watch me talk about something for 30 minutes. I guess I'll do a little bit of an impromptu session today. I'll show you, but don't worry, I'm good. I can show you. I can spend some time talking about some things I like in Mesto. The Silver, the answer was, or the website that he was using was the Wayback Machine. So if you go to I think it's thewaybackmachine.com, you can look at, it's kind of interesting. You can go in and say, this is the URL I want to look at, and they'll have snapshots that they've taken at different times. It's a really, really cool, it's a really cool website if you want to see like how eBay looked when they just started, or, you know, sometimes I'll go in and see what Metastock looked like when we started, and it's certainly changed a lot. So in any case, the Wayback Machine is what that's called. I think it is the waybackmachine.com, but I'm not 100% sure on that. So again, 10 a.m. Eastern. Oh, it does say it on here. Cool. 10 a.m. Eastern to 1 p.m. Eastern. Normally that's $499. It's worth 3 times that. We probably should have charged more for it, but $399 at the conference. You're going to love it. Come and enjoy it with me. 800-882-3040 or metastock.com/saleschat. And it'll be well worth it. All right. Okay. All right. Manny, thank you for your interest in registering. I look forward to seeing you there as well. Okay. Let's go ahead and we'll thank Stocks and Commodities, our sponsor today. I also want to say thank you to the CMT Association for their sponsorship of the event. They've sponsored the event. They just started this year, a great organization to work with, very professional. The CMT is one of the first things you always find out about when you come into trading. And we're just really, really proud of their sponsorship and their association with this. You can find out more about the CMT Association at the cmtassociation.org. So, of course, we're Metastock, and we do have a little bit of extra time here. So what I'm going to do is I'm going to pull over my Metastock. I got to talk about one of the things I love about Metastock. This is what I'm going to show. Actually, I'm going to just go ahead and kind of clean up this chart real quick. View, expert advisor. Okay, let's go ahead and kind of get a little bit focused. I'm just going to basically, what I want to look at is, or what I want to show you is one of my favorite tools that's built into the Metastock platform. And here we go. Detach this, go ahead and close it. We're going to go ahead and just go back to a clear chart. One of the things a lot of people talk about in the market is like looking at trend lines and breakouts and those type of things in Metastock. And one of the things that I think is what I would call one of the hidden gems in Metastock is our dynamic trading tools. And with the dynamic trading tools, it allows the program to go in and actually automatically look at and identify the support resistance areas on a chart. So I call this the hidden gems of Metastock. If I come in here, this is Metastock. I'm looking at Bitcoin this morning, which is having a bit of a pullback. If I wanted to kind of see where we might be looking at trend lines and those types of tools, we do have some pretty decent, really good tools that are actually available in Metastock, and they're part of the install package. So let me go ahead and go here. And what I'm going to do is just kind of show you where you find these on a list. They all start with DT, which means dynamic trend. So if I come down here a little bit, we're going to come down to the DT list. And you see DT resistance, long-term, short-term, longer-term support, shorter-term support. And there's automatic and manual modes to all of these indicators. There's also trend lines up and down. And this is actually one of the things I like to talk to people a lot about Metastock, because where do you put your lines? And well, actually, if you're interested in really knowing where to put your lines, you should come to the class on Saturday, because Oscar's really good at it. But one of the things that I would always show people is how those indicators work and how you would apply them to a chart. And I actually, one of the things that we included, I think it was with 17, I actually built a template and I asked them to include it to Metastock, because what I would do in the meantime is I would send them basically like, I would show all these dynamic tools, and then I'd have customers come in, and if they had questions about it, I'd just email them this template. But now it's just built into Metastock. So a template in Metastock is just a collection of the colors, the styles, and any indicators that exist on a chart. And if I wanted to show you all of those dynamic trading tool indicators, what I can do is I can just right-click here. I can go to Apply Template. And what I actually named the template was Dynamic Trading Tools. So these are all different templates you can apply to a chart. I'm just going to find the one that I want to apply to a chart. So it's Dynamic Trading Tools right here. I'm going to go ahead and click on Apply. And automatically it's going to, I'll just show you what this looks like. I kind of like the way that it looks. Well, I hope I like it because I made it. But here it's just going to identify all of those spots on here. I am going to thicken up some of the lines because they don't come through very well on YouTube. So let me go ahead and do this. And with Metastock, anytime I want to highlight, anytime I want to thicken something up, it's so easy. I can just double click on it and I can kind of make the weight a little bit bigger. So I'll go ahead and apply this right here. And now you should be able to see that smaller line a lot better. I'm going to make this one a little bit bigger too, just so you can see the difference. There's a fairly big difference between that, but it doesn't come through as visually on the chart. There's also one here that you might not be able to see. I'm going to make it a little bit bigger. And again, I just double click on it to make it a little bit bigger. And since I'm going to do that, I'm going to make this one as fat as possible as well. So now you should definitely be able to see those lines. Now what this is doing is basically, this is identifying short-term resistance on a chart. This kind of smaller dotted line is shorter term resistance, and you see it moves around a lot more. Right here, this is where the last shortest term resistance was, which is now a support level. Right here, you've got kind of this big red line that's going to show you where like the long-term support is for this, and we are just looking at Bitcoin. Right here, you've got a bit of a shorter term support. So all these are automatically kind of labeled on the chart. The other thing that you're going to notice right here is we've got an automatically drawn trend line, and we just penetrated this up trend line maybe about 5 or 6 days ago. Right now, actually, this is kind of interesting. Right now, we're failing the support level. It's now becoming a resistance level, and that may hold or may not, but we will see. It's right now, it's really right on that level. So these are all automatically drawn. You've got this upward trend line. If it spots any downward trend lines, those are going to be automatically drawn as well. And basically just going to give you an idea of kind of where the support and resistance actually exists on this chart. Okay, which is pretty cool. We do have with this as well, we do have a expert advisor. So if I come in here and I wanted to show this to you, let me go ahead and it's under DT for dynamic trading tools. And let's just say we just wanted to look at the longer term support and resistance. I'm going to attach that to the chart. Go ahead and click on close. And this is mostly commentary based. So I'll reopen that commentary. And right now what it's going to say, based on this, is 4x Bitcoin appears to be locked in a trading range, bounded by upside resistance and downside support. The most recent confirmed upside resistance level for Bitcoin is around 60,464. Expect prices to have some difficulty rising above this level. A break above this level on heavy volume would be a bullish sign. So it's given us kind of a breakdown of exactly where that is, what we're looking for. If it breaks with heavy volume, well, that would be a bullish sign. So this is automatically generated for you. It's one of the things that I kind of like to show off because I like the way that it looks. But it's like Jeff Tompkins was saying before, one of the things I absolutely love about Metastock is the ability to use scanning. And so since all of these lines are automatically identified and drawn, if I wanted to find stocks that were maybe breaking up above this support level like Bitcoin did, or breaking down through a support level or a trend line or anything like that, I can very, very easily do that. And I think for me, if I had to say, if I had to live with one Metastock tool only for my trading, it would definitely be scanning, because I like to trade stocks, right? And with stocks, if I'm looking at stocks that are trade here in the US, there's over 7,000 options. If I'm looking at optionable stocks, there's 4,500 options, right? Typically for me, I've narrowed it down. I'm a very, very conservative trader. And typically when I'm running scanning, I'm running scanning against Dow, S&P. Dow 30, S&P 500, typically those are the universe of things that I'm looking at. If I want to run a scan, though, if I wanted to find this particular level breaks in Metastock, it's built in for you. I love all of the features that are built into Metastock. This is just one of the hundreds of scans that we've got in here. But I'm going to go ahead and click on the scanner. And what I'm going to do is we'll just kind of come in here. And under the explorations, what I'm going to do is I'm going to go to DT. So let's go ahead and go down to DT. I'm going to check this time. We're doing cool. We're gonna I might even be able to have time to show you another tool that I love in Metastock. But what we're going to do here is we'll just find that DT. Okay, and what we've got is support and resistance long term. So these are looking at for the thicker lines on this chart. These thicker lines. There's also a short term. So if you want to find a short term break, like it broke short term right here back in July. You could run that type of a scan. You can also find trend line breakouts to the longer term or short-term trend line breakouts. Okay, so just to kind of give you an idea, if I just want to find really big long-term breaks through support or resistance, I'm going to go ahead and click on this one. I could run all of them. I might even have time to run all of them, but let's go ahead and just run this one because there's other things I can show you as well. And what I'm going to do here is I'm going to select what I want to scan. And I love the amount of data that's available with Metastock. It's been very, very beneficial for us with the partnership that we have with Refinitiv, because literally I could come in here and there's a list of 296,231 instruments I could scan against. And typically you'll notice that it's remembered the scan I normally do. That's the 535 Dow and S&P 500 stocks. So I don't have to go select anything new. But if you're watching and you're in Australia today, good day, mate. You right here, you could just select all of the Australian instruments there, and hopefully, that. And if you're interested in India, another big region, we have the National Security Exchange. If you're in Europe and you want to do London, we offer all of the major markets. We have with Refinitiv, we have basically over 200 or 300 exchanges that are available. And they say that we have about 95% of the total global market cap. It's just one of the best data providers on the planet. So you can really select anything that you want. In the case of this exploration, what I'm going to do is I'm going to come in here and I'm going to do the index constituents. So I'm just going to select the Dow Jones Industrial Average and the S&P 500. Again, I run the same scan every day. It's already selected for me. I actually do want to make sure that I'm only running one scan though. So let me go back up here. I only do have the one scan selected. So I'm going to scan this on a daily basis. You can see that selection right here. And I'm going to load about 1,250 records into that. So let's go ahead and do that. over here, it opened up on this other screen for me. It's just going to kind of go through. It's going to chunk through those. And I do want to show you how the scan looks too when it comes back, because it's a little bit different than kind of some of the other scans, but it's actually pretty cool in kind of the way that it shows things. So let's say if Silver says, what time is this class? Eastern? Thank you for the question. It'll allow me to run this scan. It's 10 a.m. Eastern for Oscar's class, 10 a.m. Eastern to 1 p.m. Normally $4.99, $3.99 here at the event, and I look forward to seeing you there, Silver. Come on, it's going to be a lot of fun. I'll be doing it from my house, but I'm not going to be that involved. I'm just going to have my notebook. I'm going to be taking notes, and I'll introduce Oscar. You kick it off. Cool. All right, let's see how that scan is coming along, and it is done. You'll notice here we did all 505 S&P 500 and Dow 30 stocks. It rejected around 28.3 of them. So this one's a little bit different because it does make a huge list. Right here, you can see where it says break up and there's a number. This, in the case of A.O. Smith, this is 13. It took me a minute to figure out what this was the first time I was looking at it. What does that 13 mean? That means 13 bars ago, it broke up above resistance. Okay, broke down would be a breakdown against support. So I can actually sort this based on the column number. And I'm certainly not interested in synopsis here because it broke up 705 bars ago. That was like 3 years ago. I'm not, that's like ancient history. But what I would want to do is I want to go down here. And if I wanted to see things that had broken through this within the last 5-10 days or so, okay, we can easily do that. Okay, so right now, Activision Blizzard, it looks like it broke today on the current bar. Altria Group broke today on the current bar. So all of these should break pretty recently. Under Armour was 2 days ago. Tyson Foods was 2 days ago. Let's just look at a few of these. So if I wanted to kind of go in, I could save this list out as maybe stocks that I wanted to. I'm just going to open the chart though. And then what I'm going to do very, very quickly is I'm going to apply that template. So right here, this one that we're looking at is Under Armour LLC. What I'm going to very quickly do is apply that same template we were looking at with Bitcoin on. I'm going to go ahead and shut down this commentary real quick. View, expert commentary, apply template. And again, it's called Dynamic Trading Tools. We'll go ahead and apply that. No, we don't really care. And there you see it. Here we have where it's detecting that kind of longer term support resistance right here between these two peaks. I'd actually, and this is fine, I'd actually say it's a little bit higher. Probably, I like them to be right at the highs. But you can see this kind of longer term high that was set right here. It's currently trading above that, and now this is acting more of a support level than a resistance level. Is this something that you'd want to trade? Well, it's not a recommendation to buy it, but based on kind of what I'm looking for, I now have a short list of the stocks. 2 days ago, this broke above that longer term level. It looks like it's going to be staying above it, maybe. We could go ahead and kind of consider this. If this is kind of, if we want to trade breakouts, this is an incredibly useful tool for us to trade breakouts. So John says, I went to his website to his enroll. What you want to do, so if you want to go to live with Oscar, John, I'm just going to type this out. You can go, and he does, you can just join his website for free. And there's, I think that gives you some privileges and some access to some of the recorded videos. If you want to go to the class, the premium class that we're doing on Friday, you want to give us a call. The number for that is 800-882-3040, or you can go to metastock.com/saleschat. Okay, let me go ahead and send those over to you as well. Gary asked a question. Gary, thanks for your question out of YouTube. Will it be recorded? So we are going to record the whole session, and that will be available early next week in the member section of the metastock.com website. So as long as you kind of, if you enroll in the event, if you come on Saturday, you'll be able to watch a recording, and we'll leave it up there on that member section of the Metastock website for the end of time. I guess. Thank you, Gary, for the question. Manny, where to register? Again, what you're going to want to do, give us a call, 800-882-3040, or chat online, metastock.com/sales-chat. They'll be more than happy to get you there. And I'm so excited about this weekend. I know we're going to spend all week with all of these great classes and stuff like that, but this is going to be like one of the things that you want to know is technical analysis, is where your trend lines and your technical and net formations are. And I couldn't think of a better person. In fact, when we approached Oscar with the idea, it's like, hey, you do such a good job. When we've done a few premium sessions with Oscar in the past, he always does such a good job. The feedback that he gets from people like Dan and Manny, and the people just love Oscar. He's like Greg says, is a force of nature. So come join us. I'm gonna have some popcorn at my house. You can bring some popcorn too if you want. 800-882-3040. Bring a notepad and some coffee and a pen. You'll learn a lot. 800-882-3040 and or metastock.com/sales-chat. So thank you for those questions. Those were great. Looks like we do have a few more minutes. So I'm going to show you one other hidden gem of Metastock, I guess. This is one of the ones I like to show. We've got Perry Kaufman coming right up. That'll be really interesting. Love Perry. Let me go ahead and show you another just freebie. Another thing that, there's so many things in Metastock that it's easy to overlook. But one of the things that I like to show when I'm out at a trade show is our candlesticks expert. So in Metastock, there's an expert advisor. This is actually one of them. I showed this to, what did I just buy it? Draw a blank. Eric Wilkinson. Got it. Yesterday, or last week, a couple of weeks ago, when we were kind of going through some things in Metastock, and he actually showed it yesterday. I think it's awesome. And I actually was thrilled that he showed it. But I'm going to attach the experts, what they call the candlestick expert in Metastock. There are about 40 or 50 different experts that are included. And what I'm going to do is I'm just going to delete some of these lines too. What this expert's going to do, and again, this is just included in the program for free or as part of the program. It's complimentary as part. But what it's going to do is, you'll notice right here it had a doji star. Here was a rising window. It's going to identify, if I kind of scroll out, you'll notice that it identifies a lot of different candle patterns. Okay, there's about 30, I believe, in here. I'm going to actually just change it to candlesticks because that feels right. So I'll just double click on the chart, change it to the candlesticks. You'll see right here we had a rising window, and there are a couple of doji stars. And these are classic Japanese patterns. Here we had a engulfing bear, 2 engulfing bears in a row. If I, as a user of Metastock, didn't know what this engulfing bear meant, I could go into the commentary. I'll go ahead and click on View, Expert Commentary. And I can come to this engulfing bear bar. What it's going to tell me is an engulfing bear line occurred. This is where a black candle's real body completely contains the previous white candle's real body. The engulfing bearish pattern is bearish during an uptrend. This signifies that momentum may be shifting from the bulls to the bears. If the engulfing bearish patterns occurs during a downtrend, which appears to be the case, it may be the last engulfing bottom, which it wasn't. It actually continued to go down. But there it's actually explaining to you what the pattern is. It's so helpful. Like, there's about 40 or 50 of these experts. I could attach one that was MACD, and it would tell you what MACD is. It'll give you 3 different ways to analyze it. Of course, if you like the engulfing both patterns or the candlestick patterns, there are scans that are built in that you can scan. I just love this thing. It's such a useful tool. And that's one of the things I love about Metastock just in general. It's not a tool that you're going to outgrow. This is a software program that's been rated #1 by the readers of stocks and commodities for 28 years in a row. There's so many different programs that are like, hey, we're just getting started. We're not. We've been doing this for a long time. We're not including a couple of free indicators. There's 50 or 60 different systems that are included as part of this. As you grow, Metastock will grow with you, and it's not something that you're going to quickly outgrow. It's absolutely great thing. So come to this class. You can give us a call at 800-882-3040. We can help you get enrolled. I look forward to seeing you on Saturday. You can also go to metastock.com/saleschat. So there you go. let's go ahead and kind of transition a little bit. I want to say thank you to, we have a little bit of time, so I'll thank Stocks and Commodities and CMT. Stocks and Commodities, though, I love Stocks and Commodities magazine. I've been getting it consistently 25 years in a row now, and they do a really, really good job. One of the things I like about Stocks and Commodities and subscribing to Stocks and Commodities is I feel like with a lot of things in life, you're either getting better at something or you're getting worse. It's not really a neutral. And with Stocks and Commodities, I can come in here and, I can find out about maybe a better RSI in the case of this article, or the rate of changes with the bands. It's a great magazine. They've been doing it for a while. They've done, as a member, you have access to a 17,000 article trading archive, which you probably won't be able to read 17,000 articles, but they're available. So if you want to learn topics or tricks or tips, they're all there for you. They have 1.3 million subscribers, and they've been actively publishing since 1982. So again, also though, if you do one of our buy one, get 2 free months subscriptions to Metastock, we'll give you a 5-month, they will give you a 5-month subscription to Metastock. And if you do a $300 more purchase, they're going to give you 2 years of Stocks and Commodities magazine for free. So I want to say thank you again for them for sponsoring today's event. They do such a great job. We really appreciate it. In addition to that, we'll go ahead and say thank you to CMT Association for sponsoring the event as well. CMT is a great organization. They've been always accrediting, I guess is maybe the best word. I'm trying to find the best adjective to say this with, and maybe I'll do it. Maybe we just need to kind of talk about it for 5 or 6 more times. But they've been accrediting large institutional traders, for traders, hedge funds, et cetera, for a number of years. Very well reputed organization, cmtassociation.org. You can call them at 646-652-3300. Okay. And of course, we're Metastock. We just showed you some of the things, some hidden gems, if you would, in Metastock, a little bit of a bonus class. How did I do? Did you like that? That's what I talk about when I need to fill some time. So in any case, Metastock's been winning the Reader's Choice Award for Stocks and Commodities. We've won it for 28 years in a row. Scanning, I love. I always have that as a top bullet. I mean, for me, I run a very busy schedule, and for me to be able to scan through the S&P 500 and decide what I want to trade in the last 10 minutes of the market is actually really, really helpful for me. I absolutely love it. Of course, you can also test trading ideas because Tompkins showed that, Jeff Tompkins showed that, Kelly showed it yesterday. It's got one of the best system testers, I think. I'm biased, as I'll admit, but I think has one of the best system testers that I've seen. It has a patented forecaster in there that Scott's going to talk about a little bit later, and it all starts at about $60 a month. So there's a couple of different ways you can get the trial for that. You can go to metastock.com/conf promo. You can give us a call. We do have a full sales team today at 800-882-3040. They'll be happy to send you information, answer questions, a great group of guys, and metastock.com/sales chat if you want to chat online with them. So there we go. I feel like, one sec. Grabbing my water. All right, cool. Steve says, I can see the Metastock scanning, the advantage of Metastock scanning ability. What are the actual trader ergonomics? Where do you actually place the orders? If you look for sell signals and get a big list, does Metastock now, or can I tell it to open positions? Okay, so we're not a broker. Steve, that's a really good question. I appreciate it. We've always really focused on doing what you're good at. And we've so a lot of our customers use like TD Ameritrade or Schwab. Actually, it's pretty interesting. We actually poll our customers on about a yearly basis. And it's like 12% use Schwab, 12% use TD Ameritrade, 12% use. You can use whatever you want to as a broker. We're not going to fill that order for you. That's not what we do. Our biggest goal, and I think what we really do well with, the reason we've been rated number 1 28 years in a row, is helping you find the right trade at the right trade time and the right method to use. So that's, I think, what we can do. Gene says, metastock.com. Let me type that out for you. John asked another question, where can I see a list of all the speakers? Since we are at time, I'll grab that. It's metastock.com/traders-conference, I believe. I'll type that in the chat right as soon as we get Perry Kaufman going. So Perry is our next speaker. Perry is almost another guy that needs no introduction. Perry Kaufman has such a great reputation in the market. Very, very, very good at kind of analyzing, putting together trading methodologies and trading systems. Somebody that we as Metastock are proud to be associated with. So Perry, I see that you've logged in. What I don't see is that your audio is connected. So if you are having a bit of an issue with your audio being connected, what I would recommend is just unplug and plug back in your audio, and that'll work. We might need to play a video real quick so I can call Perry and just kind of walk him through getting his audio connected, because it does look like his audio is not connected. So I should have noticed that earlier because I've just been filling time. But while we get ready for Perry, excuse this little interruption.
Hi there, Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you.
Okay,
then just double-click on security
my
if you want to
audio.
see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love.
All right, welcome back. Okay, Perry, we can hear you. Welcome to the Metastock conference.
Can you hear me?
We can hear you. Yes, you sound good.
Okay.
Way better than a second ago. Let me go ahead and change the presentation to you.
Okay.
I hope you're able to hear all those glowing words I just said about you.
Oh my God, I missed them.
Oh, well, I said this is a man that needs hardly an introduction, and I'm going to introduce him anyway. And then I talked a lot about it. So
Okay, I do need to share my screen.
Okay, it should have just popped up a note saying, "Can I share? Do you want to share your screen?" So, do you see that message still on the chart or on the page? There you go. So now what I can see is a desktop.
No, okay. How about the other one?
Do you know how to change it, or do you need some help with that?
Let's try this one. What do you see now?
I see one handsome guy right there, and then underneath me is you. I'm just kidding.
Oh. Okay, I don't.
We can see your screen. It looks good.
Okay, that's good. Let me just. Okay, I don't see. By the way. I don't see you. Can you still hear me?
Yeah. Yeah, I turned off my video camera just because I'm almost ready to get out of the way. So we can see your screen and we can also hear you. So,
okay. And one last question. How much time do I have for this?
I'd say give it about 50 minutes.
Okay, then I better move through it pretty quickly.
Okay, sounds good. And we are starting a little bit late, so if you need a little bit more extra time, that's okay too.
Okay, good. All right, then.
Thanks.
I'll start now. Hi, everybody.
It's all yours.
Oh, am I okay? So, hi, everybody. I'm Perry Kaufman, and thank you for joining me, even if we do seem to get a little discombobble at the beginning here. I'm going to talk about trend trading. I'm going to try not to make it boring. I think there are a lot of things you probably don't think about when you do trend trading. And I trade every day. And most of my investment is in long-term trend following. So what I'm going to share with you are things that I consider very important, probably a few things that you haven't thought about. And if you have thought about them, it doesn't hurt to be reminded. So, whoops, I think I just went backwards. First, a short disclaimer. I'll just summarize it for you. You can't believe anything that anyone says. It's what the government policy is. I will say that it is really an important disclaimer because a lot of things you see, you need to test yourself. And that's really the reason why you need Metastock. You need to be able to program these strategies, find the markets that work, test them yourself. Otherwise, you really have no confidence that the program works. And that includes my stuff too. So remember, as you go through this, that you need to verify everything. Now, I mentioned trend trading may seem a little boring to you because we've discussed it for so long, but it is really the most important indicator you could possibly have. If you don't trade it directly, then you're going to want to use it as a filter for shorter term trading, so you're always on the right side of the market. So we're going to discuss the best trend entry rules, the best time to enter a trade, and how to choose the trend speed, and also choosing the right markets. That's quite a lot of stuff to get correct. And we'll move this along. So you know I'm a completely algorithmic trader. I don't make spontaneous decisions. I program everything, I test them, I then trade them as is, just the way the computer tells me. And I've been very happy with it for a long time. So I suggest that algorithmic trading is a very good way to go. And again, Metastock is a very good vehicle for doing it. Just a little reminder, because things can get complicated, that it is best to keep things as simple as possible. When you have more rules, the system is less likely to work. As you know, it will be overfit. When I test a system, I test one rule at a time. There are people that like to test something called an integrated system, which means you test all of the combinations of rules simultaneously, come up with the best combination. I find that a real problem. And it's a problem because you don't then understand which rule is working and which rule is not working. And when something doesn't go right, when your performance isn't as good as you like, you really don't know which part of your system is not working. If you test one rule at a time, you have a much better understanding of the dynamics of your own system. And if something does go wrong, you can fix it. Also, you have to remember that, well, we'll talk about optimizing and realistic results, but optimizing generally gives you unrealistic results. But there's a way to reduce that to something that's much more realistic. And one of my friends, John Ehlers, who you may not, who you probably should know, he's a specialist in cycles, has this phrase: if you torture the data enough, it will tell you anything. And that's really true. So try to avoid beating it to death. Use as much data as possible, so it includes all sorts of markets, up and down, price shocks, and the results will be more realistic. So let's go to trend following. And as I see here, it is the heart of most investment funds. I imagine 60% of all money is traded on a long-term trend. And for good reason, because it has worked over the longest period of time. I say 40 years here, but it could be longer. And let me just mention that trend following does not work in the short term. I indicate here in the middle point that it should be really greater, the trend period should be greater than 30 days, preferably greater than 40 days. Below 30 days, you get very sharp, erratic movements caused by supply and demand, news articles, some economic releases that the market forgets about in a few days. When you go to a longer period, you're really tracking the fundamentals. And in most cases, the fundamentals really reflect interest rate policy. And interest rate policy is slow to develop. You know, the Fed raises rates a quarter of a point. It waits and sees what happens. Then it raises it another quarter of a point. And that develops trends. Those interest rate trends then reflect the foreign exchange market, because money flows to the countries with the highest interest rates net of inflation and political instability. So lastly, it flows to the stock market. So the stock market is not only the last to reflect it, and it reflects it only in the longest term trends, but it's also noisier. And we'll discuss that in a bit. But trend following works across nearly all markets. And so we'll call that robust. And as I mentioned, if you don't trade it directly, you can use it to improve other strategies. Now, today we're only going to look at two trend methods, but there are other two that you probably know: linear regression, slope, and exponential smoothing. Ultimately, you'll see that the performance of them are much the same. I picked these two because they're the most interesting and they have a very different performance profile. So you know, of course, the moving average just averages the past 10 days. And in my way of trading, because it's long term, I buy when the trend line turns up and sell when the trend line turns down. Now we'll talk about the alternative, which is to buy when the price crosses the trend line, which is what quite a few traders do, especially if they're using a shorter time period. The end day breakout is also pretty easy. You probably all know it. We buy on a new high, sell on a new low of the past end days. Nice thing about it is that it doesn't have the built-in lag that a moving average has. And of course, having said that, the lag in the moving average is both a problem and a benefit. It's a benefit because it keeps you farther away from the everyday price movement, so you don't get stopped in and out. So these are the combinations of things I want to look at. We can buy when the price crosses the trend line, which actually a very good friend of mine insists on doing. We can buy when the trend line turns up. All right. we can buy on today's close. We can buy on tomorrow's open. And most traders would prefer to pick 1 and 3. They want to get in as fast as possible, and they want to execute as soon as possible. So they'll really want to buy when the price crosses the trend line, and they'll want to do it on today's close. So let's look to see which of these makes more sense. And here we have a picture of the pros and cons. So I have a trend line, which is that smooth blue line. And you can see at the very bottom, I say buy when the trend turns up. So it buys, it's clearly well after the market has started going up. If you were to have gotten in when the price crosses the trend line, which is a week or 2 weeks before that, you would have an earlier signal. But would you have had a better price in this case? Not really. And the real problem with buying when the price crosses the trend line is you see in the middle block where it goes back and forth across the trend line. It turns out that you will have twice as many trades if you use the price crossing the trend line instead of the direction of the trend line. Now, as a mathematician, I go through this whole trouble of creating a trend line. And the trend line, the objective of the trend line is to smooth out the direction of prices. So when I've done that, I feel obligated to follow the trend line. So it's not told me anything unless the trend line turns up or down. And so in all my cases, I'm trading mostly long-term trends, but I always follow the signal based on the direction of the trend line and not the way prices, not when prices cross. Now, the entry choice of entering on the open and close really doesn't apply to futures anymore. And I've been a futures trader as well, because prices usually, the next day's trading opens probably a half an hour after the close. There's so little difference between the open and close that it's pointless to even think about entering on the open. For futures, I really conform to the old opening times. For instance, in New York, the economic reports come out at 8:30 in the morning, 7:30 here in Chicago. And so I like to enter my interest rate positions about 10 minutes before that. And for the other futures markets, I look to see where the volume for the day starts to increase. And that's where I get in on the open. It's going to be very hard to test that way. So you test using closing data, and you wind up entering on the close of the day after you get your prices. And I can't do much about that, but I think entering in the morning when the volume starts to pick up makes more sense. So here's a little chart of the entry choice, entering on the close, entering on the open for Tesla. And you can see there's so little difference that entering on the open makes more sense. Besides, we usually don't get a data update until after the market closes. So entering on the close means you have to try to predict at what point the trend will turn. And it seems unnecessary given the fact that the difference in performance is negligible. And here we have using the euro dollar. This is the euro dollar FX. I have an example of using this wide range of moving averages from 5 to 120 and entering on the next open, which I said we're going to do all the time now, entering on the next open when the price crosses the trend line or when the trend line turns up. And you can see the orange bars are generally much better. So this shows you that the using the direction of the trend is certainly better for FX. I mean, you might want to test this for everything else, but I've done that, and I'm convinced that using the trend line is a better choice. And on the right, I show you the difference in the profitability going back to from 2000 to now. And if you use the price cross, the profitability was 1.5 million. And if you use the trend change, it was 2.1 million. In addition, you only have half the trades when you use the trend line as this signal. So I think you will be much better off with the trend line. Now let's look at Euro stocks. Euro stocks is not a trending market. In fact, I'll show you later that it is the least trending market, but it has a pattern that's similar to the US S&P. You see on the left, let me just see, opening price, opening trend line, opening trend. I have to look at this because I'm trying to figure out exactly what I said here. Again, we see here, if you look at the far right on the left chart, you see that using the open to execute and the trend line is profitable, while the price cross is not profitable at all. And that's because the market is noisier. When the market's noisier, you get the price crossing back and forth over the trend line much more often. And on the right, we're looking to break down the long and short positions. And one of the things that I always do with equity index markets is I trade only on the long side. And it's, you must know that the equity market is highly biased to the long side. And so it makes more sense. I can't really make money using a long-term trend on the short side because the moves to the downside tend to be volatile and short-lived. I mean, there are a few. In 2008, of course, the market continued down, but that turns out to be a real exception. And so I trade the equity index markets only from the long side in every country. And I also trade the interest rate markets only for the long side, mostly for the same reason. It turns out that interest rates spend more time going down than up. It is true that the Fed occasionally raises interest rates, and that usually dampens market performance. And then they realize, well, this isn't, so good for the economy, and they start lowering it again. So there's very little to be made by trying to profit from increasing interest rates. And so the two markets that I trade from the long side only are equity index and interest rates. Now, choosing a moving average speed, of course, you know what I'm going to say in advance. If you look at the left, with euro currency, we have a number of moving average calculation periods that are profitable. And you could pick a number of them. There are two humps. You might pick one on the left, or you might pick this long-term one on the right. Euro stocks on the right, you really don't have much choice. I mentioned that that it performs much like the S&P. In the short term, it is very noisy and not possible to make money using a trend following system. On the right, you see that it does have profits. And you'll see that the blue bar, which follows the trend line, and the long only, which is the orange bar, does the best. So if we're doing the Euro stocks, we're going to pick from the long end. But for the Euro currency, you might be tempted to pick something faster. I recommend against that. And even here, you see that the longer term made more money, but I think you're going to find when you start testing using Metastock, you'll find that the longer moving average calculation periods or breakout calculation periods will be the most profitable. And here, this is just a thought. I was looking to say, do you avoid this when you're picking a calculation period to trade? Do you avoid that low dip in the center of the chart, the one that goes from, say, 45 days all the way to 80 days? And what I'm trying to show on the right with my little yellow bars is that we really don't know what's going to happen in the future. And I think it's preemptive to say that, well, I'm going to pick the one with the highest return and expect that to be the best return in the next 3 months or 6 months or longer. What I do when I find something that's robust, and I consider this robust because essentially all of the calculation periods were profitable in the range that I consider macro trend. And so what I'm going to do is I'm going to pick 3 different calculation periods. In this case, maybe I'll pick 30, 60, 120. And none of those are the best. But I don't know what will be the best in the future. But what I do know is that if I pick 3 different periods, I will get an average result in the future. And I'm quite happy with an average result if a stock or a futures market shows that it makes money everywhere. Right? I don't want to try to predict. It's like you saying I'm going to pick the 100-day moving average because it did the best, and it turns out that the 50-day is the best in the next 3 months. I don't want to do that. So I'm going to divide my investment into 3 parts, and I'm going to trade them as 3 separate systems, and I'm going to net out the trading signals. So let's just talk about the profile of the moving average system that we just talked about. It has only 30% good trades, 70% losses. And I have to say, because of that, you need to capture the fat tail. And I will discuss this later, that the only way you can capture a fat tail, the fat tail are these remarkably long profits, the interest rates you stay in a position for a year, or Tesla or Amazon, or anything that makes these outstanding runs of profits and just keep going. You need those really big ones in order to offset all the small losses in a moving average system. And the losses are small. And that's the good thing. A lot of small losses are called conservation of capital. You get into a trade, it goes the wrong way, you get out quickly. But as I said here further down, it depends on a few good trades that have very big profits in order to come out ahead in the long run. And that's the fat tail. So that will prevent you, or it argues against taking profits which I'll discuss in a minute, because once you take a profit, you're out of the trade, and that trade just, the trend is still up, but you're not in it, and it may just continue to be up. And then you have a worse decision, which is trying to figure out how do you get back into the trade. So I would prefer just to stay in it and reduce my risk using other techniques. So let's just discuss the breakout for a minute. The breakout is easily programmed in Metastock or in Excel, just using the functions max and min. And max, of course, over some n days will give you the highest price, and min will give you the lowest price. And so you will know when a price goes above the max or below the min that you have a new buy signal. And I've just drawn a little example here. And they may not be technically correct. I looked at what might be n days, could be 40 days. And on the left, you see I draw a line, a red line, showing support. And we sell an n-day low. And I've also shown the moving average at the same time, in case you want to compare the nature of the two trends. But the n-day breakout is probably the simplest concept and the easiest to follow. And the difference between the moving average and the n-day breakout is all in the risk. And it's a gigantic difference. I said that the moving average takes very small losses. You get in when the market turns up, you get out quickly if the trend turns down. The risk in an n-day breakout is the difference between the n-day high and the n-day low. And in a volatile period, that could be very big. And a lot of people are uncomfortable with that. And I can understand that. But it is a single trade risk. And when you put it together in a portfolio, and when you look at the long-term risk of a moving average system compared to a breakout system, you're going to be surprised that they're going to be the same. And I think I'm going to, well, I'm not sure I can show that now, but the difference is that you have a lot of losses in a moving average system, and you add them all up, and it comes out to be the same loss as one or two of the breakout losses. And I like a breakout system because it allows the prices to flop around between the high and low without stopping you out. On the other hand, a moving average system gets you in and out in order to protect yourself. So you have to think about the philosophy behind the two systems and which you like, which you will like best. And here I show you the Euro FX again with a breakout, using a breakout system, and along the bottom are the calculation periods for that. And you'll see that it makes money on both the longs and the shorts. And it gets better as the time period gets longer. And if you look on the right, we have the Euro stocks, which I showed you was so terrible using a moving average system. And in this case, it still has losses with shorter term calculation periods, but does much better in the longer term. And that's because it has noise, and a breakout system ignores it because any fluctuation between the high and the low doesn't change the trend indicator. So for a noisy stock, it appears to be better to use a breakout. So the profile of a breakout system compared to the moving average, it has more than 50% good trades when the moving average has about 30. It really has no lag to speak of because because we enter immediately on a new high caused by whatever event occurred. All right, the risk is, of course, the difference between the end day high and the end day low, and that allows the price to flop around without getting us stopped out. But traders do gravitate towards the moving average just because they like a small individual trade loss. I can't do anything about that. So let's just compare the performance of the euro dollar FX over these time periods with both the, and the euro dollar FX goes long and short. And you see the results here. They are, in my eye, they're similar. The breakout in orange is really a much smoother pattern. The moving average may have bigger profits, but I would think that there was some very lucky timing in the 100-day moving average that gave that big profit. But you see that the moving average results are a bit more erratic than the breakout results. So, but they're not all that much different. And here's a picture of the drawdowns. Now, drawdowns are cumulative. So as I mentioned before, you have a lot of little losses in the moving average system. And they, if you accumulate them together and you look at the total maximum drawdown, and you look at these two systems, they're almost indistinguishable. So the drawdowns, even though the individual trade drawdowns are different, the aggregate drawdown of the systems are almost identical. And let's see, we're going to compare the moving average and the breakout system for the S&P, looking at the open, entering on the open, and I've just drawn a line across showing what the average is. It turns out that, as you can see, the breakout is much more stable using the S&P, and it's for exactly the same reason as I said earlier. The S&P is a noisy market, and therefore, when you use a breakout system, it can flop around without stopping you out. And so, for noisy markets, you really should think about using a breakout system. Now, what I've done is I've taken a long-term trend, 130-day calculation period, and I've shown the results of the S&P futures from going back to 2000 using both systems. And you see that, that because we're long only, you see the down arrow in the center indicates that the trend of the market was down. So both the breakout and the moving average system were not in the market. So we get a horizontal line showing no trading. But if you look at the total picture, does it really make a difference which one you trade? So because of that, I really think you should concentrate on managing the portfolio, how to control risk, doing a number of other things, stock picking, whatever else would be productive, and not concentrate on overfitting or over choosing which trend method you're going to be using. So this is a summary of the trend part, because we need to get on to some other things. And it's a repetition of what I've already said, so I'm not going to belabor it, only to remember that I break it into 3 calculation periods because I do not want to pick just one. I think I'm always safer, no matter what system I'm using multiple parameters and dividing up my investment into 3 parts. So let's just talk quickly about profit taking and stops. They are good for short-term trading, bad for long-term trading. All right. A short-term trader should always use profit taking because you're dealing in an environment of noise. And when you have noise and you get a profit in a trade, the likelihood is that that'll turn around because the market prices are going to be erratic. So we like to capture profits when they're big enough and take that trade off the table. And also being out of the market because you take profits reduces your risk because you have days in which you're not in the market, so you have 0 risk. All right, that is also true for stops. If you can apply a stop, I use a trailing stop normally, but only for short-term trading. Again, the principle is if you're a long-term trader, you cannot afford to get out of a long-term trade and see it continue to make money. You have to figure a way to get back in, and that's not so easy. So for short-term trading, I always take profits. I don't normally use stops, but for long-term trend trading, neither profits or stops are good. Now, just a little comment for those traders that don't want to sit in front of their screen and don't want to do calculations every day. If you're a long-term trend follower, you have the luxury of using weekly data instead of daily data. And the conversion's easy. If you have a 30-day moving average, it's a 6-week moving average. 80-day move, every day, 80-day daily average is a 16-week. And the exact same method applies. You just have to adjust your parameters to weekly instead of daily by dividing by 5. All right, if you're using volatility, it doesn't really change. But look at the difference here. On the left, we have a 120-day moving average of NASDAQ, and I'm showing the daily profits. And on the weekly, we have a 24-week moving average. And you see that on the left, you do have higher total profits, but the patterns are still pretty good. And you'll see that on the far right, the weekly is doing better than the daily. So you do give up some profits on the weekly because you cannot change your position as fast when something happens. On the other hand, it's a lot easier and the performance is still quite good. Let's just talk about position sizing, which I consider critical to trading. And maybe some of you have seen me say this before. It's not going to be new, but it is still very important. Every trade I make, every individual trade I make has equal risk. And that's because if you put more money on any one trade, it has to profit. It has to return more profit than any other trade. And I really don't know how to do that. I can pick a set of stocks that I believe will outperform others, but I can't tell you which one of those stocks will be the best. And the market's pretty fickle. So what I do is I put equal risk on every trade, and that maximizes diversification. And there are two different approaches to this. So let me show you what they are. One is for stocks and one is for futures. And of course, there are the calculations on the right. I'm the one still reading the instructions on the bottom, just in case you didn't recognize me. For stocks, we have a much simpler approach. if you're trading 10 stocks, you divide your investment by 10. So you have an equal allocation to each stock. And then we just divide that by the closing price of the stock. Now, the problem with that is that lower price stocks are more volatile than high price stocks. I know you may find that odd, but I'm going to show you that it's true in just a minute, so that I correct this for the most part by not trading stocks under $10. They're unpredictable, they're overwhelmingly risky. So that's all I do for stocks. For futures markets, we use what's called volatility parity. It's much more accurate. It requires that you keep at least 50% of your investment in reserve, but that's generally true for futures as well. In fact, most people keep 60% of their investment in reserve. And then we're again going to put an equal allocation in each market. So we take our total investment and we divide by the number of markets we're going to trade. Now, we can do two things. We can divide the margin by the number of, divide the allocation by the margin, or divide the allocation by 10% of the contract value, which gives you a volatility measurement. And there are a number of other types of volatility measurements, but this is the simplest. Let me show you why low price stocks are too risky. On the left, I have Amazon, the daily returns versus the price. And of course, Amazon has, and the price is along the bottom and the daily returns are on the left. And you see that the daily returns at very low prices are gigantic compared to further out. And yes, the returns do get a little bigger as the price gets much higher, but I wouldn't count on that. It's just that Amazon prices went through this middle level very quickly and is now working its way at higher prices. Now, if you look at the right, it shows you what's really happening. These are the price differences, the high versus the low on given days. And so you see on the right, the high versus the low continues to get bigger as prices get higher, but not the percentages. So the percentages or the returns are on the left and the prices are on the right. Excuse me. I need a little water. Now let me show you how this comes about. And I'm going to use an example of corn because this whole concept moved from the futures market to the stock market. So you see the price of corn on the left spends a lot of time at low prices and then moves up and then comes back down. If I do a chart on the right showing the price of corn versus the annualized volatility, you see that curve, dotted red line is the curve. And that shows you that it levels off at a certain point and that there is a price to volatility relationship in futures because there is a low price and a high price. In stocks, prices just continue to go higher and there is no base price. So this is where it all came about. Now I just have an example here of how to do the position sizing. I don't want to spend time on this because we have to move along, but on the top, it's simply dividing the investment by 5 to get a $20,000 allocation for each one, and then dividing by the price, which is shown on that second line, to get the position size at the bottom. So you see that Amazon, which is most volatile, has a position size of 12 shares, and Visa, which is least volatile, has more than 1,000 shares. And on the bottom is an example of what happens when you use international stocks, and you need to include the FX price in it. So we have in there LN for London market, DE for Germany, and STO for Stockholm. And I just go through this example. I hope you can go back and look at this when you have more time. Now for futures, I also do the same thing. I am showing the net result in euros. And so everything gets converted to euros. And I use margin of 10% at the bottom. And I show you that NASDAQ only has one contract. Copper has one because they are more volatile. Euro stocks may be erratic, but is the least volatile and has 3 contracts. So this is something you can follow along if necessary, or if you are confused, you can always ask me a question. My email will be at the end. And this is kind of what it looks like as an example using gold. The orange shows the cash price, and the blue shows the futures position size. Just so you can see, as the price of gold went higher, the position got smaller. Now, let's go to another thought, which you should know that not all markets work for all systems, and not all systems work on all markets. It is going to become important for you to pick the markets that work best on your system, and avoid those that don't. And if you just avoided a couple of markets that don't work so well, you can improve your returns tremendously. So I'm going to show you how I do it. But at the end, you'll see that there's a pattern to it. So you don't actually have to do the calculation. You'll just know which markets work. And this is what I call the drunken sailor's walk. I'm going to tell you which markets are noisiest and which are trendiest using this drunken sailor's walk. And the idea is that the sailor goes from the ship to the pub in a straight line because he's sober. And on the way back, it's not such a straight line. And we're going to measure the amount of noise by dividing the straight line by the path going back to the ship later on. And that's going to be what we're going to do with prices. Over N days, we're going to take the difference between the first and the last day over those N days. That will be our straight line. And we're going to add the positive value of every day's move to see what path that price took to get from the first day to the last day. And we get a ratio. And obviously, if we went in a straight line to the pub and a straight line back to the ship, our value would be 1. So the higher the ratio, the more trend. And if we took longer to get back, if the price meandered around from N days ago to now in an unpredictable way, we would get a lower ratio towards 0. So what I did was I measured all of the futures markets using this ratio. And the only thing important in this is the way they cluster. And on the left, you see that the most trending futures markets are all short-term interest rates, and they stay close to Fed policy. And so they don't have room to move around. When you go out to the 10-day and the 30-year interest rates, a lot of that is driven by expectation. So they are not going to be as trending. They still have quite a lot of trend, but not nearly as much. On the far right, you'll see that the least trending markets are mostly the equity index. Now, this doesn't mean that something in the middle will have periods of trending and periods of non-trending, and they may perform fine on your system. But you really need to favor the markets that do well. So if you're a long-term trend trader, you're going to want to favor the interest rates. And I can assure you that the major management funds that use trend following are heavily weighted in interest rates, because over the years, 30, 40 years, they have performed overwhelmingly better than every other group. And then for trend following, the next group you'll want will be some of the FX markets, the euro dollar. And after that, not so much the S&P. I mentioned here the S&P is very noisy, but it has a long-term trend. And it's a bit erratic, but it offers good diversification. So just remember that when you're biasing your portfolio, keep in mind that there are stocks that trend more than others, futures markets that trend more than others, and you want to emphasize those. So here's a picture. I told you that the short-term interest rates, sorry about that. The short-term interest rates are the most trending. So on the left is an 80-day moving average performance of your IBOR. And clearly it makes money. On the right is the 80-day performance of the Euro stocks, which was the worst of our choices. And you can see it is not a good performer. So that's really all I have to say on the trend. And let me just summarize it for a moment and say that you need to remember when you trade the trend that only long-term trends make sense. And you want to enter on the next open. It doesn't really matter whether you use a moving average or a breakout system. And you want to put equal risk on every trade. You can break your investment into 3 parts, and that will add stability to your returns. And you want to pick the markets that work the best on your system. And I hope that was a little different than the usual trend following presentation. I'm going to turn this over to Jeff Gibby, because we have some short-term strategies on Metastock that you might find interesting. And he will go over those. And if you have any questions or comments, these are 2 of my books that you may be familiar with, or you can reach me at kaufmansignals@gmail.com. Thanks a lot. I don't know if I'm taking questions, but I'll find out soon.
Hey, Perry. Thank you. That was great. We did have a few questions, but I was able to answer those by chat. If people want to reach out to you, do you have a public contact detail that they could?
Well, yes, I said at the bottom, if they send a message to kaufmansignals@gmail.
Yeah. Oh, you mean right here in front of me? Okay, I got it.
In front of you, yes.
All right. Very cool. Yes. I want to say thank you for spending some time with us today, Perry. That was really good. And I'm going to go ahead and take back over the presentation. I want to talk just a little bit about your trading systems. So thank you very much, Perry. I really appreciate your time today.
Okay. You want me to shut off this screen?
I am going to eject you. So just hold on a second.
Get rid of me. Okay.
Yeah, there's a reason though. There's a reason. For those of you in the audience, it's just because when people leave, it gives them an option to shut down the room, which isn't good. So, Perry, great having you here.
Thanks a lot. Okay.
All right. And he is, let me go ahead and kind of change things back over to me. And go ahead and show my screen. And we'll go over here and just present. All right. And as Perry had mentioned, we do have the 3 methods that he's created. He's got the fast mean reversion, the fast strike short cycle, and the fast strike high momentum strategy. This is also a complete integration into Metastock. So it includes the scanning, it includes the system testing, and it includes the expert advisors that kind of go in and display everything into the charts. So it tells you exactly what's going on with them. He has, one of the things I liked is like with his short-term systems, you'll notice that he has kind of a generic version, but he's also being kind of the prolific system designer that he is. He's got an S&P, an IWM, a Q, a SPY, a US version. So he has different versions that he's actually customized for these systems for different markets. If you're interested in trading this against a Q or something that trades on the NASDAQ, you'd want to use the Q system of it, or the S&P, for example, as well. So it's a very, very good system. It does feature full integration into Metastock, which is what I absolutely like to see. You know, I love the ability to scan and find those opportunities, the ability to go in and get the commentary and the feedback. We do back this product with a 30-day money-back guarantee. This is, and I always get this question, this is a $4.99 one-time cost here at the conference this week only, $3.99. We back it with a 30-day money-back guarantee. You can try it. If it's helpful for you, you'll keep it. I mean, it's only $400. It should pay for itself, right? So we'll also, if you haven't used our award-winning Metastock program, we'll give you a trial if you need it. We'll also give you the data if you need it. If you need any help, our Utah-based support team over there will be happy to help you with any questions you've got. Give us a call, 800-882-3040. You can visit us online at metastock.com/saleschat, or you can also go to metastock.com/conf-promo. Maria says that was a great presentation. Thank you. Yes, I agree, Perry. Great job. I appreciate your coming, spending some time with us. Leslie says, great presentation. Thank you. In your book, you mentioned, I think what we'll have you do with that one, Leslie, is either email me, jeffrey.gibby@metastock.com, or email Perry, and we can get that question answered for you. Donald says, very informative. Thank you, Perry. I agree. What a good job. Peter says, awesome. And then Dinesh says, thank you. So that's great. Again, if you're interested in his product that's put together by one of probably the most prolific system designers of our time, give us a call, 800-882-3040, metastock.com/saleschat, $3.99, 30-day money-back guarantee. Great risk reward ratio there. So let's go ahead and talk a little bit about us. Again, 28 years in a row, we've been rated #1 in Stocks and Commodities magazine, scanning, testing. Scott's going to come on here. He's going to talk about the forecaster, our patented forecaster. He's going to do a whole session on it. So prices start at $59 per month. The offer that we're doing today is if you buy 1 month, we're going to give you that second and third month for free. You can do that at metastock.com/conf-promo. You can also give us a call, 800-882-3040, or metastock.com/saleschat. Real quick, we're going to say thank you to our sponsor, Stocks and Commodities magazine. Really appreciate all the support they've done for years and years and years. They've been supporting the conferences and the sessions and the summits that they do. We really like those guys. I really like the magazine. And again, if you do the subscription to Metastock, not only are you going to get 3 months of Metastock, you're going to get 5 months of Stocks and Commodities magazine. And if you do $300 or more, you'll get a 2-year subscription. So thank you for them for sponsoring. Our next guest presenter is somebody that I've known for a long time. Scott Brown has been one of such a good friend. I remember that he started in sales. He can tell you the exact year. I don't remember, but he's been working here at Metastock. He's now the owner of the company. He does a really, really good job of kind of like telling us all what to do, I guess. So let's go ahead and bring you on here, Scott. Scott, how are things going?
Great, Jeff. How are you?
Good. You sound good. We can hear you well.
Good.
I didn't talk about, but I could for a few more minutes about how nice of a guy you are, or how handsome you are, or any of those things.
You keep going, because that picture, I hope I don't show my face, because that picture was a few years ago and a few less pounds ago. So let's just leave it there.
Okay. Let's see. I did just send the presentation screen over to you, so it should be asking if you want to share your screen.
Okay, here we go.
I think I did.
You did.
Yes. Okay. Cool.
Did mine?
Did I see it? Yes. Mm-hmm.
My problem is I have all of this in my way.
So if you click on I just think you just had to present it at a full screen for you.
There we go. I just had to move it. Does that work?
Looks great. We can see you and we can hear you. I'm going to get out of the way. Thanks, Scott.
Thanks so much, Jeff. I really appreciate being with everybody. First and foremost, a huge thanks to Jeff Gibby. I don't think anybody realizes how much you've got to prepare to do this. It's absolutely insane the amount of work he does and to get this moving along. You know, for 5 days and 8 speakers a day or more. It's a huge organizational effort. Jeff Gibby has done it. I've known him for 20 years. I started back in Metastock in 1999, right before the year 2000. I remember when we had to come out with our Y2K software, because as everyone remembers, the world was going to come to an end then. But obviously we're okay and we're still moving along. I'm going to talk about the Metastock forecaster, and we're going to kind of jump into that, have some fun. Let me come in here. Our disclaimer. Anytime we present, obviously, we have a disclaimer, and I'll leave it up there for a couple moments. Obviously, there's no guarantee when you're trading, and trading's hard. And so just want to make sure you can read through that and see that. My favorite slide of my presentation is this one right here. We're getting the band back together. So let me give you some background on the forecaster and kind of why I have this slide on here. When I started at Metastock, I started as an entry-level sales guy that started over 20 years ago, and basically just gotten out of college and took a job, and I worked my way up. And I worked my way up through sales, marketing, product management, so many different things, events, large count sales, dealer sales, international sales. And then I became the president of the company years ago. And when I became president of the company, we were still owned by a company named Reuters, and a great company. And Thomson Reuters, then Thomson bought them, great company. And it was really interesting because some of our programmers, one in particular named Ken Hunt, he didn't feel like he was being challenged, and he was one of the first programmers in the world to ever create backtesting. So it shows you how talented he is. And he said to me at the time, hey, I'm going to move on because I just don't want to build a chart. I want to create something amazing. So as it goes along, we hit the Great Recession, right? I get a new boss. He just came over from Deutsche Bank. He was running the trading floor there. And I meet him in New York, and he says to me, hey, you know, we've got to make sure that Thomson Reuters is going back to its core business. And I'd never met him before, and he said that 3 or 4 times. And I'm not that, well, I can be dumb sometimes, but in this scenario, I said to him, hey, what do you mean? You know, like, are you putting us up for sale? And he said, yes. And I said, well, can I buy it? And he said, sure. And so what happened, it took about a year, and I ended up buying Metastock. Well, in the meantime, about every 6 months, I would go to lunch with Ken Hunt. And in the meantime, he'd been gone for 3 years, and he was working on something called the forecaster. And he showed it to me, and I was so impressed. And at lunch, finally, one day, I said, Ken, I have huge news for you. I'm buying Metastock, and I want you to come back. And the exact term I used was, we're getting the band back together. And he goes, I said, are you in? And he said, yeah. And I had to make a bunch more calls of some of our old programmers, and they were super excited that we were going to go on this venture. And so the first thing that we put in was the forecaster. And now in your head, you're probably sitting there thinking, well, what does it do? You know, what is it? And so really what Metastock forecaster does is this. It answers the question, where are prices most likely to be in the future after an event occurs? An event can be anything, including, it's an indicator, you know, like a crossover, divergent, overbought, oversold, breakout. So if you like looking at an RSI, a relative strength index, when that triggers on your chart, we'll actually create an event marker for you. And what we're trying to do is determine the probability of the price action in the future. We actually created a patent for this because no one else in the world does this. So before I jump into this part of it, the technical analysis emphasizes the past. Technical analysis with the forecaster emphasizes the future. And we create it with a really great cloud. This is just a quick PowerPoint that we're going through. Well, this is what it determines through its probabilities. There's many statistical and probability analysis techniques inside of this, but you can see over here, all of those check marks, those are things that we're actually creating and looking for when we're building these clouds that come out. Well, there's a cloud right there. The heart of the forecaster is our probability map. The probability map right here, as you can see my arrow, the brighter the color, the higher the probability that the price will go there. The lower the color, the less probability the price will go there. And we'll actually bring a bunch of these examples up that we can actually go through them and see what's going on here. So what does it suggest? As a trader, as someone that is tuned in to this conference today, there's one reason you tuned into this conference. Perry Kaufman did such a great job. Hopefully you like what I do, but the reason you're here at this conference is you want to gain an edge. You want to put the odds in your favor. If you can put the odds just a little bit more in your favor, then you will be more, you know, apt to trade. And if you can make money doing that, you know, that's why you're here, is you want that ability to go ahead and you know, figure out if you can make more money. That's why people trade, obviously. So what does the probability map suggest is where the price is going? How long will it take to get there? What is the direction of the price? Is it long or short? And what should my price targets be? After we get into a trade, the hardest thing to do is to figure out when to get out. And this is going to help you actually do that. We have a lot of different event or indicator recognizers inside of our forecaster. Here's just a basic chart, and then we're going to really jump into this and analyze a lot of things. So we'll just look at this as a minute, as an overall view. You can see your map focus. You can look at 30, 90, 180 days. But I'm going to go inside of it, and we'll actually look at it a little bit more. Here's for the CCI overbought, or the commodity channel index overbought for Adobe. And it shows you the next 7, 14, and this is historical, so don't use this as of today. But an example of this is just shows you 7, 14, 30 days, 60, 90, and 180 days out. Purple means that what? It's about 60 to 80, and you can see, you know, that's where it says it's going to go. Here's a map overlaid on a recent event, or showing you where the chart is going. And out there into the future is this probability cloud. And this probability cloud is going to help you figure out where the stock is moving. And that's what we need to know, right? Is if we can gain an edge on it, then we're going to be really happy about it. With this patent technology that we have, is it always correct? No, absolutely not. And I'm going to show you how to use it, but I just want to make sure that I'm very clear. There's no guarantees in any of this. Here's one of the event markers overlaid on Adobe, and these are all static images, meaning that this image never changes when new data comes in. So on this date right here, this cloud was created, and the probability was pretty high with this purple. And as you can see, the actual chart followed it along. Well, how do we get to our forecaster? It's really easy, and I'll show you here in a minute how to do it. Another thing that is really, really great inside of it is we actually have scans in the Explorer. These scans, if you're interested in finding out an event marker that has occurred today, then you can actually scan the whole market, any part of the market, and it will generate those for you, and then you can bring them up in the Explorer. Another thing you can do in the Metastock forecaster that is, it truly is mind-blowing, is you can actually create your own patterns. You know, how many of you out there look for patterns? I know quite a few of you do. And inside of Metastock, we have such great pattern recognition in there. But what if you could hand draw with a mouse your own pattern? Well, that's what we're going to allow you to do. And it's really great technology, and we'll show you how to use that in a minute. You know, here is a double top that we created, and you can draw your own pattern. You could actually invert it. You can reverse the pattern, and I'll show you how to do this. The pattern's displayed out here on the chart, shows you how to use. Okay, well, let's dive into the software, and we're going to have some fun here. So Metastock, Metastock, here's what Metastock looks like when you open it. Right here is our Power Console. The Power Console, the way that you access it is right up here in the corner, this big P. You click on it, and we have so many different, of our power tools in here. You can do things such as create a chart. You can do things with Quote Center. If you want to look at several different quotes, and you'll be able to look at all of these different things, with Jeff or with Kelly, and you'll be able to see those things work as well. The next thing on there is an Explorer. That's a tool that can scan the market with your criteria, and you can choose the specific data that you're looking at, and it will bring back the results. And you can also do multiple scans. The system tester simply back tests specific indicators with the data. And then we have an option scope that really does a ton of work helping you sort through the different options that you want to trade. Well, the big one that we're looking at today is our forecaster, okay? So you can come in here and we're going to say, let's look at Bitcoin, right? I know a lot of you out there are trading cryptocurrency. It's going crazy. We get lots of requests for it, right? And what we'll do is we're going to go ahead and put that out here. Now, let me give you an overall demo of how this works, okay? Let me move some things on my screen. Perfect. Okay, so what we have right here automatically, and I'm going to demo a lot of things. We have two tabs at the very top. The first one is our forecast analysis. Here's Bitcoin right here, okay? So we brought up Bitcoin and we're looking at that. And as you can see, I brought up a couple other things that we're looking at as well. But we're going to analyze Bitcoin first. What we have right here is a price, volume, and event marker chart or we can look at the forecast cloud. Now, the second tab at the top is our recognizer library. If you're a trader that loves technical analysis and really loves digging in with analytics and tools to really try and put the odds in your favor, what I'm going over right now will really be a game changer for you. As you can see, here's all the separate different recognizers that we have inside of here. You can also create your own, and I'll show you how to do that in just a minute. But we've selected all of the different indicators that we have here. We're going to go back here to our forecast analysis. We're looking at Bitcoin right here. We're looking at a price, volume, and event marker chart. As we go down here, we can actually organize the chart and our indicators or event recognizers right here. We can come in here and sort it by highest profit potential long or short, the most accurate current forecast, the most pronounced current breakout, the most distinct forecast cloud, the most recent event, or the most events. You can also sort it by recognizer name. So if we come in here and we say, hey, I'm interested in looking at the highest profit potential, or I'm interested in looking at the most recent events, or I'm interested in the most events, right? What you have here is then it automatically sorts all of these individual separate indicators right here. Now, to get a cloud, you need to have at least 5 event recognizers on your chart. The more recognizers you have, the more accurate it can become. So as you know, I mean, Bitcoin and trading crypto is all over the place. And let's take a look at some of these. So, you know, right here on October 10th, right, 2021, you can come in here and look at these. You can look at some back here on February 2nd. Let's click on that one. As you see here, we can look over here at our probability scale. So this cloud was created for 30 days. The 30 days that this cloud is created started on February 2nd. There was no data that had gone after this chart. So this makes it great because we can go back in history and click on different event markers, you know, to see how successful they were. You can come in here and say, okay, I want to look at this one. You can bring this out a little bit more and look at some other indicators. Again, this is the commodity channel index overbought. I can also expand it to look at a 90 bar cloud. Okay. Oh, wow. Look at this. So there's yellow right here. Yellow is the highest probability we can get. And as you can see, it went right through the yellow, maybe about, 10 days after. Well, let's say you're an options trader, right? Wouldn't you want to know where the security that you're trading options is progressing to? Is it going to go up, down? How long is it going to take to get out there? Well, look at this. How interesting. There is a little bit of purple here, which means, hey, there's probably a 55% chance it comes around there. Well, that's 80 days into the future. Well, if you're buying calls or options 80 days into the future, you can probably buy them a bit cheaper. And if you can have the odds of probability in your favor, boy, that could really help you out a lot. We can look at a few others here. So it comes around there, right there. It shoots up. You can look at a 30 bar there. And then what we can do is you can come in here and say, well, let's look at the most recent one. So here's a 30 bar. Here's a 90 bar. And here's a 180 bar. Of it going out into the future. Here's another one with a 52-week high. So back on November 8th, it hit another 52-week high. We can draw another cloud. Wow. So based on the 52-week high, and it's crunching all this data. Let me explain what it's doing right now. So down here is our statistical report, right? And it's going to tell you about what's occurring on your chart right now. It says, hey, look, this event has occurred 90 times in the last 5 years. On average, the event occurs every 16 price bars. The recent frequency of the price appears to be decreasing slightly. The shortest gap between events is 1 bar. The longest gap is 505 bars. Statistically, 7 bars after the event occurs, and with a probability of 95%, the closing price appears to be about 7.40% higher. And then it tells you about the standard deviation, and your margin of error is about 10%. Okay. And you can go through that and you can look at the rest of it and how that's being calculated and all of those things right there. You can also come in here and here's your cloud intensity. You can decrease it, you can increase it, you know, as much as you want. I like to have mine increased as high because then it makes it as sensitive as possible. And it shows you right here how many bars into the future your cloud is looking at. So in 150 bars, if you love basing your analysis off of a 52-week high, it's saying it's going to be somewhere around 60,000 still. Not much movement based on the 52-week high and looking back over the last 5 years of data based on the 52-week high. Well, let's take a look at this TCI overbought, oversold. There's that one. And you can see, hey, 126. This one is a much more bullish, you know, than the 52-week high is. We can look here. Here are some that I created myself. And these were based off of patterns that I created. Wow, that looks pretty good for a 90 bar. With all the statistics it has in it, there's a lot of things it can do there. And it's showing you, wow, 90 days into the future, you know, we were looking right here at the chart. Wow, that was back at about 12.5, and it crossed it right through here at 15. And the cloud was right there with it. So this is a great, solid, you know, using here Bitcoin with it. And we're looking at different things that will actually help you learning how to do this. Now, the second thing that we need to look at, here's the price volume for Bitcoin. Well, here's the actual forecast cloud of Bitcoin, okay? So in the indicator I created with Capstone, let's go back to the 52-week high. Every single day, you are getting a new bar, right? That new bar is telling you, or you could calculate to help create this cloud. On this, the cloud never changes, okay? Never changes. On the forecast cloud right here, it changes. It's almost like an artificial intelligence. Every day you get a new bar. And as that new bar comes in, this cloud will change and evolve. So it's really cool because right here you can say, hey, what's going on based on this specific event marker? Right here, I can say, well, I'll tell you what's going on. Right here is with this event marker, every time I'm getting new data for the 52-week high, it's telling me the next 1, 7, 14, 30, 60, 90, and 180 days, whether that's going up or down. And so that's very, very helpful, for us. Okay, let's look at Apple. Apple is such a highly traded, specific indicator, that's out there. And what we see right here is here's a highest profit potential. Again, I like to at least have 10 bars on there. There's your 52-week high. Man, Disney's, I don't care what they've been telling you, but boy, Disney Plus and the parks are doing just fine. They must be raising those prices again, right? My daughter was there just last week, and she said she had a lot of fun, and we giggled about eating $10 churros or however much they are, but what a great place to go. Pretty magical. So right here, I can come in and I can say, okay, let's look at 30 bars. Here's the 52-week high. We've been kind of looking at those. Back on October 4th, here's another one, November 15th. Here's another one, January 13th, how those have looked. We can come in here and expand this, and we can say, well, let's look at, how about we look at 90-day bars, right? So we come in and we'll see what a 90-day bar looks like. Wow. Came through right here. We called it up. It didn't get as high as that. Let's look at 180 bar. Wow, that is a pretty cool looking cloud right there. And then we could come in here and say, well, we want to look at the most recent events. Are there any of them that have happened today, right? Or the most recent, maybe not today. So here's one I created when I was in Singapore, showing this off. And let's take a look at some of these. Let's look at a 90-day bar back here. Man, that looks pretty good. Let's come here back in September, look at a 90-day bar. And then we'll look at one right here as it goes out in its latest creation. It's saying, wow, the yellow, super bright. So our probability over here is super high. Right here is our purple cloud. And it's saying, hey, in about 66 bars, it could be at about 155. So that's good knowledge to have, if you're really trading this specific one. Another one I love to use is the most accurate current forecast. So it will sort them, and we can come in here and start with a 30 bar. We can change that to 90. Wow, look at that. In about 27 bars from now, when this was created on Apple, it said, hey, into the future. And back then, that was about 80 bars. If you could have gotten it at 170, it was trading here at about 150. So if you could have bought options in the future that were $20 off, you probably could have picked them up pretty cheap, especially that far out. And then if this comes through here, wow, you hit a home run on that. Does it always hit that? No. Again, let's be very honest on that, and definitely, knowing what's going on and those types of things. Here's the RMO sell. And then here's one for 90 days. Boy, that doesn't look bad. We can click here. Wow, look at this. On the RMO sell, it came through the yellow at a very high odds of probability. And then it's got some red in here, which is 80 to about 90 right there. And it says, look, in the future, in the next 14 bars, there is an opportunity that it might go through that. Pretty interesting. Oh, okay. So I think I've been lying to everyone. We're looking at Apple, not Disney. Gotcha there. Okay. But it is the same. Let's take a look at Disney right here. Oh, we did look at that for a minute. Okay, let's go back into the software, and I want to show you some really cool things that we can do inside the Explorer, okay? Let's go here. Now, I can come into the Explorer, and again, this is our scanner, and right here are all our favorite explorations, okay? And you can select those, and I'm actually going to select let's do the forecaster trend surge up. So I select that. Below it right here is all the data. Now, being a part of Metastock is such a cool thing because we get global data. So I guarantee we have people that are watching this right now that are not only trading the US markets, but they trade the European or South American markets, the Asian markets, and we have all of that data for you. Well, what I'm going to select is I'm actually going to choose the NASDAQ 100. So here's the NASDAQ 100 right here. I'll select that, and I'm going to click Start Exploration. So this is going to scan all 100 securities in the NASDAQ 100, and it's going to scan them against the trend surge up. All of us have a problem when we trade is, what do we trade today, right? What are we looking at? Well, this will tell us and give us any, excuse me, any of the NASDAQ 100 that are against the trend surge up that have occurred today. So here's Vertex right there. I click Open Chart. I have the RMO on here, and then I can just click Forecaster, and it brings it up right here. Then I can come down here to Trend Surge Up by the recognizer names, and look, it's right there. It's my event for trend. And then what we want to do is, what I recommend is, hey, let's take a look at some of these, right? You know, it had a big gap down there. That didn't look that good. Oh, this one looks good for 30 bars. This one looks really good for 30 bars. This one doesn't look that great for 30 bars. And come down here. Let's do some more recent ones. Looks okay. Where it can get you, and let me warn you, because there's strengths and weaknesses to everything. When you have these big gaps, those gaps statistically, because that's how we're basing everything off of, will not be helpful when you're looking at those event markers, because that gap statistically is an anomaly. And so it won't really look that great there. But we come in here and we say, let's look at that one. Looks pretty good. And then here's the latest one. And it says over the next 30 days, this is where we think Vertex Farm will go. Here's the next 90 bars. Here's the next 180 bars. And it kind of shows you where that's going to go. Let's do one more just to kind of really make sure that you understand what we're doing here. So we can go to our Power Console. We're going to go to Explore. Let's select another forecaster. You know, here's all of them. Let's do a CCI overbought. We'll keep the same data. We'll start the exploration. Man, isn't it nice that we have computers and they can scan and do all this work for us? Okay, so here's two right now. Oh, Lululemon, huh? Let's go ahead and open that. If we right click on any chart in Metastock and click forecaster, it'll bring it on. And then let's look at the recognizer names. And I think we did the CCI overbought. So let's look at the CCI overbought. And as you can see, there's one right here. Wow, this has a lot of event markers. The more event markers on your chart, the more statistically viable your cloud will be. So this one actually makes me pretty excited. So as we're looking at Lululemon, we come in here and we say, okay, how does this look for 30 days? Pretty good. The next one, 30 days, not bad. Wow, this one called it perfectly. Look at that. Now the gap here, I can promise you it's not going to look that great. Oh, well, I'm surprised myself. Look at that. It gaps up and actually called it pretty well. Okay, that one shot a bit high there. So as you can see, it's called them pretty good. Let's look at the one right before the last one to see if it's kind of on there. Wow. This one's pretty good here. Wow. And then if we want to look in the very last event marker, let's say you trade options. And right here is about 575 with 130 bars to go into the future. About 50% viable. Wow, so we're trading right now at about probably 475. And if we got up to 575, man, 125 bars from now, those options have got to be cheap, right? That would be a really great thing to do. 100%. The Explorer is an amazing tool that will help you. The Explorer will continue to help you to get things going and move things. And it really is a tool that is a great tool to help people out and get things moving onto the chart. So let's go in here and I'm going to show you some things that are quite amazing to look at and things that are great to see. So let me look at that here. What we're going to do now is we're going to create our own tool here. Okay. Our own tool that we have here that can create your own indicators and your own patterns. So if I come in here to the recognizer library and I click draw new pattern here, I can actually create a brand new pattern here. So I can come in here and I can say, hey, here is, you know, a trend up. And I can come in here with my mouse and I can scroll up kind of how I want it to go. And then it will create all of these different options here on the chart where I can move those up and down. I can manipulate them. I can invert the pattern if I want one that's the exact same and it can drop down. I can reverse the pattern and then I can name it right here as a trend up. I can click, do I want this to be for approximately 15 bars that it's looking at the chart, or I can do one for 20 bars or 10 bars. I can look at a pattern match sensitivity for low, medium, or high. We'll keep it medium. And we're going to leave it at about a 30 cloud and we can save it, right? So we come down here and you can see the trend up is right there. So I'm only going to select the trend up and I am going to rescan that selected analysis. So right here is the pattern. We're looking at Lululemon right now, and it's saying, hey, look, that pattern that I drew by hand by myself is 85% match, 82%. It will go all the way to 75% match. And then I can come in here and I can say, well, let's see how it performed, right? Well, there's one for 30 bars. Here's one, another one for 30 bars. Here's one for 30 bars. Anyway, you get the picture. Again, you can come in here, draw a new pattern, and then just draw it however you want, and then you can create it however you want. It's a powerful, powerful tool that you have and you can create on it. So now we can come in here and let's go to the chart. Now, everybody has like 3, 4, 5 bars that they love to look at for their trade entry setup or a trade exit setup, right? Now, let's look at this right here. Let's look at Lululemon. And let's say we want to select our own. So we come in here and we do the user defined pattern select. So right there, I click the box. I come in here and I say, well, I want to look at these 5, 6 bars. I highlight them and it says capture chart pattern. Do you want to capture the selected price formation? I say yes. Well, it automatically draws that out for me. It says over 5 bars. Let's do a pattern match sensitivity medium. Let's do 90 bars there. Let's call this the Lululemon. I'm sure I just spelt that wrong. And indicator, we'll click save. So we come down here to Lululemon and we're going to rescan it. So right here, it's looking at the one we just created by highlighting those 5 bars. There's no software out there in the world that I'm aware of that can do that. There's also no software in the world out there that can do that where you can create or draw your own indicators on the chart and make it work like that. So right here, let's take a look and do some analysis. So let's look at 30 bars first, and then we'll go to 90 bars. Man, that looks pretty good. Here's another one. As you see that bright red, that's 80% or higher, 90% or higher with the yellow. And as you can see that coming out, here's the blue right here. We'll go to the next one. Man, that looks good. Well, let's go to our latest one that we have, which is right there. And let's click a 90 bar. And it kind of shows you where it should be heading to based on those 5 bars that I selected. So again, if you're a trader that can absolutely specify on a chart or has a chart where there was that perfect trade setup of 4 or 5, 6, 7, 8 bars, we can highlight those, create an event marker, and then you have those moving into the future so you can see where those performed. Or if you're an individual that wants to draw hand patterns and specify those and create your own, you can create as many as you want, again, right here inside of the Metastock forecaster that we're doing. Cancel that out here. Again, the forecast cloud right there, every time you get a new event that comes in, This will show you what's going to happen into the future. And this is saying based on those trades and the event markers that are occurring, right here you can see 1 bar, 7 bar, 14 bar, 30 bars, where it's going and moving into the future. So again, the brighter the color, the higher the odds of probability. There's no guarantees on any of this, but you can look at this. You know, we could look at currencies, we can look at futures, we could look at commodities, we can look at cryptocurrency like we did in the beginning with that Bitcoin that we have. This is pretty amazing technology that we're sharing with people. And we've had this technology for just a little bit, and we're getting great reviews on this. And again, it is a patent that we've patented and put it on. Let me go back into right here and kind of just wrap this up. You know, what we can do inside of Metastock, the forecaster, and really creating those odds of probability. We can use the Explorer that I showed you and scan the markets based on any of those event markers there to find an event marker that occurred today. But what you're after, and when you're trading, you want to know when to get in, when to get out. If you are in, how far is this stock going to run? Or how, you know, when will it go up? When will it go down? And how long will it take to do that? Now, this isn't perfect, but it will give you an idea as you play with it, as you use it, as you work with it. We have a ton more videos on our YouTube page at Metastock. It's just youtube.com/Metastock. And it will show you more in detail than even I've shown you today. Now, we have an incredible offer that we're really trying to get across to the people that are with this conference, right? We can scan the markets. We can absolutely look at this forecaster moving forward. And we have an amazing extended trial. You just need to go to metastock.com/conf-promo, and we can get that set up to you. Or call us. It's 1-800-882-3040. We have our whole sales team waiting for you. Or you can go to metastock.com/sales chat if you just want to chat with one of our sales reps. So that's a little bit about the forecaster. You can see why it really is a big piece of technology. I've spent about an hour with you today on it, and I didn't even get into every single thing it can do or what Metastock can do. Now you can see why Metastock over the last 28 years has been the winner of the Reader's Choice Awards for technical analysis of stocks and commodities magazine. Because there's so much power inside of Metastock. There's so many software products that come and go, and they just don't, help people out. Metastock has been around for over 40 years. Professional traders use this throughout the world. Banks use this throughout the world. But the majority of our users are people just like you. 75% of them are just the average trader who's a retail trader and is either looking at this from a daily chart or real time. And so it's important that you have the right tools to use. And I know Metastock can do that for you. I really appreciate you listening. Man, really take advantage of this free trial, this extended trial that we're offering you right now. Take advantage of it, test it out. You can do that for free. And give us a call if you have any issues. We'll be happy to, help you out. We have a support team there. Really appreciate it. And now if we have any questions, Jeff, I guess we can go to that.
Yeah, we do have a couple of questions, Scott. Albeck, and I'm sure I said that right, asked, can you find long shadows on candles with this software? I want to
wow. Let me show you what we can do. I'm glad you brought that up, because in our recognizer library, look at all of our candlesticks. So we can find all of these specific candlesticks right here. We have cloud cover. As you can tell, there are probably over, I would think, 15 to 20 of them. And you can also not only do that and find them, but let's say we come in here and we want to do the dark cloud cover. We could rescan that selected analysis. You can also use the Explorer to find any single one of those that have occurred right now today. Okay, so this is just an example. Again, you must have 5 of them to happen, so we couldn't draw a chart on this. If I click on it, you know, it'll just give you, wow, that actually looks really good. But you need more than, you know, 5 points of data to do it.
Sherry from YouTube wants to know if you can use this with a futures market.
Oh, great question. Absolutely, you can use this with the futures market. You can do the E-minis, you know, whatever it is you're trading on the futures, 100% you can use it.
Yeah, and FS asked, how about indices, NASDAQ, Russell 2000, DAX? You can apply this into anything you want, FS. Any of the 300,000 or so symbols Reuters covers. So really good questions.
And not only that, just a reminder, because you're partnering with Metastock and using us and our data and our tools, as Jeff said, there's over 300,000. So that means if you're in the UK or Singapore, in Brazil, in America or Canada, we have the data you need to trade.
Monica says, when you're selecting the patterns, can you select the last pattern and compare it to how it looked in the past? And yeah, absolutely.
Absolutely, you can do that. Yeah, you can click on any of these and you can see how they've performed on other ones and see, you can just click on it. Oh, I don't have enough there, but let me find one that does. And as you can tell, you can just go back. I'm wanting to find there. So if you want to test that one, you just click on it and it will show you how they performed.
Rosa wants to know if she can use it for end of day, or I'm sorry, intraday. So can you do this on a 60-minute chart or a 30-minute chart?
Yeah. Jeff, I'm going to let you take that one.
Okay. The answer is yes. Yeah. So there you go. All right, Scotty, that's great. Appreciate you coming in and spending a little bit of time with us. I'm going to go ahead and kind of jump over here. We'll go ahead and show my screen. Thanks again, Scott.
Cool.
I appreciate you coming in. Good job. Prepare to be ejected.
Okay, bye-bye.
Bye. All right. What a good job. Let me go ahead and dismiss him here. I'm going to go ahead and turn on my video. Hello. You should be able to see my screen. If you see any issues, actually, that let me know. I just got a really big picture of me, and I don't know that that's in the way. Okay. All right. I have to work on that in a second. Okay. Can you guys just confirm you should be able to see 28 years in a row? It should be showing my screen. Just let me know if you can't see it. In any case, the offer that we're doing today, as Scott had kind of talked about, is if you pay for a month, we're going to give you a second and a third month for free. The software itself has been rated #1 in its price category for 28 years in a row. That's a really good kind of example of the forecaster and kind of how it works. And I'd encourage you to try it. We do have, we do have holidays. A lot of people get some downtime. It's a really good time to kind of spend some time, not only testing and looking at stocks, and there's some downtime that comes along with those. It's also a great time to be trading. If you look at seasonality, some of the best months to trade are generally January and early in the year. So it's a great time to try it. If you're not part of Metastock, you can. If you do subscribe to Metastock and you don't like it, you can cancel that subscription at any time. But you can also find out why it's been rated #1 in its price category for 28 years in a row. So metastock.com/conf promo, conference promo is basically how we shorten that down. You can call it 800-882-3040, or you can visit us online at metastock.com/saleschat. So, oops. All right. I do want to say thank you to, let's do Stocks and Commodities for sponsoring, and CMTassociation.org. CMT is a brand new sponsor of Metastock. They've done 2 or 3 sessions right now. We're proud to be associated with CMT, and you can find out more about them at cmtassociation.org. Speaking of, our next presenter is Kevin Nelson. Kevin is actually the person that hired me here at Metastock. I don't think that he's going to believe it if I told him, but that was 25 years ago in March. So he's probably, Kevin is somebody that's got a lot of experience with Metastock. He's been working with Metastock obviously for a number of years. The site that he runs right now is learnmetastock.com, and it's basically a training session. There's hundreds of videos on how to use Metastock and different videos on different technical analysis techniques. It's such a good site that actually when I bring a new sales rep on, I start him on learnmetastock.com and I have him go through the trainings that are there and all that kind of stuff. So Kevin, it's good to see you. Let's go ahead and kind of make you the presenter, have you kind of come on. How are you doing today, Kevin?
Great. Thanks, Jeff. Man, you've been there 25 years. You must be getting old.
A little bit.
Man. So can you see my screen okay?
Yes, we can see it. It's learnmetastock.com is where you're at.
Perfect.
So we can see your web browser.
Great. All right. Well, thanks again, Jeff. I appreciate that. And thank you for inviting me to present today. Always nice to come into the Metastock room. So today what I'm going to be doing is I'm going to be talking about the Explorer, and the Explorer is pretty much my favorite tool inside the program just because it's so versatile, to say the least. But the training that we do at Learn Metastock is we can help you from any part of the Metastock program from beginning to end. We can help you get started with the program all the way up through advanced formula writing. And what you're looking at here is just our homepage up at learnmetastock.com. So I'll tell you a little bit more about that at the end of today's presentation, but right now I just kind of want to jump straight into it. So again, what we're going to be doing today is I'm going to be covering the Explorer, and the Explorer is an extremely powerful feature inside the program. There is just so much you can do. It's really just your imagination, which is the limiter. So what I'm going to do here is I'm going to actually show you how to create an exploration from scratch. I'm going to give you a number of different examples here to really kind of show you the different features and how the whole thing can work together. But as always, if you have any types of questions, make sure and let me know. Just send me a message in the chat window and I'll be more than happy to try to help you as we're going through here. So to get started, again, what we're going to do is we're going to create an exploration from scratch. One of the first things that I like to do whenever I create an exploration is I want to make sure that my data is good. If your data is junk, everything else is junk. So I'm going to show you a really quick way to figure out exactly what you're scanning on. And then what we'll do is we'll expand on that a little bit, and we'll add a couple different formulas here to kind of help identify whether the markets are generally bullish or bearish, and show you how to filter on those, because the filter itself is really the key to the Explorer. The filter is what allows you to keep the securities that are of interest to you and weed everything else out. So I'll show you how that operates. And a really good example for that, I think, is actually using volume. And volume's a pretty tricky thing to work with, and just because it's so volatile, but I'll show you a number of different examples of how to do that. And then we'll also incorporate a price filter as well. And lastly, I'll show you how you can save your results so you can kind of put the whole thing together. So to get started, let's talk a little bit about the data, because again, in my opinion, this is the most important part. If you've got a problem with the data, you're not going to go very far with this thing. So to get started, to open up the Explorer, you can do it a number of ways, but typically what I'll do is I'll click on these pair of binoculars right up here at the very top, and this will launch what's called a Power Console. And inside this Power Console, of course, is where you're going to launch all the different power tools inside the program. So this will open up the Explorer. There's a lot of pre-written explorations. And if you're newer to Metastock, what I highly recommend that you do is take a look at these different explorations that are included. There's a ton of them that have been written, and there's probably a really good chance that you'll find something that's going to be of interest to you. But my purpose today is really to kind of show you how this whole thing can work together. So what we're going to do for our first example here is this chart that I've got open right now is just a chart of the SPY. And what I want to do is I just want to basically put a couple indicators on here to kind of see what's happening with it. So for my drop-down list, I'm just going to grab a couple moving averages. I'm going to drag this first moving average directly on top of the price chart. And the first one we're going to plot here is just going to be a 10-period simple moving average. And then I'm going to color code the price bars, for example. Let's go ahead and color code the moving average. We'll go ahead and color code that one to be blue, and I'll make the line a little bit heavier and then click on OK. And so that'll plot our 10-period simple moving average here on the chart. Now let's go ahead and plot one more. I'll go ahead and drag the moving average again directly on top of the prices. This time what I'll do is I'll leave this one to be red. I'll make the line a little bit heavier again. And I'll go to the parameters here and I'll change that 10 to a 50. So we're going to have two different moving averages. We've got a 10 period in the blue, and then we've got a red moving average here, which is of course the 50 there. Now let's go back into the Explorer. I'll click on these binoculars here. And what we're going to do is we're going to create an exploration from scratch. And the way that you do that is you right click up here at the very top and choose new exploration. And this will open up a dialog where of course then you can enter in the different criteria that you're looking for. Now step one is you need to give it a name. And what I like to do is I like to start my names with a wildcard. Typically what I do is I use an exclamation point. And the reason being is because by putting a wildcard at the beginning of the name, all your formulas then will be grouped together. And what I find otherwise is that they get sorted alphabetically, and it's really easy to lose track of these things as you start working with more and more of them, because some of these lists are, of course, are pretty big. So this is going to be our Explorer class. So we're going to go ahead and call this Explorer. And again, this is kind of an advanced topic. So same thing, if you're newer to the Metastock program, just kind of bear with me and I'll show you a lot of the different features here, but keep in mind that what I'm going to be talking about today is I'm going to be showing you some different formulas, which again, I consider more of an advanced topic here. So, but as always, again, if you have questions, make sure and let me know. Now down here in this area, this is of course where we can work with the different items of what we're looking for. And we've got 12 different columns to work with, A through L. And underneath each one of these columns here, these are where we can place our formulas of what we're looking for. And the first tab here is called the filter tab. And this is something that I'll come back to here in just a minute. But underneath tab A here, you can name each one of these tabs. So what'll happen is when you run a scan, it's going to come back with a report. And then these are going to be the different names that are going to pop up on your report. So for our first column of data in our report, I'm going to double click on A right there. And what I want to do is I want to name this, for example, like date. And what I want the Explorer to do is come back and tell us what the day is of the securities that we're scanning on. So I'll click inside this big box here. And this, of course, is where we enter our formula. Now, for our first formula, what I'm going to do is I'm going to access it through the formula library. And the nice thing about this is that in the formula library, this is where you can grab all the pre-written formulas. And what's nice about this is you don't have to go back and recreate the wheel here. Almost everything has already been built for you. And really where you spend your time is just figuring out how to put these different formulas together and find the different ones that are of interest to you. So for example, let's say that I want to put a day of the month inside of this box, but I don't know how to write the formula. I'd go down here to this functions button right here, click on this, and this is going to open up our functions library. Now inside this functions library, over here on the left-hand side, these are the different categories that we have to work with. We have an all, analysis tools, and so forth. But we had a question at the end of at Scott's presentation there where somebody was looking for a particular candlestick pattern. Well, if you want to create an exploration that looked for a specific candlestick pattern, this is exactly where you'd go. Click on this candlestick category, and then over here on the right-hand side, you can then choose the different candlestick pattern that might be of interest to you. So as you can see, this stuff has already been created for you, and really all you have to do is kind of click on it, and it'll put it right in there and basically write the formulas for you. So the first thing that I want to do in this first column is I want to get a date field. So over here on the left-hand side, I'm going to click on this date and time category. And then over here on the right-hand side, I'll choose day of month. And then down here at the bottom, underneath this format, this will give us an idea what the formula is going to look like when it gets pasted in. But I'll make sure that I have a check mark in both of these boxes down here, then click on OK, and that'll paste my formula right in there for me. Now for this first formula, this is just written as day of month, open and close parentheses. So this formula basically does everything that I need it to do just like that. I don't have to do anything else at this point for this particular one. So that's going to give me my day of month. And then for tab B here, I'll go ahead and click on this, and I'm going to double click on it, and I'll rename this one to be close. So this next column of data is going to be the closing price of the security. So for the formula for this one, I'm just going to write the word close. And this again is going to identify the closing price. So let's go ahead and run a scan. We'll click on OK. And the way that you run a scan, of course, is that first of all, you have to choose the exploration that you just created, which in this case, we call the Explorer Advanced right there. Second step is we have to choose the database that we want to run on. So down here at the bottom, this second window down here, you can choose from any of the lists that you already have on your machine. But in my case, I've got a folder here which is called Index Constituents. And underneath that, I have another folder called Dow Jones Industrials. And as you can see, it's got 30 securities in it. So I'll put a check mark in that box. And then over here on the right-hand side, I'll tell it to scan or look through the last 1,250 records. And then I'll tell it to make sure and use the current exchange date and time. We'll scan on daily data. And by the way, you can scan on any time frame that you want. If you've got the real-time or professional version of Metastock, you can scan on 5-minute charts, for example, or 1 minute or whatever the case may be. But in this case, I just want to make sure and choose daily. And then underneath here at the very bottom, I'll click on the Start Exploration, and this will begin the process. Now, what this is going to do is this is going to run through this scan right here. Excuse me. And you'll see up here at the very top, this will give you an idea of how the scan's running, how much time has passed, for example, how many securities are going to be going through, how many are going to be rejected. It'll also give you a percentage here as it's going through here as well. Now, typically what I find is when I run my first scan of the day or the situation or webinar, or whatever the case is, typically my first scan takes a little bit longer to run, but after that first one runs, typically they run a little bit quicker after that. Now, in our report over here, you'll see we've got a results tab, and we've got 30 securities that are inside the results tab, and then I don't have any securities that were rejected. So that's important, number one. Number two, the other thing I want to look at underneath this results tab is this field right here, which is the date field. And what I want to make sure of is I want to make sure that each security has the same number, in this case, the 17th of November. If one of them has a 16th or 15th or the 2nd, whatever the case may be, that's my hint that I've got a problem with that particular security. And then the next column here is the closing price. And by the way, you can click on these column headings and you can sort. So for example, I can find the security with the lowest price and click on it again, and then get the securities with the highest price as well. So once I have this, and I know, for example, like if I click on this date field and it doesn't change, I know that all the securities have the same number. Now I'm good to go. I can continue on, and I know my data is good. Okay, let's go ahead and close this down. And let me just jump back over here. So once I actually have that part working, the next thing I want to do is I might want to look for like either a bullish or a bearish type of condition. Now, as you might imagine, there's countless ways that we could identify this, but what I'm going to do is I'm going to use these moving averages to kind of help me identify that. So for this example, what I'm going to say is that if this blue line or the shorter term moving average is above the red line, I'm going to call that bullish. And if that red line drops down below that blue line, I'm going to call that bearish. So that's going to be my next step or next thing that I want to add to my exploration. So to do that, let's go back into our Explorer here again, and I'll double click on it and open it back up. So for my next column of data here, I want to put in a formula that's going to identify the value of this blue line or that 10-period moving average. So for column C, I'm going to go ahead and name that one 10 and then SMA. Now, when naming these tabs, you have 8 spaces to work with. So sometimes you have to be a little creative on the names, but just as long as you have 8 or less characters, it'll fit in there fine. So I'll just call the first one 10 SMA for a 10-period simple moving average. Now, again, to write the formula, if I don't know how to write it, we can click on the functions library here and click on the all category over here on the left-hand side. And then on the right-hand side is going to be all the different formulas that we have access to. And as you can see, there's a huge list here. But if I know exactly what I'm looking for, what I can do is I can click inside this list and then just start typing like MOV for moving average. And that'll jump me down to that group there. That'll help find that particular formula I'm looking for. So in this case, I'm just looking for the moving average. So I'll go ahead and click on OK, and that'll paste it right in there for me. And what's nice about this will also give me hints of how this formula should be written. So for example, the data array, what it's looking for here, it's looking for the type of moving, or basically what you want the moving average to be calculated off of. Do you want to do a moving average of the high, the low, volume, the close, or what is it that you're looking to create the moving average off of? So in this case, I do a moving average of the closing price. And for the periods, that's just the number of periods that you want to use, which in this case, for example, is going to be 10. And then these are the different types of moving averages that we have to work with. E is exponential, S is simple, T is time series, TRI is triangular, VAR is variable, W is weighted, and VOL is volume adjusted. So as you can see, there's a lot of different types of calculations, but we're just going to go ahead and get rid of all of this except the letter S. And the S, of course, represents a simple moving average. So our first formula right here is just a 10-period simple moving average of the closing price. Now, if we've written this and we feel confident that this has been written correctly, what I'm going to do is I'm just going to make a copy of that formula. I'm going to go to the next tab here. I'll go ahead and name this one. Let's call this one, for example, like 50 SMA. And then I'll paste this formula in. And now all I really have to do is just change that 10 to whatever number I want. So in this case, I'll change it to 50. So let's go ahead and run this one. We'll click on OK. And to run it, I'll keep everything the same, and I'll just click on that Start Exploration. So what I'm going to be doing is I'm going to be running a number of different scans here throughout this presentation. And so I'm going to keep the settings all the same unless I specifically change one particular item. And if I don't change anything, I'll just click on the Start Exploration to kind of keep it going here. All right. So for our next scan here, we've got 2 more columns of data that have been added. We've got a 10 simple moving average and a 50 period simple moving average, and it's showing us the values of those moving averages for those securities. Same thing, we can click on them and then we can sort them from high to low and so forth, and we can choose whatever type of configuration we want. But for our next part of this, let's go ahead and add another couple criteria to it where we identify it to be either bullish or bearish, meaning that the 10 periods above the 50 or below the 50. So to do that, we'll go ahead and close this report down, go back into the Explorer here again, and go to column E now. And this one we're going to call bullish. And the formula for this one, I'm going to go ahead and just paste in that formula that I made a copy of a minute ago. So that's our first moving average, which is a 10 period. I'll put a greater than sign. I'll paste in that same formula and then change that 10 to a 50. So now our formula reads that the 10 period simple moving average is greater or above the 50 period simple moving average. So same thing, if I feel confident with this, now I'll just make a copy of that whole thing. And I'll go to my next tab here, which in this case is tab F, and we'll call this one bearish. And then I'll go ahead and paste in that same formula. And now the only change I need to make is change that greater than sign to a less than sign. So now this formula reads that the 10 period simple moving average is less or lower than the 50 period simple moving average. So let's go ahead and click on OK, and let's see what happens here. So I'll go ahead and start that exploration. Now, as this is running, the other thing I want to point out here too is that another really powerful feature of the Explorer is that you can run multiple explorations at a time, and you can actually pass the results from one down to the other. So there's a lot of different ways that you can use this Explorer to your advantage. Now, what'll happen here is when you're going through and taking a look at a lot of the different explorations that have already been created for you, what you're going to find in a lot of the reports is that you're going to see reports like this that'll have ones or zeros in it. And what this means is that when you ask the Explorer or any function or any formula inside the program, actually, a yes or no, true or false type of question, what will happen is by default, when the answer is true, it'll come back with a value of 1. And when the answer is false, it'll come back with a value of 0. So that's all we're really seeing right here, is that underneath the bullish criteria where we asked if the short-term moving average is above the long-term moving average, it's coming back with a value of 1. So I know that that's true for that particular setup. And then of course, on the other side of the coin, it's false on the bearish setup. So what's nice about this now is I can then sort on these columns. For example, I can get all the bullish criteria securities together. So let's go ahead and open one up. I'll click on 3M, for example. And then I'll go ahead and click on the bearish and we'll sort on that one. And then we'll open up Amgen and I'll double click on that. And then we'll go and take a look at those two as well. All right. So this is Amgen. The reason why this one came up to be bearish is because that short-term moving average is dropping down below that long-term moving average on the bar that's being calculated right now. These are real-time bars, by the way. So I'll go ahead and close that one down. And then on the other side of the coin, this is 3M. And 3M on the opposite side of the coin, the reason why this one came up to be bullish is because that short-term moving average is up above that long-term moving average there. Okay, so go ahead and close that down there as well. Let's go ahead and go back into here again. Now, before I go any further here, one other question that I know that typically comes up with people in that, like those two examples that I gave you, like for example, the last security, I think it was Amgen that was going up, that they want to know if we can actually search or find securities where it's happening right now. And the answer to that is absolutely. So that, again, that's really one of the keys to the Explorer. And I'll show you how to do that here in just a second. All right, so next, let's talk about how to incorporate what's called the filter. And the filter is really the key to the Explorer. This is the part of the program that allows you to weed out those securities that don't meet your criteria, so you find that very selective list that you're interested in. So let's jump back over here again, and we'll open up our Explorer here again. So now the filter is this first tab right down here. Now, there's two different ways that you can use the filter. One way is that I could literally just paste in a formula like this. And by doing this, it'll go out and find the securities that meet this specific criteria. And if you want to use it that way, that's great. There's no problem with that whatsoever. But with that being said, let me show you a way that I actually like to use it instead. And that is, if that scan that we just ran, remember underneath this bullish and these bearish tabs right here, what happened is that when the formula comes back with a true answer, it plots a value or shows us a value of 1. So what we can do, instead of actually putting the actual formula underneath the filter tab, what we could also do is say, give me securities that come back with a value of 1 underneath this column E, for example. And the way that you identify that is you identify column with an abbreviation of COL for just column, and then the letter that you're interested in, which in this case is like E. So in other words, what this is going to do, it's going to say, give me every security that comes back with a value of 1 underneath tab E. So we'll go ahead and click on OK, and then we'll go ahead and click on our Start Exploration and begin this process again. So what this one's going to do now, it's going to go through all those 30 securities. And what we should end up with now is only securities that met our quote unquote bullish condition, where that short-term moving average is above the long-term moving average. Now, watch over here on the left-hand side, you'll see we've got 24 securities that came up underneath our results. And we have 6 securities that have been rejected out. And then the other thing is that if we click on this bullish column a couple times, you'll see that that doesn't change. That means that every security has a 1 underneath that particular column. And you'll see that every security underneath the bearish column all have zeros. So in other words, every security that we're looking at here, the short-term moving average is above the long-term moving average. So let's go ahead and open up American Express just to verify it. We'll go ahead and close down this report. And what we can do now actually is that we can go ahead and put those same moving averages on here. So let's go ahead and do that again just real quick, and we'll just verify it. And one other thing I want to do here is we'll go ahead and make that a 50-period moving average, and I'll make that line a little bit heavier. We'll click on OK, and then I'll grab the moving average and we'll drag that 10-period on there as well. So just to make this a little bit easier to work with, once I set this up, I'm going to make this a 10 period. We'll click on OK. So we've got our 2 moving averages on here. I'm going to save this as a default chart here, or a default template. And the reason why I want to do this is because after running these different scans, I want these charts all to have these same moving averages on here, for example. So a quick way to do that is once you get your chart set up the way that you want it, just right click anywhere inside the chart, choose Save as Default Template about halfway down here, and then it'll ask if you want to replace your existing. We'll say yes, and then go ahead and close down your chart, and then lastly click on the File, and then choose Delete Smart Charts. Smart Charts get saved for you automatically when you close down a smart chart. And by deleting them, what that does is that literally kind of wipes out Metastock short-term memory. So from that point forward, you're looking at every chart that you open up from that point forward will all look exactly the same. So let's go back into that report. I'll click on the Explorer here again. And by the way, whenever you run a scan, a system test, or an exploration, whatever, if it has an R inside of a set of brackets to the right-hand side, that means that there's a report for that system, meaning that it's already been run. And if that's the case, what you can do is you can just right-click on it, click on Report, and then it'll open up the report that you just basically ran. So again, we'll go ahead and sort, for example, like we just looked at American Express. Let's choose Apple, for example. I'll go ahead and double click on it, and then we'll close down this dialog, and now you'll see that Apple comes up with those moving averages already saved on there for me. So in my opinion, I think that's just a really good way to do that. I do this a lot, for example, like if I'm creating like a system test or any type of exploration or whatever, I kind of set up the chart to make it look exactly how I want. I'll save it as my default template. And then when I'm going back through all the different reports and so forth, and I'm opening up the charts, they all open up exactly how I want them to look. So it's just kind of a nice way to make sure that they do exactly what you want. All right, so Apple, of course, is now coming up with that short-term moving average above that longer-term moving average there. All right, now the next thing I want to talk about here is I want to talk about volume. Volume is one of those tricky items to actually work on. And the reason why volume is so tricky is because the volume is so volatile. I mean, any point from day to day, the volume can vary drastically. So kind of again, going back to our Apple chart here, if we're looking at the volume down here at the very bottom here, you'll see that on some days, like let's take a look at this high point right here. The volume here on March 19th was 185 million shares being traded on March 19th. And then if we look at, for example, like a lower volume day, relatively low, I should say, on February 11th, it shows a volume of 64 million. So again, volume can swing dramatically on these securities from day to day, to say the least, and from minute to minute, hour to hour, to, you know, all over the board. Now, the other thing I've got on my volume here to kind of help smooth things out, this blue line here, is actually just a 20-period simple moving average of the volume. Now, the question it might be is, well, why are you using 20 periods for a moving average? And the answer is because if I'm looking at end of day data, you can roughly figure that there's approximately 21 trading days in a month. So this, in other words, is about a monthly average for the volume for these securities there, okay? All right, so let me back up here for just a second. One of the reasons that people like to use the Explorer, of course, is to go out and find securities that are meeting, you know, a buy or sell type of condition right now. But another reason why a lot of people like to use it as well, or a very popular way, is they like to create a database that meets a particular criteria. So then they can set up this or follow this database on a day-to-day, process, for example. And so to set up a database of securities that might be of interest to you, you might be interested in creating a database where the prices fit within a certain price range. And maybe the volume, you know, is a certain volume number and so forth. So let me show you how we can go ahead and add volume to this particular scan. So we'll go back into our scan here again. And to give us an idea what we're working with, I'm going to go to tab G here, and we're going to call this volume. All right. And for our formula here, I'm just going to type in the word volume. So in other words, what this is going to give us, which is the data array of volume, for those securities. So again, I'll go ahead and get this started here as well. So the thing is with volume, let's pretend for a second that when building your database, what you're kind of looking for volume is you want the securities to meet a particular volume number, whatever that volume number is. So to help us kind of figure this out and kind of help demonstrate this, the first thing I want to see is I just want to see the volume on these securities at this point. Now, if I go ahead and sort on the volume column here, for example, you'll see the lowest volume right now. It looks like it's Honeywell at 673,000 shares being traded right now. And I'll click on it again, and the security with the highest volume is Apple. No surprise at over 62 million shares being traded right now. So let's pretend for a second that we want securities that are trading, say, at least 1 million shares, okay? How would we go ahead and add that to our scan? Let's go ahead and close this down, and let's add that criteria to our scan. So we'll go to another tab here. We're gonna be up to tab H here, and I'm gonna call this VOLFLTR for volume filter. So for this particular filter, what I'm looking for is I'm looking for the volume to be greater than a particular number. So let's say, again, 1 million shares. So type in 1 million, 1, 1, 2, 3, 1, 2, 3. All right, we'll click on OK. All right, and to run this scan, we'll go ahead and click on our start exploration, and we'll begin, and we'll do it again. So what this one's going to do is this one's going to come back with another column of data. It's going to either have ones or zeros in it. So let's see. So here we go. So here we've got our volume filter, and let's go ahead and sort again on the volume. So here you can see there's a number of securities here that do not have, or basically are not above 1 million. And for that reason, they all have a 0. And then the one with the lowest volume that's above 1 million is 3M, and it's just traded over 1,093,000 shares as of now, right now. So you'll see that that one's met the criteria. So let's say, for example, that we want to add that criteria to our filter, that I only want securities, which in this case are bullish and meet this volume criteria of 1 million shares. What I could do is I could go back to my filter, and I could say, not only give me securities that are meeting the bullish criteria, but it'll say, and tell me the securities that are also meeting the criteria underneath column H. So I'll go ahead and put column H there. So now I have my 2 criterias that are this is what's called a logical operator. So they're basically asking that, making sure that both of these items are true. And one more time, I'll click on OK, and we'll go ahead and start our exploration. So now, if we did this one and we did this one correctly, what this is going to do, it's going to weed out those securities that are under 1 million. And now you'll see we're down to 20 securities. And every security that we have in this list will also have a 1 underneath the volume filter column here. And the lowest volume security is 3M. Now, one caveat to what we're doing right now is I'm using the Metastock Professional or real-time version of Metastock. And since I'm telling it to go ahead and scan on current data, and we're in the middle of a trading day, or not finished with a trading day, I should say, that we're not looking at complete volume information. Okay, so just be aware that when you're running these different scans, so if you're looking for, volume meeting a particular number, again, you don't have complete information if you're in the middle of the day. All right, so go ahead and close that down. All right, now, since the volume filter, if we put a filter like this, the volume has to be greater than 1 million shares, and it weeded out those 4 securities, right? And some of them were pretty close to 1 million shares. Since we know the volume is so volatile, an idea for you is, rather than saying that the volume has to meet a particular hard and fast number, you might want to say that the average volume has to be at least 1 million shares. So to say that I want the average volume to be 1 million, all I would do is modify this volume to say MOV, open parenthesis, volume, do a comma, however many periods that I want to use, but I want to use 20 for basically a month. And then the type of moving average again, which is going to be S. So here's our formula. This is going to identify that a 20-period moving average of the volume is going to be greater than 1 million. So again, we'll click on OK. And again, to start our exploration. And now what we should find is we'll probably find a few securities that maybe got weeded out that maybe kind of make it through this filter because they average at least 1 million shares. So now you can see here our results are back up to 24. In fact, all 4 of those securities are back in here. And if I sort on the volume here, you'll see that those, again, Honeywell, McDonald's, Travelers, United Healthcare, they've all are back in because, again, they've averaged at least 1 million. So to check it, let's go ahead and open up Honeywell, and we'll close down the report, and let's take a look at the average volume here on Honeywell. And I'll zoom really as far as I can, but here's our average volume. The 20-day average is blue line. If I hover directly over it, you'll see that Honeywell is actually trades typically over 2 million shares a day, but for whatever reason today, it is really light. It's only traded 681,000 shares right now. So so again, by looking for the average instead of a hard and fast number like that, again, it'll make that that filter a little bit wider, and it'll catch a few more of those securities that might be of interest to you. All right, so that's one thought. Let me show you another one here. Let's go back into here again. And rather than saying, for example, that the volume is greater than a particular number, another thing, or a lot of people, what they want to know is if the volume is just greater than its average. So to do that, all we'd have to do is just say volume is greater than or above its average. Again, we'll click on OK, and we'll run this one. We'll see what this comes up with, and we'll run the same thing. So this is, again, that point that I brought up just a minute ago. Since we're running the real-time or professional version, we're not looking at complete volume information for today. And if we're looking to see if the volume is above its average, again, since it's not complete, there's probably going to be some securities that might meet the criteria at the end of the day that aren't meeting it right now, for example. All right. So in this case, now we're down to 3 securities: Home Depot, Walgreens, and Walmart. And let's go ahead and open it up here. You'll see that Home Depot, for example, go ahead and open up this one, and we'll go ahead and close down this report. And this one, as you can see, we'll kind of zoom way in here, show you the volume here. The volume on Home Depot yesterday was huge. I don't know exactly what happened with Home Depot. I don't know if it was in earnings, if they came out with their earnings yesterday, or what happened. But look at the volume yesterday. It was over 8.6 million shares. Today, it's just over its average right now at, what is it? The volume is at 3.2 million, and the average is 3.1 million. So it's about 100,000 shares over its average right now as well. But this is another pretty good example here of why you might want to look for securities where the volume is above its average or above average during a period of time. How many times have you ever seen a security that has absolutely had huge volume and started to take off, and you have no idea what's happening? I mean, you find out, of course, after the fact. But one tip might be is that if you look for volume that's really kind of out of the norm or above average, a lot of times you'll find securities that are basically something else is kind of happening behind the scenes, which of course you'll find out about later. All right, so that might be another way to do it. So let's go ahead and close that one down, and I'll go back into that report or the scan here. I'll go back into that volume filter. And let me give you one more idea here. And this idea, for example, wants to basically, we want to identify the percentage change. Like, for example, like a lot of people want to know what the percentage change is from one day to the other. So to do that, there's a formula, another formula that you'll want to familiarize yourself with if that's of interest to you. It's called a rate of change. And the way that the rate of change formula is written, it's written as ROC for rate of change, open parenthesis, your data array, meaning what do you want to do a rate of change of, for example, like the close, the volume, whatever the case is, the number of periods that you want to use, and then whether you want to see it on a percentage level basis or a point level basis, and you close the whole thing off with a parenthesis. So in this case, what I want to know is I want to see a percentage change of volume from one bar or the current bar in relation to maybe like the previous bar. So in this case, what I would do is I would replace data array with the word volume. And then for the number of periods, I'll replace the word periods with the number 1. And then I'll leave the percent sign because I want to see it on a percent level basis. Okay, so what this is going to tell me is the percentage change of volume on the most recent bar in relation to the previous bar. Now, since I'm actually not asking a yes or no, true or false type of question, I'm going to go back to my filter here, and I'm going to take that part out of the filter. So I'm going to just look for securities that are quote unquote bullish. We'll click on OK. And let's go ahead and run this one here. We'll go ahead and start this one. All right. Let's see what this one comes up with. Hold on for just 1 second. And again, if you have any questions, make sure and let me know, and I'll try to help you out here, you know, at the end here. Okay. All right. So it looks like we've got another column of data here underneath the volume filter. And if I sort on it, for example, we can then find the securities that are up the most in volume and also down the most in volume. So first of all, Walgreens is 67% higher. The volume is 67% higher today than it was yesterday. So let's go ahead and look at Walgreens. And then on the other side of the coin, we'll see United Healthcare, for example, is actually 73% lower than it was yesterday. So let's go ahead and open up that one there as well. So go ahead and close that down, and we'll take a look at these. All right. So United Healthcare, we'll kind of zoom in here. So United Healthcare, what that 73%, what it's looking at is this volume bar right here in relation to the volume bar on the 16th. So on the 16th, the volume was 3.3 million shares. And today it's only, what is this? This is 916,000 shares. So only less than a third of what it was yesterday. So that's United Healthcare. And then on the other side of the coin is Walgreens. And Walgreens actually is higher volume. Kind of zoom in on that one for just a second. But you can see that the volume today on Walgreens here, and Walgreens looks like a pretty good price drop there as well, is over 6.7 million shares. And yesterday it was a little over 4 million shares. Okay. All right. So let's go ahead and close that one down. Now, when running these scans here, and let's say that you only get a couple securities that are coming up, you know, that are meeting your criteria or not really, you know, something that you're looking for. The other thing you might want to keep in mind too is, especially if you're running the real-time professional version, is that you might want to run your scans through the previous day's close, for example. And the way that you do that is you unselect this box right here and then put in the day that you want to scan through. So for example, I'll choose the 16th and I'll click on my start exploration. And now what this is going to do is this is going to look through yesterday's close, and we'll see what kind of securities that came up in that particular scan there, and see what we've got there. All right. Now, the other thing that we could do here with this percentage change here too is we could also look for a particular number that might be of interest to us. So for example, again, I'll go ahead and sort on that volume filter column, and here you can see Walmart was 156% higher in volume yesterday as opposed to Monday. So let's go ahead and look at Walmart. We know that that's been a pretty big drop, and we'll go ahead and zoom in on that. And then Boeing, an increase in volume, but a drop in price, I should say. And then Boeing on the other side of the coin was 53% lower. So let's go ahead and open that one up here as well. So first of all, we have Boeing. And now this time what we're looking at here is we're looking at the volume bar here on the 16th in relation to the 15th. So Boeing, you can see there's a significant drop. It only had 10 million shares yesterday as opposed to 21 million shares the day before, or Monday. And then on the other side of the coin, Walmart, the volume yesterday on that price drop here, you'll see was traded over 24 million shares. And on Monday, it traded 9.6 million shares. So again, I mean, looking for volume, I mean, we could spend a lot of time and talk about different strategies and looking for volume, but hopefully this will give you some different ideas. And the other thing you could do too is that when you're looking at these volume numbers, what you could also do too is you could say, hey, I only want securities that are meeting a particular volume percentage change, meaning I only want securities that are maybe like over 100%, for example. So how would I do that? Let me just show you how to do that just real quick. We'll go back into the volume filter, and all I would do is at the end here, I'd just say greater than 100. And then again, if I wanted to add that back to my filter, I'd go back to my filter and I'd say, and COLH. So I want the securities that are meeting the criteria underneath column E and the securities that are meeting the criteria underneath column H. So we'll click on OK and click on Start Exploration. So now this particular one should only come back. We're looking through the closing price as of yesterday. And this should only come back with a couple, and it does. It comes back with Home Depot and Walmart. So both of these securities were over 100% increase in relation to the previous day. So for example, Home Depot, let's take a look at that one. We'll open that up. And Home Depot, you can see, had a massive jump, had a gap here yesterday. And you can see it gapped up from the previous day. And again, if we're looking at the volume here, look at the volume here on yesterday. The volume was over 8.6 million shares. And on Monday, it was 3.6 million shares. So well over double that, to say the least. So again, looking for volume and spikes and so forth. There's a lot of different ways to do it, but hopefully that will get you started there with that, using those particular examples. So let's go ahead and close those charts down. So then lastly, what we could do is, once you understand how to do that with the volume, I think that actually shows you a number of different possibilities there. Let's say, for example, that you want to add a price filter to your scan. This is actually pretty straightforward now that we know how to add volume. So let's go back into a report here, for example, and let's go ahead and close that one. Now let's go ahead and rerun this. Here's another thought here for you too, is that in this case, when I ran this scan, I only came back with 2 securities. But let's say that I want to see securities. I don't want to use the filter, right? I want to turn that off for a minute. 2 different ways to do that. I could either remove the formulas here underneath the filter, or a really quick way to do it is unselect this box over here on the right-hand side, and then go ahead and just rerun your scan here. And by doing that, then it's going to ignore the filter and it'll return back all the securities that you're scanning on. So in this case, for example, we scanned up 30 securities, and now we're seeing all 30 now in our report. Now in this one, you'll see that our date is the 16th. The security with the lowest price is Walgreens at $48.50. And then on the other side of the coin is United Healthcare at $4.49. So let's continue with our previous example that you're building a database and you want securities that are meeting a particular price range as well as a volume criteria. So to do that, let's say, for example, that we want securities that are trading, I don't know, $100, for example, but they're trading at least $100, but say less than $300. Okay, it's a particular price range. So to do that, let's go back into it, and we'll go ahead and click on tab I, for example, and we'll give this one the name of PRCFLTR for price filter. And all we're going to do here is we're going to say that the closing price has to be greater than whatever number it is that you want. So let's say, I don't know, $100, okay? And we also want them lower than a particular number as well. So I would say, and I also want the close to be less than whatever number you want. So say less than 300, okay? And same thing, if I want to incorporate that into the filter, I'd go back to my filter and then make whatever changes I want. So I'm going to say, give me securities that are bullish and meet the price filter of column I. We'll click on OK. And then, of course, I want to turn the filter back on. I just put a check mark there and start my exploration again. And so now what will happen is it'll give us the securities that met the bullish criteria, the short-term moving average above the long-term, excuse me, and the price of the securities are at least $100, but they're also less than $300. So to show you that, we'll look at the closing price here, and we'll sort on that, and you'll see the lowest price security now is Chevron at 117, and then the highest price security is McDonald's is at 252. So by doing that, you can see there's a lot of different ways to kind of go about this, to build your different lists and so forth. But once you've actually have gone through this and you understand how to work with the Explorer, the big thing is then what you need to know how to do is how to save your results. So then you can use them, however you see fit. So this is really simple. Let's say, for example, that we just ran a scan here. And these are the securities that have passed through the filters that I'm looking for. So this is my list that I want to save for future reference. very quickly over here on the right-hand side, just click on Save List. This will open up a box where you can either add it to an existing list, or you can click on this Create New and you can create a new list. So let's say, for example, I'll give this a name. I'm going to call this November 17 watch list. We'll click on Create. And then what's important here, you'll see that it has a 0 inside those parentheses. That means that there's no securities inside of it at this point. What you need to do is make sure and click on the OK button here. Don't click on the X, but click on the OK, and that'll add all these securities to that list. Okay. Now, let's say, for example, that you've got a list like this, but you don't want to see all these securities. You want to create a watch list out of this, but you don't want all of them. All you have to do is pick and choose the securities that you do want, for example, right? Once you've got them selected, just right click on any of them and then choose Add to Custom List. And again, you can add it to an existing list or click on Create New. And one more time, I'll call this November 17 selective list. And we'll click on Create, click on OK. And again, close down this report. So now what's nice about that is that now once you've gone through the work of doing these scans and finding the different securities that are of interest to you, a really nice way to do this is basically once you've created your list, now you've got these two lists here. I've got one that has 6 securities in it, and then I've got one that has 15 securities in it. So then I can just open up the first security, the one that's of interest to me. So I'll choose like 3M. Click on Open Chart. And then from here, what I can do is I can apply any type of analysis that I want to it. So let's say, for example, that maybe I want to put like a, I don't know, like a MACD to it or an RMO. An RMO is a really popular system, for example. But what you could do is you can set up this first chart, make it look exactly how you want. Maybe even zoom in a little bit so you can see it a little bit better. And then in the lower right-hand corner of your screen, click on that right pointing arrow. And now what you'll do is you'll cycle to that next security in that watch list. So then I'll click on it again. And what's nice about this, very quickly, I can rip through the securities that are of interest to me and look for those perfect buy and sell setups that are of interest to me. And as I'm going through here, when I get to the end of my list, and if I keep clicking on it, then what'll happen, it'll cycle right back up to the first security inside that folder there. So it's a really nice way to kind of tie that whole thing together once you get it set up the way that you want. All right. So with that being said, let me just tell you a little bit about my service. As Jeff was saying before, the company that we have here is called learnmetastock.com. And when you go up to the website, this is what you should see on our homepage. And what we do is we help people with their Metastock program and also the different plugins and add-ons as well. And also a lot of different types of trading strategies in addition to that. And the way that we do that is that up here at the very top, if you click on live classes, this will give you an idea of the class schedule that we do for the week. So we do up to three live classes per week on Tuesdays, Wednesdays, and Thursdays. And what this class schedule always rotates, for example, like to different subjects, for example. But where most people spend the majority of their time once they subscribe to the Learn Metastock site is underneath this video library here. And inside this video library, we have well over 100 plus recordings up here. And the first thing you'll see right up here at the very top is we keep track of our live classes. So we do our live classes on Tuesday, Wednesday, and Thursday at noon US time. And I know that probably the vast majority of my clients, for example, don't live in the US, and 12 o'clock doesn't really work for them because our clients are all over the world. So what we do is we record our live classes and we put them up on the website. We put our last 3 live classes typically up there, but right now I have a few extra ones up there as well for another. I did a training session for a partner in Australia. We did 3 different live classes on the LCI system that's in Metastock. And of course, that's on the website there as well. But anyway, as you scroll down here, you'll see that we've got our classes divided into different categories. For example, like if you're brand new to technical analysis, you probably want to start with like just the introduction to technical analysis. Click on the Watch Now button. And what this will do, this will open up the page that'll have the video where, of course, you can watch the instructional video. And then over here on the right-hand side, what you'll also find is that whenever we write formulas or create anything, you'll find that you'll be able to download them by clicking on the buttons that are associated with that video. So I'll talk about that more here in just a second, but underneath here, you'll find a lot of the videos also have quizzes available there as well. So again, if you're kind of getting started and really want to test your knowledge and make sure that you're understanding exactly what you're seeing and so forth, you can watch these, you can watch the different videos, for example, and then you can go to these different quizzes and you can take quizzes on to kind of reinforce exactly what you were seeing. So I'll go back here for just a minute. And underneath that, then we've got a whole section here just called Getting Started with Metastock. Same thing. We'll go down here a little bit further. I'll just show you some of the different categories, but the forecaster, the expert advisor, option scope. We've got a number of videos here just on system testing. And system testing is this is an area where I get a lot of questions about how to back test trading ideas. And you'll see that we spent, quite a bit of time going through and showing you a number of different ways to use that. We have a number of videos just on using the Explorer, formula writing. This is a section where depending on what you want to get out of the Metastock program, we can help you. If you just want to learn the basics, and plot charts and maybe a few indicators or run an add-on, of course we can help you with that. But to really get the most out of the program, if you can at least understand a little bit about the formula language, I think that would go a really long way to help you get the most out of it, because everything is written or basically derived off of formulas. And if you can at least read that formula and see what it's saying, it might give you a little bit more faith on why it's telling you to buy or sell at different points. And again, we can help you in a lot of different ways there. We have a number of videos on just on the RMO, system stops. This is another really important area that a lot of people kind of overlook when they're looking for trading strategies. Number of videos on indicators, but probably our most popular section is this trading strategy section. And here you can see what we do is we'll take a trading strategy out of a book or a magazine. Stocks and Commodities, by the way, is probably my favorite resource, by the way. But we'll take a published article and we'll show you exactly how to duplicate it inside the Metastock program. And like what we do with that is, again, when you click on this Watch Now button, this, of course, will give you access to the training video itself. But in addition to that, with every trading strategy that we actually show you how to do, whenever we create that formula, you'll have access to the formula by clicking on this button right here, and this will download the formulas directly into your Metastock program. So the point being is that I know everyone's time is extremely valuable, but I have spent a massive amount of time here with Metastock over the years. I started working with Metastock back in '92, and as you can see, we've got a massive amount of information here on our website, and I can save you a lot of time and effort if you're interested in signing up for the Learn Metastock service here. So that's what I've got here for you. I'll let Jeff explain a little bit more about the particulars about how you can get started with us, but I hope to see you in class.
All right. Thanks, Kevin. Appreciate it. Let's go ahead and kind of thank you again, Kevin. That was really good. I love how Kevin likes to show parts of the scanner and get kind of stuff in there. He does such a good job kind of showing off really the things that work well in the thing. So anyway, let me go ahead and change the presenter over here. Also like his favorite, how he likes to talk about the scanner. Again, one of my favorite parts of Metastock. In any case, let's go ahead and kind of, with learnmetastock.com, like he said in his section, he does 3 live training classes per week. He offers formula downloads. There's hundreds of videos that are actually included, videos on the basic, the expert, the system tester. All of this is part of his service. And again, I've always looked at Metastock as kind of a big tool that you can use. We've been developing it for more than 30 years. It's won 28 years in a row. And the better you can understand it, the better it's going to work for you, just like any other tool. And what I like about Kevin is like the ability to kind of explain things in a very, very understandable manner. And we brought on 2 sales reps over just recently over the last couple of months, and both of them, all they did for the first week was to watch learnmetastock.com videos. It's just so good at kind of bringing people to where they need to be able to use Metastock as successfully as they need to. So in any case, the price for learnmetastock.com is $99 per month. What we're going to do, just to match with the offers that we're doing for Metastock, is we'll give you 3 months for the price for that 1 month cost. So if you pay $99 now, you'll get to be able to use it into December, January, February. Matches really well if you're brand new to Metastock, because that's also when you'll be using Metastock too. So it's about $33 a month is all. You can sign up for that at metastock.com/conf-promo. You can give us a call at 800-882-3040, or you can also visit us online at metastock.com/sales-chat. If you're a new subscriber to Learn Metastock, I'd encourage you to Metastock, I'd encourage you to try this out. But also, if you're an existing subscriber, I would recommend you take a look at this. I love the fact that he has all of the formulas that are available, and you can just download them off of his site, and all of the stuff that he kind of works on and puts into that site is available. So that's part of that. You should also pair that up too. If you haven't used Metastock before, I might remind you that Metastock's won best software in its price category by the readers of Stocks and Commodities 28 years in a row. You can sign up for that at the same time. They go hand in hand. Metastock.com/conf-promo, 800-882-3040, or metastock.com/sales-chat. Let me talk real quick about our sponsor today, Stocks and Commodities Magazine. I want to say thank you to Stocks and Commodities for sponsoring the event. Great magazine. Again, if you do that subscription, not only are you going to get 3 months of Metastock, 3 months of Learn Metastock, but you'll also get 5 months. So give us a call, 800-882-3040. Visit us online at metastock.com/conf-promo or metastock.com/sales-chat if you need to chat with us. So, and our next guest is Marina. Marina has been done, and I'm not even going to try her last name because I always slaughter it when I do, but Marina has done quite a few different events with us. She specializes in helping people trade and with confidence and ease, according to her bio. But she does do a really good job in terms of talking. I love her presentations. I think she does a really good job. We've had her on here, I think 2 or 3 times, and she's always invited. She's always welcome. We always like to have her in here. Marina, how are you doing today?
Hi, Jeff. I'm doing great. Thank you so much. Yes, I think this is my 2nd or 3rd time working with you guys, and I enjoyed it so much. Thank you.
Yeah.
Oops,
Awesome.
hang on. Let me just. Oh, did I just stop sharing? I
no,
did.
You
right?
got it. Yeah, you just have to
am I
hit present.
sharing?
You are sharing, and I think.
Oh, okay.
Yeah,
Because I still see you. I'm looking at you.
Oh, well, here, let me go away. How about that?
Oh no, you can totally still be there. That's why I was wondering what's happening.
Yeah. No, we can see your screen. We can hear you.
Okay.
You sound good.
Awesome.
I'm gonna go ahead and head out of your way.
Okay, thank you so much. Hi, everybody. How's everybody doing today? I would love to hear where you guys are from. There's a question box or a chat box. I don't know what you guys are get to see on your end, but let me know, where are you guys coming in from? Because I see there's so many people here, and I'm really, really excited to get to know more about you guys. So tell me, where are you from? I want to know. And don't be shy. Yeah, I'm not seeing anybody writing. Hello, hi. Are you guys there? Send me in the chat box right here where you're from. There we go. Kazakhstan. Wow, that's pretty far. Louisville, Kentucky. London. Oh, look at this. And Steve from the UK, Montreal. Wow, all over the world. I love this. This is one of the coolest things about trading, is that we can literally really do this anywhere in the world. New Zealand, Northern California. Which part of Northern California, Henry? Colombia. Where in Colombia, Jorge? I've traveled to Colombia a couple of times. Cincinnati, Ohio, Calgary, Hawaii. Nice. Wow, I'm loving to see where you guys are all from. Palm Beach Gardens. I'm actually going to West Palm Beach in the next couple of months. In a month, wow, time's flying so fast, I don't even realize anymore. So awesome to see that you guys are all here from everywhere. And Jeff is from Salt Lake City, Utah. My sons are dying to go to Salt Lake City because that is where the United States climbing team has their facilities, and my family is climbers. So Medellin, that's where I was actually, Jorge, Medellin. Ricardo from Santiago, Chile. I hung out in Chile for quite some time. Another, Richard is from Calgary. There's somebody else here from Calgary. There's quite a lot of people here from Canada and Chicago, of course, the US. Very, very cool. Well, thank you everybody for being here. I am really, really, really grateful. And Spain. So just a quick little side note, we were supposed to go to Spain in 3 weeks, but my husband actually had a climbing accident, so we had to cancel it. But we were tickets and everything, and I'm very bummed, but we are planning to move to Spain in a year. So the trip was actually for us to go and stake it out, like to see where exactly we wanted to move and whatnot. We're just moving it over now to a couple of months once he's healed to be a little bit better. But Spain, where in Spain are you from, Francisco? India Harbor Beach, Florida. Nice, Jeff. And what are you guys trading? What are you guys, I know that, Metastock is mainly, one platform, but what are you guys using it for? Like, what do you guys trade? I would love to know a little bit more what you are all, looking into. Because even though I am here to present for you, I'm sure that you have heard so much. My goal is not only to present, but for me to be able to really help you guys. So I love to get questions so that I could answer you all the different kinds of feedback and anything that I could really let you leave today knowing, okay, I learned this and this is really going to make a difference, right? So that's my goal for today. So the more questions you guys send me, the better it is for everybody, right? Andalusia. Yeah, we hung out in Andalusia before. This is not our first time going to Spain. Like Malaga area, Playa Herradura. Playa Herradura was one of my favorites. Susanna is mainly indexes. So crypto, okay, options. Awesome. All right, guys. Well, let's hop in. So I am going to be, again, presenting to you guys today, but the goal is for you to be able to ask me questions if something comes up during my presentation so that I could elaborate or help or whatever, right? So that you guys really walk away feeling, you know what, I learned something, and that's the goal. So just a quick intro. I am Marina, the Trader Chick. That's me right here. And today what I really want to cover is I want to get back to understanding some things that we overlook when we begin to hop in and start to trade. A lot of us overlook so many things, and today's goal for me is really to be able to talk a lot about stuff that you don't look at, and I can guarantee will completely up level your entire trading or investing way. That I know. So we're going to be talking about trading and investing, busting myths of day trading, what there is really to trade, the trading lingos, brokers, commissions. A lot of these things people don't fully grasp yet are already live in the markets, which I say they are donating money to the markets. Because if you don't get the basics, like when you hop in a car, if you don't know where the brakes or accelerators on, chances are you're going to be crashing, right? And unfortunately with financial markets, you don't need, people believe that they could kind of just like take shortcuts. So, and that's what we want to avoid. And just a quick official intro. Like I said, I am Marina the Trader Chick, and I'm actually coming to you guys right now from Antigua, Guatemala. I live in Antigua, Guatemala. That's me and my two little boys. Well, they're not really little. My two men, my two boys. And so I love living in Guatemala. I love being an expat. I've been an expat for over 20 years. Before I became a day trader, I was a fitness instructor. And why do I bring that up? And a travel writer. Mainly because a lot of people believe that to be a day trader, you need to come from financial, math backgrounds, economic backgrounds. Not at all. I was literally a fitness instructor. I was one of the very first fitness instructors in Manhattan to teach spinning and Pilates. Yes, I'm a little bit older. And I'm a travel writer because travel for me is crucial. And I actually still have a really fun travel site that was my first baby online. I'm trilingual. It's a little fun fact. And the main reason why I bring this up is I recognized, well, first of all, the reason why I'm trilingual is I'm an actual Soviet Union refugee. I moved to the United States when I was really small. So Russian is my mother tongue. I learned English when I was tiny. So for me, English wasn't a learning. It wasn't learning, right? Because when you're really small, it kind of becomes instant. It's incredible how quick you learn a new language. Within 3 months, I was fluent. But because I've been now an expat for almost 20 years in Central America, Spanish, which I'm fluent in, excuse me, came to me I was in my 20s when I learned it, right? So it was an entire process. And anybody who knows about learning a new language in their later years, it's this whole process. You have to translate everything before you get it out, and then you have to bring it back in, translate it. You have to have somebody that's really patient with you, and it's this commitment, this ongoing practice, because if you don't learn anything. But then one day, after putting in all that time, you wake up and all of a sudden you just speak the language. Maybe not 100% fluent, but you don't have to go through that process of translating everything in your head. And when I began trading, I was truly struggling. First of all, I never learned from the basics from the beginning. I was kind of just thrown in, even though I was with all these different academies, spent so much money, but I was never taught like the beginning. I always say that I was shown how to put in a window without learning how to put in the walls first that holds up my window. And basically, after struggling and quitting and coming back, I realized that the market has its own language. And I think because I am trilingual, I'm able to recognize that it is a language that it speaks to us. So it's just a little fun fact. And the coolest part of it all is that you could work from anywhere. That's the best part. I have one chart because we travel so much. We normally do travel 3 to 4 months out of the year. I could take my laptop anywhere. I have one chart laptop, right? And I have been featured on I used to, before the COVID pandemic, I used to do a lot of speaking gigs with Money Show, Traders Expo, and a lot more. So if any of you have ever met me, you can say hi. So before we totally hop in, I do have a presentation. A presentation worksheet completely for free for you. So you can get it right here at makingofadaytrader.com so that you can go over it. It's completely free, makingofadaytrader.com. You can go and get it right there. Okay, so before I move on here, let me see, there's a few people that answered. I'm doing tested futures from doing it after the real money. Yeah, Ricardo, make sure that you are just, really understanding before you would start to donate your money. How to study every day at night, charts, find tomorrow. So I will show you what I do, Dinesh. I don't, because of what there's some misconceptions that I would like to maybe help you get past. You speak 7 languages. That is crazy impressive. I really respect that. I know how hard it is. All right, guys. So let's jump in. Okay. What in the world is day trading and why is it not investing? So this is a really different thing, right? Because whenever I tell people I day trade, oh, I want to learn how to invest. No, apples and oranges, right? I actually always say I day trade to take money from there and then I go invest. 2 totally separate things. So what is it? Why is there such a difference? So unlike investing, in day trading, you do not want to diversify. Super important. If you're going to get anything out of my entire presentation, I hope that this could be your thing. You do not want to diversify. Why? Here is a perfect explanation. Imagine your child coming up to you and saying, hey, mama, hey, papa, I want to learn how to play a musical instrument. And you're like, oh, awesome. What do you want to learn how to play? And they respond, well, I want to learn how to play the piano, the flute, the drums, the guitar. And you look at them and you're like, well, you need to first learn how to play one and master so that you can move on to the next, because you're not going to really learn how to play it. It's the same thing with day trading, guys. This is instruments. You cannot be in Forex, options, crypto at the same time. They are so remarkably different. It's literally getting into 3 different vehicles on 3 different terrains and thinking that you're going to be able to drive them all at once. It's impossible. You need to pick your one thing. And when you pick your one thing, that's when you master it, and then you can move on to the next. I'm really going to dive into that so you get a really, really good idea of what I'm talking about. Okay, the other thing with investing and day trading, investors actually care about their companies that they're investing in. Like if Apple is coming out with an iPhone 13, I'm going to care about it if I'm an investor. But do I really care if I'm day trading it? Not really. It's not going to affect my day, maybe on the day of, but even then it's not, because there's so many other factors. We, as day traders, only focus on the technicals. We do not care about the value overall, because what's the point? We're in it at a very short time frame. So we're only looking at the technicals. Investing is totally different, because we could see the market go up and down when we're investing. But when we are day trading, we profit from the market going up, and we profit when the market goes down. That's the beauty of day trading. It's all about technicals. Okay, so now it's time to bust some of the day trading myths. And what I like to call these myths is more of limiting beliefs. Why are they limiting beliefs? Because when you have a limiting belief, you are limited in what you are doing. But the second you bust it and realize, wait, this was total lie, this is not even real, all of a sudden it opens you up. So I really want to bust through some of these, because I can guarantee a lot of you guys have these without even realizing it. And just knowing that they can be busted, you are free to be able to move to the next level. The very first thing and foremost is everybody says day trading is risky and it is gambling. Now, imagine you've never ever been in a plane. You want to learn how to fly a plane, but instead of taking classes and all that other stuff, you sneak into a plane, somehow miraculously manage to turn it on and somehow go. Do you really believe that you're going to land it safely? No. It's a suicide mission. Why is it that people who have some money think that they could just enter the market without having any idea to put the money on the table, no real strategy, no understanding what's going on, and think they're going to win? For sure it's gambling when you're doing that, right? That's ridiculous. It's a gamble no matter what you do. Right? So what is the difference with gambling and actually not being in a risk when you're trading? You have a solid strategy. You have risks in place. You have profit targets in place. You are in control. The market is not controlling you. Okay? The other big misconception, you need $25,000 to start. Crypto, you can start with $10. Forex, you can start with 50, futures 100. There's so many different markets that you could start. You do not need this kind of money to start. And even day trading stocks, if you do not have a margin account, and I'm going to talk a little bit more about margin accounts in a few minutes. If you do not have a margin account, you just have your cash account, you can day trade without a $25,000 thing over your head. Really huge thing, because so many people stop themselves before they even get started because they believe you need $25,000. No. Another one is you have to be a math whiz and financial background. I was a fitness instructor. I do not understand numbers at all. As a matter of fact, they freak me out. It's all about technical analysis. It's all about patterns. It has nothing to do with math whiz and financial background. Do not stop yourself because that is something that somebody once said. Not true. And the other thing is that it's so stressful and chaotic. Yeah, sure. If you have this going on, such a misconception that you need to have multiple monitors and multiple indicators. Oh my goodness, that will give anybody total stress, total anxiety, and it is completely and totally non-sustainable, right? And on top of that, you'll constantly be going through analysis paralysis. I was living in analysis paralysis when I first began. I had 3 monitors going on, 10 indicators. It was horrible, horrible. It was killing me. And then I was losing money left and right. When I finally came back, I went to one chart. First, I went to bare naked price action. And then eventually now I'm up to 2 indicators and indicators only. The other thing also is really important, really good charting software, and that's the only real software you need to get, has amazing indicators already there. Do not go and spend money on the next shiny object until you really grasp what it is that you need, because let me tell you, spending money on the next shiny object is not going to give you the money you want. If anything, it's only putting more money into the people creating these shiny objects. You do not need that. Okay. Now, somebody mentioned to do all this work about studying and research. Think of it like this. All right. You could be going into Amazon, doing all this work. You're ready. And then the next day, Jeff Bezos announced that he's getting a divorce and the stock tanks. Why? Why should a divorce matter to anybody? It shouldn't, right? But the point is that you need to be in front of your computer. It's all about the technicals. It's all about the technicals, okay? Research and news, honestly, the buying the rumor, selling the news, a lot of experts love to just hear themselves speak because they have their own agenda. And unfortunately, they have a place where they could speak loudly and affect a lot of people to move in their agenda. You have to be smart. Just watch and do your own market research. You do not need to overkill it because it's not sustainable. Okay. Now, another huge misconception, and unfortunately, I'm pretty sure almost every day trader has gone through. I certainly was a victim to this, and that is called trigger happiness. Being in and out of trades nonstop. I used to do 40 to 60 trades in a 2-3 hour period. I mean, that is ludicrous. I was losing money on the commissions alone. No. Now, I hate this analogy, but the reality is, imagine a big game hunter. When they go hunting, do they really want to start shooting at any tiny little rat or mouse or prairie dog? No, they wait for the big game. They wait for those solid trades. Pro traders take 1 to 3 trades per day. That's all you need. And they kill it. Okay, so this is not real. You do not need to be in and out of your trades. What you do need to do is know that you have to be patient and do what the market is telling you to do. And I always say the most radical way to trade is conservatively, because conservatively you can be sustainable. If you're in and out, that's aggressive, it does not work. And smaller profits daily bring you larger profits yearly because it becomes a career. It is a consistent pathway. It is not that huge aggressive win, which you're going to lose even more the following day. Now, another thing, and this is something that I coined, it's called fear of missing a trade, FOMO. What is this? You've probably all heard of FOMO, which is fear of missing out. So fear of missing a trade, it is an actual syndrome. I think it is a disease that traders, especially aspiring traders, have. If they see a trade and they miss it for whatever reason, they're chasing it, right? They're chasing after that trade. They get in when it's too late. It stops them out. It takes them into revenge trading. It becomes very emotional. Here's the reality, guys. There are thousands of new trades coming. Thousands. Do not fall victim to the fear of missing a trade, to FOMO, because all it becomes is emotional, leading you down a spiral of a loss and horrible revenge trading. Okay? Now, I want to talk about what to trade, because when you speak to amateur traders, they will tell you they're trading all these things, right? Oh, futures, options, crypto. Oh, they're so cool, right? And they're losing at all of them. So it's really, really important to understand what to trade, especially for traders. Like I said before, choose your one. So I'm going to talk about this now. The majority of people say stocks, like especially if they're totally new. But stocks is like not even 25% of all the markets that you could trade. As a matter of fact, it's like 20% today, right? So let's really break this down. Forex, we all know foreign exchange, it's currencies. How does it work? It's pairs. You work with different pairs. Now, if you take too many pairs, what does that mean? You are sitting up all night listening to one government, another government. Oh my God, this. So if you're going to do it, pick 1 or 2 pairs that you really are devoted to, right? Because at the end of the day, it's not even about the currency. It's about ego heads of the governments deciding who they like and who they don't like. So a lot of times you'll be thrown off. But if you're really focusing on one at a time, you will learn, you'll be able to focus a lot better. Okay? Does that make sense to you? All right, equities. When people say, oh, I trade stocks, I immediately know that they are not doing well because amateurs say stocks, right? There are 5,000 different stocks to choose from. Are they trading all of them? Because that's ludicrous. They're going to end up losing all of their money. So what do you do if you are a stock or an equities trader? You get a niche. Are you a sectors trader? Do you trade pharmaceuticals, tech, entertainment? Choose that. All right, what if you want to do big caps, small caps, indexes, penny stocks? I do not condone penny stocks. Penny stocks is the most manipulated sector, but if you are going to do that, make sure you have the proper broker, because not many will permit you to short penny stocks. There's all these things. And I know a lot of really successful traders that trade only one stock: Apple, Amazon, Tesla, Facebook, Microsoft. They know those stocks inside and out, and they are killing it. That's a pro trader. Futures. When I hear people say, I trade futures, again, I know that they are not doing well, because, well, are you trading wheat, crude, the indexes, ES? What? You can't possibly trade wheat and ES at the same time equally. They do not even remotely run on the same markets, completely different arenas. So if you are going to trade futures, what is your instrument? I personally trade just the ES, which is the S&P 500 on the futures market. And it is an awesome market. It is beautiful, but that's my thing. That's where I focus. That's what I love. And I know it inside out. Options. Again, really focus. I am not an options trader, so I cannot give you any advice on this. But if you're going to be doing it, you need to really focus and niche it down. And then crypto. When people tell me crypto, I'm like, what are you trading crypto? Because I don't know if you're doing well. Bitcoin is not all of crypto. Bitcoin is a currency part of crypto, and it's obviously the most popular, but crypto market is 6,000 altcoins and projects. So when you say crypto, I really hope that you're narrowing it down and really understanding what it is in crypto that you are day trading. Because again, you could invest in many, but for day trading purposes, and also, are you leveraging? What are you doing? Because there's so many aspects to it all, okay? Now, I want to talk about brokers and margin accounts, like I mentioned before. Are you guys hearing me? There's somebody that says, okay, I see that. Thanks, Jeff. Okay, so let's talk about brokers and margins. First and foremost, what is a broker? I'll tell you one thing for sure. They are not your friend. They are not there to help you. They want your money, because the only way they are actually making a business is when you are in and out of positions. So are they really going to be helping you? Chances are they prefer not to, because the more you lose, the better for them. Then you go in more, and it's this whole spiral. Margin accounts. I actually call margin accounts loan sharking. Why? Because it is totally not mandatory or obligatory. It just sounds fancy. They're telling you, the broker, oh, if you have this amount of money, we can give you extra if you want to buy more. So basically you are borrowing. Oh, and if you lose on the margin account, guess what? You owe us interest. You got to pay it all back. And if not, we're coming for you. Stay out of margin accounts. Nobody needs a margin account. And if you're going to be with brokers, this now goes back to, what are you trading? Because if you're trading crypto, why would you be with a futures broker? Or I know that Tasty Works, an options platform, has crypto available. What does that mean? Oh, it means that they can maybe do crypto, but they're going to be charging you so much more. They're not going to have the right frequency for the crypto. So if you're going to go for the broker, you have to first know, what are you trading? What is your one thing? Because then you can go and find a specialty broker that works really well with what you are trading, for commissions and for everything else. Okay, really important. Now, I want to talk a little bit about commissions, because a lot of people don't get it. Like I said, if you are going to be doing a crypto, why not go with the best exchanges? Kraken, Binance, Coinbase, they will give you the best commission rates. They will also have the best feed going on, because that's their specialty. If you are going to be doing futures, you need to go and look for a futures broker that gives you the good feed, that gives you the best commissions. If you're doing equities, this is something you need to understand. Otherwise, you are literally going to be just donating even more money to the table, because it shows that you don't really understand the basics. And trust me, every cent is going to count, because day trading, we lose a lot of money. Platforms. Guys, you cannot be Formula One drivers in a minivan. If you are going to be an actual day trader, you need to, first of all, what are you trading? Find that instrument, and then go and get yourself a really strong platform. There are amazing platforms that offer everything that you need, but if you don't know what you're doing, do not just go and put money on the table just like that, because you will end up losing it. Okay, really quickly, day trading lingos. Day trading lingo, guys. Okay, what is day trading lingo? Why are we even looking at day trading lingo? Because I cannot even tell you the amount of people putting money in the markets that don't even know the difference between a sell and a buy. Yeah, and I'm not even talking about the other stuff. So I want to go over this super quickly so that you guys understand the basics, right? What is intraday trading? It is literally that. You are in and out of the positions in that same day. There is nothing else. You're in and out of the position. If you're overnight, you're not a day trade. You're not intraday anymore. You are now swing trading. Why does that matter? Because if you are day trading, do you really want to look at a yearly chart? Do you really want to look at a weekly chart? Why? You're in it for whatever it is, 5 minutes, an hour. So you want to be looking at the right type of chart time frame, right? And that is when you understand what your positions are. Bull market, pretty basic. We all know market going up, market trending up, bear market, market going down, market trending down. And there are 3 trends. People forget this, but it is so crucial. There is the upward trend, the downward trend, and the sideways trend. The sideways trend, I call this the day trader's worst enemy, because this is that indecision area where we end up losing the majority of our money. As long as we can avoid it, we are good. But there are 3 trends. Now, super, super important. We all know technically, logistically, we have to have a risk management in place. A lot of people put in mental stops, which is just such a big lie, because you never, ever do anything with a mental stop. You end up losing your account. However, you need to first and foremost have a risk management in place. What does that mean? It means you are telling the market, this is all I am going to put on the table for this trade. This is where I am, and you're going to stop me out right here. I don't care if it goes in my direction later. This is what I put in. Now, what's important, you have to have it. It's a physical thing. It's not a mental bullshit one, right? And the other thing is profit target. People don't realize that profit target is as important as a risk management. How is that so? Because you have to tell the market where you want to get out. This is what happens to a lot of traders, because they're like, okay, this is my profit, but wait, the market is going in the direction. I'm going to remove it. I'm going to do, oh no. And it turned around and stopped you out. What happened? I'll tell you, greed happens. Greed kills us. You guys need to have a profit target. If you are day trading, if you want this as a profession, put that profit target in. You could have split targets, but get your first money out. Okay, super important. And back to charts. Back to charts, platforms. Metastock, guys, is a fantastic, fantastic platform. All right, there are others, obviously, for different instruments, but you need to have good, strong charts, because you cannot be a Formula One driver in a minivan. You cannot be on Robinhood scrolling through thinking that you're going to be a day trader. No, that is not. That is amateur, and that's why so many people end up losing money, and that's why Robinhood is making so much money. Okay, understand that. Indicators, I've mentioned this before. Strong charting softwares give you awesome free indicators that are already included. Make sure you are using the right indicators. I have people, oh, when I use these indicators, all these fancy blah, blah, blah names, simply because they hear from all over the place. And I'm like, okay, cool. So why do you use this indicator? Oh, I don't know, but somebody said it was good. Well, how is it helping you? You have to have an indicator on there that actually works for you. If it's just there because you heard somebody else mention it, not gonna happen, right? So really do your homework. And like I mentioned before, trending markets. When you hear trending markets, an amateur would immediately only think upward. No, we have the downward, which day traders make just as much money on, and then there's the sideways market, as a sideways trend. Okay, so what is the difference between a buy and a short? So what is a buy? Buy is when you're obviously putting in for a higher profit. You're going long. What does that mean? You're going long. You're entering at a lower price point, exiting at a higher price point, and it's taking the profit in between. What is a sell? Going short. It is literally the opposite. It is when you are entering the market at a high price point, exiting at a lower price point, and taking the money in between. Don't get too lost in the explanations. This is it. It's as simple as what I just said. Now, Another really important thing for you to understand. What is the difference between a market entry and a limit order or an order waiting? Market entries are for amateurs. Why? Because market entries maybe could be used if you're investing. If you are trading, you need to tell the market exactly where you are entering. That is called the limit order. You're telling the market, this is where I want you to fill me. If you don't fill me there, I don't want to be in it. Because once you do a market entry, two things happen. One, that means you're just running and chasing a trade because you're not prepared. You're not telling the market where you think you want it to enter. And two, slippage. Do you guys know what slippage is? Slippage is when you enter market entry and it takes almost 25% of that particular entry away right away. So before you even start, you already lost 25% of whatever you're about to make. Limit orders. Same important as with a stop limit. Once you are in the trade, you put in that stop limit, because if you're seeing the market go the wrong way and you have your stupid mental stop in, you start to chase it, you press the market entry, again, you lose 25%, and two, you're showing the market that you really don't have a clue. You need to have that stop limit in. It's so important. And I kept on saying technical analysis, technical analysis. This is the backbone of everything you need to know about trading. And this is that language that the market speaks to us, and it's free. It can be done on any charting platform as well, as long as it is a good, strong charting platform. What is technical analysis? It's using your indicators, your areas, divergences, reversal patterns. So what are areas? We hear about these areas. We know areas exist, but do we really apply them? Do you know that 25% of Formula One drivers every season have either a fatality or have a huge accident? 25%. So when they get into their car, do you think they're just going to hop in and press on the accelerator? Hell no. They have their helmets on. They have their fireproof uniforms on. They have their seat belts on, because they know that will protect them. What are areas? Areas are our safety gears. So what is an area? First one is a resistance area. It is literally where the market is hitting the ceiling over and over and over again. It is an area that the market is respecting. And if you do not have this drawn in and aware of it, again, no mental resistance areas, they don't work. You have to have it drawn in, because that is telling you, you know what? The market is respecting this area. Don't go in, because let it either bounce off or break through. What is a support area? It is the floor of the market. It's literally the opposite, is where it's hitting it over and over and over again. You need to have these drawn in. You need to respect them, and this will save you so much money. Reversal patterns. I live for reversal patterns. This is what, it's just a language the market is literally screaming to you. Whenever I see a reversal pattern, which is a double top, a triple top, a double bottom, triple bottom, head and shoulders, it's telling you that there is a very high potential the market is going to either go into a flat zone or reverse. Do you really want to be in an area that could reverse on you and lose and have no strength? No. And it's right there written for you. The market is telling you. Divergences. I live for divergences. Reversal patterns and divergences are my two utmost favorite things to look for. What is divergence? So as you can see here, the price action is moving upwards. I use MACDs. That's one of my indicators. You can tell that my MACDs on the bottom are now going the opposite direction. So what is that telling me? It's telling me that the market is losing its strength. Do I want to be putting money into a market that is losing strength and can potentially, while I'm in the trade, completely reverse? Absolutely not. Why would I want to put my hard-earned money into that? And yet it's right there telling me that it's about to do that. Why would I ignore it? My job is to listen to the market and what it's telling me. And it's so simple, guys. It's free on any platform. Okay, so it's just listening to what the market is telling you. Now, I want to put all of what we've learned together right now so you get a really good idea. Remember, I have a presentation. I call it my cheat sheet for trading, makingofadaytrader.com. Okay, so we all heard of breakout trades, right? We all know that they are one of the most powerful trades you could take. But how do you spot it? If you're not doing everything that I just mentioned about understanding the market and the flow and having a charting software, you're going to miss the most powerful trade of the day. What is a breakout? So it's literally when you are going in one direction, you have a sideways area, you have drawn in your resistance area, it could also be a support area, and then you have a breakout. But if you don't have your area drawn in, first of all, you're probably going to be losing all this money while it is in this area. And by the time you see the breakout, if you even see it because you don't have this area drawn in, you're going to miss out on the ones that actually bring you money, right? So here's a perfect example. We are trending upwards, sideways, ugly, indecisive. Oh, wait, boom. It just totally gave us an awesome breakthrough. This is the breakout area. Okay, this is the breakout trade. So I have my breakout trades. Like I mentioned before, I personally use only 2 indicators. I use EMA lines, which is the exponential moving averages, and that is universal on any strong platform, and the MACDs. Okay, I love my MACDs because I find them to be the least lagging indicator out there. I think it, like, unlike, you know, volume and some other indicators where they're telling you a little bit lagging information, I find that the MACDs are fantastic. So I see my breakout, I have this strong resistance area, breaks through, I have a massive spacing on my MACDs. You can see I have the 0 line, this movement, boom. I put in my order weightings at my EMA lines. So I use my EMA lines to show me the shift in direction and where I enter the market, where I am in control, and say, market, if it hits me, if it fills me here, that's where I'm going to enter. Otherwise, I'm not interested. Okay, so remember, guys, all of this is makingofaDayTrader.com. Now, if there's any questions right now, I would definitely be happy to answer. What settings for the indicators do I use? So I use 3 EMA lines. I use the 20 EMA period, 52 EMA period, and the 135 EMA period. And for the MACDs, whatever platform you are using, MACDs usually comes with 3 plots. It comes with the actual MACDs, the difference, and I forgot what the third one is. Anyways, oh, and the average, difference in the average. I remove the difference in the average. I don't use them at all. I find it just white noise. I use just the MACDs, and I use the universal ones. So you could use just the settings that you're opening up the MACDs to personally. All right, guys. So here's the thing. You have everything you need to take action. Everything you need, right? We have these amazing different presentations, these summits, amazing, great YouTube videos, from all angles, from all different instruments. We have many different books. We have so much information out there. However, here's the one thing, especially when you're self-educating. How do you know you are doing it right? How do you know you're doing it right? Who is there to help you know if you are doing it right? Who is there that you can be accountable to? That is really the main question. So all of this is great, but the real question that you're also probably asking yourself is, how do I get really started? How do I get started? And this isn't from beginners only, right? Seasoned traders who have been trading for ages and still are inconsistent and losing money ask me all the time, what can I do to turn this around, be profitable, and be profitable consistently? Because that's the reality. And the reality is, to me, and this was my own, and I think it really goes across the board, the majority of times, is that we are lacking the full understanding of the basics, right? I have taken so many courses, but nobody actually focuses on the basics, right? Whenever I used to ask basic questions, I used to either be treated like I was born with that information or completely ignored, right? It's literally like getting into a car. So right now I have this amazing opportunity. My 17-year-old is learning how to drive a car. So when we got in the car the first couple of times, either me or my husband were like, okay, you gotta put your gear into first gear, push on the clutch, make sure you have your foot on the brakes, turn it on, and then release the brake and slowly move the clutch, and you're moving. And he was like, wait, what? Huh? No idea. Why? Because that is a normal conversation you have driving. It is the lingo of driving, right? It is so automatic to us at this point. It's like, where's the steering wheel? Where's the gear shift? Where's the accelerator? Those things we learn, we know these things, they come natural to us. But when you're first doing it, you have to actually begin there. And that's the important part. And what's really important is it's somebody who's never seen a vehicle before, sits in your car and you're like, all right, put on your seatbelt. And they're like, what's a seatbelt? I don't know. And the seatbelt can literally save your life. But if you don't know what it is, how are you going to be able to use it, right? And happens to so many people when we day trade, is the lack of knowing what we even need. And to be honest with you, my truth is, like I mentioned before, I have spent over $20,000 on trainings. I've had private mentorships, one-on-ones. I've had retreats, conferences, summits, trading rooms. Oh my God, what was it? Those trading alerts, so many things. And I just kept on losing money because I was never taught this from the very beginning. And I struggled for years and years until I literally lost almost $4,000 in 5 minutes because I had a mental stop put in. I refused to go for the profit target, all these things, chasing trades. I mean, everything, because I wasn't doing the right work, right? I wasn't focusing on the basics and listening to the market. And then I ended up quitting. I literally ended up quitting because it was just devastating. It was devastating to keep on losing. I've been putting so much time in and I quit. But the problem with day trading is we all get bit by the trading bug. That's the reality, right? That's why we keep on going for it. We get bit by the trading bug. And you want to know why it never stops itching? Because deep down inside, we know that we can do this. We know that we can get this. And that's the most important thing. So I finally came back after 4 or 5 months of being away, and I decided to get back to the actual basics. I removed, and actually, to be honest with you, I threw out my 2 other monitors. So I went down only to my laptop. I literally threw them out. I completely erased all my indicators. I just went to the bare naked price action in the beginning. And then I slowly started to put in indicators, and I realized that only the 2 that I use now are my best ones, and I love them. And I started to go from the basics. I don't know if any of you guys have ever heard of Coach John Wooden. He is a virtual mentor to me. He's not alive anymore, but he was one of the most legendary basketball coaches ever to this day. And his whole philosophy was, when in doubt, go back to the basics. Get back to the basics. This man has won 88 championships, 10 NCAA championships in a row. I mean, this guy's accolades, they never end. He trained the best of the best of the best. Yet, every time they started their season, every single time, he would start at the basics. He would go over them. And these were actual training sessions. How to tie your shoe, how to roll your socks, how to dribble. Why? Because it doesn't matter all that you think you know. But if you're running on the court and your shoe falls off because you didn't do the basic tying, you can sprain your ankle and you're out for the game. So everything you learned is pointless because you did not start with the basics. And that is so important. So today, for you guys for being here, and I'm so grateful that you guys are here, I have a special offer for participants only. And it's my introductory course, Bootcamp for Day Trading. You could do it on any apparatus, iPhones, iPads, Samsungs, laptops, desktops, tablets, any apparatus. This is the next step. It's either your first step or your next step, but this is the step. Here's what you get in the course. First of all, going over the simplification of day trading altogether. And again, with a platform. And because so many people, I get this all the time, they just sprung all this money on a platform and they don't have any idea how to use it, yet they're putting real money in, trying to learn with real money, buying and selling and losing money because they're going in for a short when they wanted to go in for a long. I give you a pro platform set tutorial, so in 30 minutes you are good to go. Whichever platform you are on, boom, done, you're ready to go, so that you do not have to worry about this and you can continue with the real important stuff, and that is learning how to day trade. Now, market anatomy process. If you guys don't have these understandings of dissecting the markets with uptrends, sideways, downwards, and I call them the magic telltale signs of reversal patterns and divergences, you're not going to be able to get it. Understanding reversal patterns, the defensive zone strategy we focus on, spotting the areas, really focusing on them, divergences, and mastery of the breakout. How can you know there's a breakout happening if you don't know what to look for? And also how to avoid the fake out breakouts. They are so important because they happen a lot, but if you know how to avoid them, you don't have to lose money on it. And you will get unlimited access to this curriculum. All this is valued at $1,600. Now, this is what you get. You get the pre-quill framework, setting up your platform, everything, dissecting the markets, understanding all that, the defensive zone, respecting the areas, and the power of the breakout. And like I said from the very beginning, how do you know you're doing it right? Why is it that athletes could have coaches helping them, but other people feel they don't need that? Look, because I am such a strong believer in accountability, and that is what saved me, I am offering with this special deal today, one-on-one free mentorship for 1 month, unlimited one-on-one mentorship included in all of this. And on top of that, all that you're going to be getting, you also get 1 month free membership in my live trade chat room. 1 free month of membership. That means it's me. I do not have moderators. It's all me. Weekly, we meet in the live market, take trades, implement everything that you're learning, and more questions that you could ask me. All this is valued at $2,600. But for you guys, for the participants only for the live participants, all of this, $97. $97, one flat rate, $90. There's no hidden fees. There's no extra cost. $97, guys. Go here right now. Bootcampfordaytrading.com. Bootcampfordaytrading.com. Go here right now. Everything that I am offering, no hidden fees, 1 entire month of one-on-one unlimited feedback with me, 1 month in my live trade chat room. Let's get real, guys. $97, that's not even a third of what you put in on a trade, right? And you get all this education and work with me. Bootcampfordaytrading.com. Bootcampfordaytrading.com. And here's what some of my students say. And I have students from all over the world because day trading, like we have here in the audience, is an awesome international thing that we could do. Here's what one of my students says. I just finished the boot camp. It is absolutely the best money I'd ever spent. Definitely get us. Marina is an amazing teacher. This was exactly what I needed. The course is amazing. I have zero experience with techie stuff, and I am totally catching on. So normally I charge $297 for this course. Today, only for you guys that are live, $97. That is 66% off the regular price. Bootcampfordaytrading.com. Go here right now. Bootcampfordaytrading.com. And here's the thing, guys. Here's the thing. Because of my one-on-one mentorship, I can only take 25 people. I cannot work with any more than that, so I can give you your full attention and the commitment that you guys want. I'm only able to do 25 at a time. So go here. This is where you'll go when you press bootcampfordaytrading.com. And you can actually start at $59. There's an actual payment plan, $59. Come on, guys. You cannot get any better. So right here, bootcampfordaytrading.com. Bootcampfordaytrading.com. And now if you guys have any questions, I'm going to answer your questions. Okay, Jim, what time charts do you use? I personally only use the 610 tick chart. So the tick chart is a pretty standard chart. What is a tick chart? It is literally seeing the amount of transactions per bar happening in real time. Because I like to minimize my indicators, I don't have to deal with a volume indicator, which by the way is lagging. So I use the tick chart, and you could use it, pretty much any charting software allows you to have a tick chart and to customize it to how you want. So each bar for me, each candlestick has 610 in the moment real-time transactions going on. So I could see what the volatility is, and I love it. Ricardo, is there an ending date for this offer? It's $97, Ricardo, $97. Bootcampfordaytrading.com. It is literally a no-brainer because why? You get me for an entire month of one-on-one working with me. So if you cannot start the one-on-one right away, it's fine. You could get the course now, but then you could start the mentorship whenever you are ready. You'll tell me when you are ready. And the same thing goes for the live chat room. You'll tell me, okay, now Marina, I am ready. I've done the course. I'm ready for the mentorship, the live chat room. It's $97, guys. You don't even, I can guarantee you right now that the majority of you spend way more on one trade for whatever amount of trades you guys are doing, right? So again, really, really important. Just remember, 97 bucks, one-on-one with me. What tick are you using for the 512 or the 610? Vasilios, I am using the 610 tick chart. But again, if you use 512, make sure that it works for you. I'm not here to push only what I'm doing. It's more of understanding what is working for you. If you find that 512 is working for you, amazing. Bootcamp for day trading is for any instrument that you decide to work on, right? Because it's all about learning how to read the charts, as long as you guys are very clear on what is your instrument that you really want to learn. That is the most important thing. Okay, Ricardo, you could contact me and we could arrange something for sure. But it is, you know, right now it's a special offer for you guys only. $97, go for bootcampfordaytrading.com. bootcampfordaytrading.com. So let me know if there's any other questions, and I'm happy to answer all of your questions. And actually, I'm just really grateful that you guys are here. The fact that you guys showed up shows that you are committed. You are committed to taking your trading to that next level. So this is your time to take it to that next level. Okay, and I'm here to help you. So please let me know. You can email me at thetraderchick@gmail.com, or you could go to my site, and I'm just grateful to be here. So thank you, Jeff, so much for having me. And thank you, everybody, for being here. No, it is a one-time payment, not per month, one-time payment. You have unlimited access to the curriculum for life. You work with me 1 month, but the payment is only one-time cost. No other monthly fees. No hidden fees right there. Okay, so no membership payments afterwards. It's just $97 and you get access to everything. Okay, guys, let me know if there's any other questions and I'm happy to answer them. And again, thank you so very much for being here. And thanks, Jeff, again, for inviting me.
Oh, it's good to have you. We do have one question that came in through YouTube.
Okay.
And that was, is there a deadline for taking advantage of this offer?
Right. So obviously, the sooner you do it, the better for you. But no, there is really not. But if you start to put things off, you'll never get to it, right? And you'll just go back to your old ways. So this is your chance to start something new, right? Looks like first retracement after a breakout is one of your primary setups. I have many setups, but I want to show you how to do that, because if you don't even know what you're looking for, Samuel, you know, it's kind of like just taking a car out and not knowing if you should be on the right side or the left side, but just knowing that you're there, but not understanding where you're going. Hopefully that makes more sense.
All right. Perfect. That was great. Thank you for coming in again.
Thank you.
We're grateful to have you, Marina. Thanks for coming.
Okay, bye, everybody.
Goodbye. Okay. All right. And while we're kind of getting things switched over, can I get Kelly from the control room to help me out for a minute?
You can, and I would be happy to help you, Jeff.
Did you dump your soda all over the place when you were trying to find the microphone button? Because
No,
I also did that today.
Luckily.
All right. Let me. You know, I just realized that we have not given away a lot of prizes today, so I think it's prize time.
All right. Well, let's help out with that.
All right. So what I need from you is I need you to select any number between 1 and 11,314.
Well, we haven't gone into the high numbers in a while, so maybe 10,752.
Oh, I missed 1,000 there. Hold on just a second. All right. All right. So the person that won the next prize is Salem Eslam. Do you want me to tell you what he won, Kelly?
I'd love to hear what he won.
Mr. Salem Eslam. Oh, I'm not supposed to use full names. Mr. Salem E is now the proud winner of a 3-month subscription to Metastock. Metastock, if you haven't heard of it, is a software program that's been rated #1 in its price category for 28 years in a row. In fact, it helps you scan the markets, test trading ideas, forecast, all kinds of really, really cool stuff just included in the program. We're going to give that to him for 3 months. But wait, that's not all you'll get. We're also going to throw in the what we call the Metastock Zenith News Package. The Zenith News Package was developed at a cost of over $1 billion. It includes some of the best news in the world, I think. I'm not biased at all, but it includes news from over 3,000 journalists and 300 different news bureaus. We're going to include that as well. But Kelly, that's not all we're going to give him. Do you want to hear what else we're going to give him?
There's more? He's getting more than that.
But wait, there's more.
That's
so
impressive.
We're also going to throw in 3 months of Learn Metastock. So he's going to get 3 months of Learn Metastock from Kevin Nelson, and that's going to show him how to scan, how to test. It's hundreds of videos all available. So congratulations, Salem E from Egypt. I'm going to be emailing you in the next several days with information on how you can collect to claim your prize. So congratulations. And welcome to Metastock. My big encouragement to you would be to try it. It's my favorite software. I use it every day to trade. Kelly, thank you for your help.
You bet.
All right, very cool. And then if you want to get your own copy of Metastock, you're certainly welcome to. Metastock has been rated #1, like I said, 28 years in a row. It does include that news service if you get the real-time version, and you can even learn Metastock as well. And it's 3 months for the price of one. So if you pay for it for 1 month, you'll be using it into February. It's a great software program. There's a reason, I think, that it's been rated 28 years in a row as the best. And I'd encourage you to try it. And if you don't like it, there's no commitment. You can cancel. But find out for yourself why it's rated #1 in its price category for 28 years in a row. You can do that at metastock.com/conf promo. You can give us a call at 800-882-3040. And you can also visit us online at metastock.com/sales chat. Before we turn it over to Ken, our next speaker, I do want to say, I want to figure out why my screen won't go back one. I do want to say thank you to CMT for sponsoring today's event. CMT is one of probably the most well-respected organization in the world. They work with a lot of high net worth institutional brokerages and hedge funds to basically accredit their traders. So you can find more about the CMT Association at cmtassociation.org. I want to thank them personally from everyone here at Metastock for supporting and being a sponsor of the Metastock events. So with that being said, our next presenter is Ken Calhoun. Ken is a frequent guest. We haven't had him on for a minute, but we always love it when he's on here. He always does a really, really good job. I love kind of the way that he looks at charts. I always think he has a pretty interesting kind of way of looking at charts, and he's always welcome here. Ken, how are you doing today?
I'm doing great, Jeff. How are you doing?
Good. Let me send this screen over to you if I can. I just made you the presenter.
And let's see. Hopefully this will work. It says attendees still on hold. Currently, only staff can participate.
Some reason it does that. You can hit start broadcast if you'd like. I can't see your screen as well. But for some reason it does that where it says that you're on hold. The attendees can all hear us. So don't say anything too inappropriate, Ken.
I'll try. And it's saying connecting to Metastock now. I don't know why the platform is doing that, initializing.
Yeah, so yeah, it looks kind of stuck right there. Go into Metastock. I think I can fix this without too much effort. Just go ahead and click on the Metastock. It won't let you do that?
Let's see.
I think it didn't sort itself out. Yeah.
Let me start off with, click on what now?
In Metastock, if you click file, go offline, go online, sometimes it'll kick it out of that loop. If that doesn't work or it's not even responsive, you might just have to kill the task and start it again. That happens when it kind of
can everyone see it okay though now? Can you see my Metastock charts?
What I'm seeing is a PowerPoint with Metastock behind that. Now I can. Yes.
Okay, it's.
But I think
it
you might
was
have to
fine all
restart.
day, I promise.
I know it was. That's only when you present that we kind of throw curveballs at you, Ken.
Yeah. Hey, always good to stay on my toes here. Let's see.
Yeah, if you hit File, can you hit File, go offline?
Let's
Up in the upper left there.
Okay, let's try and get this cursor up here.
You might just have to Task Manager quit. Sometimes that happens. If you hit Control-Shift-Escape, you can get the Task Manager up and just kill it if it's really just not responding. Okay, that might work. Try that. Let's try this first. It kind of gets stuck in a bit of a loop sometimes.
Okay, let's try this again. I'll close this instance and hopefully it'll let me restart it in just a minute here.
Yeah, sorry about that.
It's working all day long.
I know.
It's working fine all day, and then.
Yeah, like I said, it's just when it seems like it would when you want to present, right?
Right. Okay, well, let me go in Task Manager and kill. What's the name of the task again?
It's mswin.exe.
Okay.
And then, yeah, just hit no, or maybe yes, maybe you want this. This would be the template that you're using.
Yeah, let me kill the process and. Okay, now I've got to find the icon on my desktop and hopefully restart this, and hopefully we'll be in good shape in just a minute.
Yeah, I'm sorry that happened. I hate it when that happens. It's always when I want to present something too.
Yeah, let's see. It's there we go. Trying to locate I've had this open for hours, so practicing for today's session, and all of a sudden, hey.
Yeah.
Okay, well, here we go. Let's try one more time. Anyway, good to be here with everybody. I hope you folks are here. If you do have any questions about day or swing trading, do feel free to let me know, and I'll do my best to give you straight answers. I like to trade actively, and see, it's connecting. Let's see if we get a good connection one more time. Initializing, configuring web service clients. And there we go. All right, we will be ready to go here in just a minute. Let me open up the workspace and we will be good to go.
I had pulled out the book of dad jokes in case I needed to stop for time, and I even picked one out. How do you know if a burger is hot enough?
I don't know how.
A thermometer.
That's truly a terrible joke, but okay. Anyway, good to see you here. Okay, traders, let's get underway. Sorry for the technical issues. Let's get underway with how to trade ETF and stock breakouts with Metastock. I even have my smiling face on camera if I can get that going. Let's see if that. I was having a technical issue with that too. So good afternoon, everyone. Let me turn on the bright light so I can be seen. So we're up there. Hey, I've got two different cameras. Well, welcome aboard, everybody. Good to see you all here. Can you see my hopefully smiling face here as we get ready for today's broadcast?
We can see you. We can see your screen, and we can hear you. So everything, we're all ready now. Sorry.
All right.
And again, I apologize for the technical issues, everybody. But I hope you enjoyed that dad joke. Your turn, Ken.
Okay, so all right, so let's get underway. You may have seen me all over the place. I'm a money show speaker. I'm in stocks and commodities. Heck, I was even in CBS Market Watch back in the day. Now I've got I founded the original day trading university back in '99. One thing that it's a kind of a pet peeve to me is people who teach traders but aren't actually real traders. And so one thing that I always like to trot out is my most active year as a trader. I was doing 4.9 million just around 11, 12 years back. How many of you, show of hands, think it's important? It's just my personal belief that if someone's going to teach something, they better dang well make sure that they can prove that they are capable and that they are actually a real trader. A lot of the people in the trading education space are just chart talkers, but they don't have any proof of P&L, actual real trade. So how many of you, show of hands? This is back. I paid a lot in commissions, $33,000 in commissions in just 12 months, as you can see. Of course, right before Fidelity went commission free, right? Oh, well, anyway, I am a real trader. So that's really important, I think, is authenticity. Anyone can talk about charts, but few of us actually prove that they are actual real traders. That's kind of my big elephant in the room about the trading education industry is anybody can say they know something about trading, but how many of them actually have tax return proves that they actually trade. Anyway, we're going to take a look at lots of stuff today. I'm not going to go over PowerPoints. That's it. My site's Trade Mastery. That's it for PowerPoints. Let's take a look at our great Metastock charts. I had some things lined up for you guys today. Who wants my favorite pick? My favorite pick right now is KOLD. And the reason I like this, and let's see if we can open this chart up. There we go. Wonderful Metastock charts. They're so clean and easy to see. Let me zoom in just a little bit on this guy with the plus button. I know I can use the control mouse wheel, but well, let's take a look. One of the first things that I want to share with you, the importance of range and looking for things with wide trading ranges is the equivalent for good profit potential. You want to trade charts that have really wide ranges. Now, this is an example of shorting natural gas. Natural gas has been on the run for a long time, and the long natural gas ETF is called BOIL. They have a sense of humor. Well, the inverse of that is cold. So you're cold if you don't have natural gas. Anyway, especially in the wintertime, especially here in Colorado or other places where we get snow. One of the things that you want to look for is an increase in the lower range. First thing to look for, the most important part of any chart, especially when you're looking at your Metastock charts, is the right side of the chart. That's much more important. The numbers are much more important than simplistic chart patterns. Ask any of us who are professional traders, one of the things that you want to really be keen on is understanding whether or not the range is wide enough to make for a good profit if you're right. Now, typically on this kind of chart, I look for a mean reversion, meaning 50% bound. So I'm starting to get into this a little bit here. I'll stop out if it gets under 6, and I'll scale in if it gets over 10. My exit target is going to be 20. So my goal is to double my money by playing within this region. Okay, now one thing that you want to look for is, let me click on this. One thing you want to look for is, with the up and down cycle, look for an increasing, kind of connect the dot. If you're trying to bottom fish, and I've taken thousands of stop losses doing it the wrong way before I learned how to do it the right way. And one of the biggest turnarounds is just make sure simply that the double bottoms are not flat or down, but they're rather on an incline. So this is on an incline. The other thing to look at, and this is really so crystal clear on Metastock charts. That's one thing I like best about Metastock is the charts are crystal clear and unambiguous. You can see exactly what kind of price action patterns are out there. So one thing I taught you to look for is range, and we'll look at more examples so you can get a feel for the kind of ranges that I like. But for example, you don't want to swing trade a chart that on, say, a 90-day chart, on a 90-day chart only has, say, 4 or 5 points. You want something that has 8 or 12 or 15 or 20 points. Make it worth your while. If you can get half of that, always forecast you'll get about half of the range on either on a pivot off a low or a price extension above a high. So one of the things that I want you to look for is, most recently, if you look at the last 10 to 15 days or so, another kind of writer downer. If I could share my fancy dancy Mont Blanc pen here. It's hundreds of dollars for a pen, worth every penny because it's good quality, like Metastock. Anyway, one of the writer downers is look at the ratio, the mix, just like in tape reading when you're looking for day trades, for these daily charts for swing trades, look at the ratio of green to red candles as well as the trend. And here you can see what your charts here, we've got just 2 well, count this one, 1, 2, 3, 4, 5, 6 reds, 7 reds. We got 3, 6, 9, 10 greens. We have a much more green chart dominated by buyers than we do sellers in an uptrend after a sustained drop. Now, one of the things that I want you to look for as well, looking over my microphone here, like I say, is range. So in this particular market, I don't know how many of you would agree with me that the market's a bit frothy and maybe a bit overbought. It's not a good deal. The things that are in play, cryptocurrency until the big drop recently, but electric vehicles, crypto, cannabis stocks are starting to bounce. So electric vehicles, EV plays, whether you're looking at things like Plug or NEO or even old Ford Motor Company, for whom I used to work as a statistician back in the early 90s. Ford over $20 a share. Good quality stocks like Pfizer, PFE, if it breaks the 52 or so. Those are good breakout charts for strong, in spite of a maybe overbought market. But now it's a good time to start looking for the counter trend trades. And so for those who are looking for things that have had big ranges and then are starting to bounce. And so what I want to teach you is at least how I'm trading, some of the patterns that we look for when we're looking for bounce charts. Now, if you want to simply buy strength, you can always go with something like Microsoft, right? It's been going up for the longest time, and Costco and Walmart and others. One thing that you want to do when you're looking for breakouts is, I guess one of the stronger patterns is make sure that you have an increase of whole row body heights in the candles. And if I can pull this up. Actually, it is easier to control and wheel mouse up. Okay. Anyway, now I played the bounce profitably, correctly, both yesterday and today in this one. But it had been a really good uptrending marathon. Is one of our Bitcoin stocks. And you can see it ran from 30 up to 80. So it over doubled, but all of a sudden it ran into trouble. Now we don't have any classic, well, we don't have a shooting star or bearish engulfing up here, but we do have a large red candle. And one of the things that I want you to look for, there's two signals. Now again, for classic candlesticks, you can always look for things like shooting stars and bearish engulfings up at highs and tweezer tops and whatnot. But for breakouts, one of the things that I always look for is an increase, and I've taught this for years on Metastock, an increasing whole row body height of green candles. Kind of like a small, medium, large drinker, venti, grande, whatever they call it at Starbucks, which I haven't been to in a long time. We get a small candle followed by a larger candle of at least twice the height in an uptrend. That often produces a nice breakout, and you can see that pattern. So that's another rider downer, something to make note of, is look for on your daily candlestick charts in Metastock, make sure you're looking for a small, not a doji, not a plus sign, but at least a small whole row body. There has to be some body to the candle, followed by a large whole row body candle, and you buy above the high. Now that can be in context of a bullish cup or a plain uptrend. Now here you can see a classic shooting star, and this told you to sell right here, right? So if you buy here, maybe you buy on this uncertain day here, because of it's what I call kind of an acceleration ramp, where you've got a steady uptrend and then hockey sticks up like this guy did, often though it's a blow off top. And I knew that it was going to top out right near the 80. One thing that I've taught on Metastock charts and also with the Money Show and in my Stocks and Commodities magazine articles is to sell anything with the number 9 in it, right? So for example, selling the 49 would have worked. Selling the 59 would have worked. Selling the 79 would have worked great. Never buy anything with a 9 in it. That's another lesson learned of millions of dollars of stocks and ETFs traded over the last 22 years now, is never buy a 9. I like to trade, say I buy 21 and I sell 28, or I buy 32 and I sell 39, or I buy 71 and I sell 79. Tighten up a trailing stop as it gets close to the multiple of 10. Okay, so that's another tip. So entry, I'm just throwing a lot of darts at you guys, a lot of things that I've learned over the years. Let me know if any questions. How are we doing? We've got around 40 minutes. We've still got plenty of time. So entry signals, one of the best ones, if you don't see a classic reversal like a hammer or bullish engulfing, a momentum signal. A momentum signal for candlestick breakouts is a small followed by a large horror body candle, especially at the right side of a bullish cup. And I invented that. I developed that pattern over 20 years ago. Other people have since ripped me off, but I invented that concept. And you can see my industry articles in Active Trader magazine, I believe, and also the now sadly defunct Active Trader magazine, Bob Dorman's magazine, or the current Stocks and Commodities magazine, for whom I'm a little late submitting an article, but I've been a columnist trading on momentum for years. And so be sure to look at my articles in Technical Analysis of Stocks and Commodities magazine at traders.com. Anyway, one of the patterns you look for is a small followed by a large horror body candle. The other thing is the ratio of green to red. Now, there's two exit signals. One is if you see 3 red candles in a row, you sell on a loss of that. Now, this did not lose it, okay? This here did not lose it either. But do trail a stop. A good, smart way to identify when is the trend stopped and it's starting to slow down or end is when you see 3 red candles, 3 red days in a row and a slight pullback. I use a stop out right under the low of those 3 candles. Another strategy is to use a loss of 2 days support. But how to say, of all the thousands of traders I have worked with, tens of thousands now over the last 21 years, traders tend to use stops that are too big. Let's do a couple of quiz charts right now. Sorry, I'm losing my voice. I broadcast a lot. Anyway, these are the kind of patterns that you want to look for. First of all, determine, is the chart worth trading in the first place? And then if so, how and where, right? Let me try and figure this out. Jeff, what do I click to minimize this?
Are you looking to minimize just the chart?
Yeah, just this one chart to get it back in the grid of other charts I was in.
Go ahead and click on the in the right below, right in the upper right-hand corner. You see where there's X, and then not that one, the one right next to it. To the little, there you go. That one should do it.
Thank you, sir. I appreciate that. Details, but they're important. Yeah. Jeff Gibby, one of the hardest working and nicest guys in the whole industry. It's Metastock is totally lucky to have a guy like him on their side. So thanks, Jeff. One of the nicest guys in the business too. So always good to work with pleasant people. Let's take a look at this one, PROG. Now this is one that had been really volatile. I don't know how many other traders. I was trading PROG. You can see it's got a really good volatile pattern. Let's take a look at it here. Let's do a close-up look at it right here. Let me get this. Mouse on top and then control zoom. Now let's use this one as an example of kind of an anatomy of a winning trade breakout. Now, one of the things you want to look for is one of the most important things, and Metastock charts are the best in the world at doing this, is looking at the candle heights and the candle patterns because they're crystal clear. They're so clear. They're amazingly clear, like you can see it for 100 miles away, right, kind of thing. Anyway, one of the things you look for is this signal, a high volume, large green candle after a sequence of relatively flat candles. Flat candles don't tell you anything, right? That's a no signal. One of the most important concepts you can get at as a professional trader is the difference between signal and noise. Noise is flat, choppy. It's not telling us anything. A large green high volume candle. Now we got the start of a breakout. Now odds are you wouldn't have seen it on the first day, just like a gap. Sometimes we miss the day of the gap. So that's why you've got a second chance. And you can see here, we've got a nice secondary green candle right near the, what was it, 1.5, right? And this was back in early October. Here we are in early part of November, well, middle of November. It's already the middle of November. Where did the time go? Anyway, Early October, it lit up as 1.5, then it ran all the way up to 5, and you can see it's tripled in value. Now, one of the things that you can do to help you identify whether or not you're on the right side of a trade is look for preponderance of the largest candles and what color they are. So if you just kind of eyeball the chart there, you can see most of the big candles are what color? They're green. They're not filled in green. You can see they're kind of hollow green candles, but the large green candles are the dominant story that the stock price action is telling us. Now, I don't know how many of you are also price action traders. I am, and I've been for 20 years doing millions of dollars worth of trades. One of the things that I found is that it always helps to look for kind of like a poker tell, right? I used to play a lot of Hold'em poker. And anyway, you can tell if you're skilled, you can tell by mainly the betting patterns of your opponents. Like we call them heroes and villains in poker. Anyway, as an active trader, when you use your Metastock charts, I want you to look for the rest of your life as a trader. Make sure that when you're using your charts, use really good quality charts like Metastock, and make sure that they are telling you to help you decide whether or not to trade in the first place. Make sure they are telling you a story of exceptionally strong buying. Where we get into trouble, and myself included, I've made this mistake for years back in the early days, is trading without an edge or trading without a strong signal. It's kind of like playing blackjack and you've got a 10 and the dealer's got a 10. It's likely a push. You want to play when you've got a 8-3 and the dealer's got a 6. Okay, let me double down on that. Or you've got a pair of aces or 8s and you want to split those and the dealer's got a 6. You're probably going to make twice your money. As an active trader, or when you're playing Hold'em, your late position, you got a full boat and villain puts you on a straight or something, or flush. You riverboat them, meaning you got a full house on the boat on the river, and you take all the chips. Anyway, as an active trader, you're looking for an edge, and you want to be very selective. And one of the ways to do that is visually on your Metastock charts. Make sure that you only trade after you see a large green candle. Now, there's, how to say, I don't mean an extreme candle like a $6 day or something like that, but a nice candle like this, where it may be 80 cents, a dollar, a $2 candle. Make sure that you use that as a roadblock, kind of like you're running along the road and you want to bump up against, should I trade this stock or not? Well, the answer is you see a path in the road. Either don't take the trade or take the trade. You only take the trade if you see a large green candle that's larger than average. You want a larger than average. You can use the ATR if you need a technical signal average true range in an uptrend, right? Or if you just visually eyeball the chart, you can see this pattern that I've taught you earlier, small followed by larger whole row body green candle. And let's say you're late to the party and you see this thing's already gone from, like whatever, 80 cents up to $1.50, $2, right? So it's already doubled or tripled. Is it still worth trading? Well, as long as the candles are relatively large and green and you're in an uptrend, then yes, you buy a high above the high of that candle, putting the stop loss at lowest right below that candle, right? You can use either 2 or 3 days. Here's another rider downer, and I've got a microphone in here trying to look at these clocks are amazingly useful, these little Casio alarm clocks. I've got them all over the house. I use them for years. Anyway, because the battery lasts forever and they're really easy to see. Not endorsing Casio, but this is not a commercial endorsement. But anyway, I love me some Casio clocks. Anyway, make sure that you're looking for large green candles in context of an existing uptrend. Trading can be really simple. It doesn't need to be rocket science, but it's not simplistic chart patterns either. You will get stopped out most of the time for the rest of your life as a trader. Deal with it. The way you make money as a trader is to be slightly more right on those positions that you build, you scale into, you position size into, than all the little tiny itty bitty stop losses you take along the way. The way to take small stop losses is to have defined criteria ahead of time. Now I have defined stop losses as part of your order entry process. I use one triggers the other conditional orders 100% of the time when I trade. I use OTO orders. I don't know how many of you, show of hands, do you use, oh, hey, Mira, how you doing? Florida in the house. Hey, Ricardo. Hey, well, a lot of people here. Anyway, if you have questions, now would be a good time to write them in because a big turnout today, so I will answer all the questions I got time for. Anyway, what you're looking for is to scale in. Expect that you are never going to be right more than 30 or 40% of your trades, okay? My most profitable days and years and months, I've never been right more than 50% of my trades. I've been right from a profit and loss standpoint. The P&L of the size of the wins added up is bigger than the size of all the little tiny hits that I take, the small stops along the way. So one thing you want to do is make sure you've got well-defined stop losses using those one trigger the other conditional trades. And I'm not going to go into detail. You look into that on your own, but basically an OTO order means that, let's say I want to buy this. I'd use, for example, not a trade recommendation, but I would buy, say, 570 with a protective stop at, say, right under 5, at, say, 490. So I'd say buy at 5.7, and the other side of that order would be with a hard stop at, say, 4.9. So that way, my risk is defined ahead of time, and I don't have to babysit the trade and wonder, did I get an order fill, and now how do I trail a stop, and all that kind of foolishness. What you want to do, I do as many as 104, 106 trades daily. Typically, I'll do anywhere from 30 to 70 trades every day. I'm a very active day trader as well as an occasional swing trader. And one of the ways that I automate that is to use the one triggers the other automated orders. So make that part of your trading strategy. Now, the price that proves you wrong is always going to be no more than 3 days and usually 2 days under current support. So let's take a look at a couple other charts here. Anyway, this one I wanted to highlight for you because it illustrates the concept of large green candles. Now, is this still worth buying? Now, I don't know about y'all, but I really hate the idea of chasing a stock. Like, well, dang, somebody bought it for only $1 a share. Now it's $5 a share. Is it worth buying? Well, was Amazon worth buying at 20? Was Tesla worth buying at 50? Was Apple worth buying at 30? Yeah, there's nothing to keep a stock from going times 8 or times 10. So if you can get a double out of it, that's not too bad either. So as an active trader, don't worry about chasing. What I like to do, though, is once something's extended as high as this has, is I'd like to see a pullback and then buy a breakout above that. So I want to see some, I don't want to be part of the crowd that gets stopped out on the pullback. I want to wait for other people to deal with that, wait for after a pullback washes out some of the current longs, and then it comes back to life, makes a bullish cup above the previous high, and that's where your entry is going to be. Voila. And what's another good chart? I have a love-hate relationship with UVXY. I've made the most money trading was TVIX. I bought like 56 and I sold 940 on just a handful of shares, but still it was a big win. One thing you want to look for pivots, for example, something that I like to intraday as well as swing trade, or mostly day trade, is UVXY. I was day trading this into the close today, right before showtime here today. So if we take a look at this chart, let's get UVXY up. The first thing you want to look at is the range. Now, is there a tradable range? Well, sure, you can see the last couple months this thing had dropped. It had been up at 29 a share. Now it's half that, down to 15. Notice, please, we had 5 green days in a row. Despite the pullback here, it's still in a pivot zone. So the stop loss on this would be down to the 52-week low, which is 1430. So I don't mind putting on a swing trade here because the price that proves the trade wrong is relatively close to my entry. And friends, that's what I call a squeeze play. And that means I buy near a support level on a pivot. Now, I don't see any permission of the candlesticks. I don't see a hammer. It's not hammer time. It's not hammer time. We don't have a bullish engulfing. We don't have a tweezer bottom. But we do have 5 green days in a row. Well, 5th day is a doji day. So 4.5 green days in a row. Then a few red days. Gravestone doji yesterday. Dragonfly doji, on the 15th, Dragonfly doji on the 16th, and we'll see where it is. Let's see, we closed up at 1550 or so. So it closed up a bit here today as well. Anyway, this goes back to the concept of big ranges that are starting to pivot with some sign of life. And that may be several green candles or an uptrending consolidation zone or something else. With the trick is the risk reward needs to be really good. So for this, the risk is minimal. The risk is down to say 14, maybe 14.30. I use 14 as a hard stop. So it's only about $1 down. The reward potential is up in the 20s or even higher. So it's got plenty of risk reward. I've got maybe a $1.50 risk and a $5 or $6 reward. So I've got a 3 or 4 to 1 risk reward. Always evaluate risk reward potential when you're looking at a potential trade setup. Ask yourself, what's the size of the stop loss I'm willing to take, and what's a realistic, not an overly optimistic. You know who you are. Those of you, maybe it'll run all the way back up to 26. Yeah, probably not. But hey, if I can buy here 15 and sell 20, I'm a happy camper. If I buy 15.50, risk is 14, exit target is say 19.5 or right under 20. I've got maybe $4 or $5 of upside and $1.50 of downside. So that's a 3 to 1 risk reward. So when you're looking at your Metastock charts, I want you to understand risk reward and trade potential for the setups that you're considering. So this is still a kind of a bullish pattern because of all this green, unless it gets down to the 52-week low of 14.3. And by the way, just as a side note, I've traded VIX ETN since. I profitably traded VXX on the flash crash day, and I sold the top because I saw a shooting star at the top. So anyway, I've been trading the VIX ETNs. I like to, these are ones you buy low, sell high. Just like the VIX, the CBOE Volatility Index, you look for wild extreme pivots, right? So it had been up at 160 a share, now down at 15. Normally you don't want to catch a falling knife, but if there is some strength and it's near 52-week low, it often makes for a good risk reward trade setup. Let's pull up another chart. Let me get this here for us. So we looked at Marathon, we looked at PROG, we looked at KOLD and UVXY. Let's take a look at strength in Microsoft. That's a beautiful thing, right? Now this here is a pattern I call an acceleration ramp, and that's basically where you've got a nice, tight, clean, steady uptrend that then hockey sticks up with larger green candles, as we saw there right after the gap, and a sharper slope on the upside. So Microsoft, another good, really good example, ran from 280 up to 340 here just since October. So in a mere 6 weeks, it's gone, you know, whatever. It's at $60. In just about 6 weeks, so about $10 a week, so not too bad. One other thing I want you to look for is, again, large whole body green candles, and you can see those here in your Metastock charts right up here near the high with the gap continuation. I don't buy gap up days for swing trades. I day trade them. I usually buy not the day after, but the second day. That's another rider downer, another quick tip. On the day of the gap, have at it for day trading if you want, but don't buy the day of the gap or the day after the gap, because often they'll mean revert and pull back down, do a gap reversal or at least a 50% pullback by 2 days. The day, say if it gapped up on Tuesday, you'd buy it on Thursday. If it gapped up on Wednesday, you'd buy it on Friday. If it gapped up on Monday, you'd buy it on Wednesday, kind of thing. So anyway, this is a really good example of a directional breakout of Microsoft and really good directional strength. Hey, Mary. Hey, Jay. Let me know. Hey, you're welcome. Thanks for being here. Let me know if any questions too. I don't have any big, long, extended sales pitch at the end of the presentation, so I do have time. Just, you know, go to my site and join my free Saturday webinars. That's my only, get to know me for free, right? Not like time limited discount, blah, blah, blah. No, I don't do that. I'm not a salesman. I'm a trader trying to help traders. Anyway, take a look at the directional strength, what's called directional volatility. And that's kind of a combination of the relative strength of the trend. Is it a weak sharp uptrend or weak sideways trend, or very strong 45-degree angle trend like this guy? And is it a relatively tight, not too loopy up and down trend? And is it likely to keep going up? And this one says yes to me. It says buy me over 345, right? Not a trade recommendation. But Microsoft still looks fantastic and a good uptrend on a directional breakout. So those are the kind of charts I want to look for. Oh, thanks. All right, now what else do we have? Where is my cursor? Right here. Now, one chart to keep on the radar, and there's two charts I want you to keep on the radar. One is Ford Motor. If it breaks 20 and stays over 20 and behaves itself, really good, strong directional breakout. And Ford and Pfizer are two of my favorite breakout continuation charts. Pfizer because of the COVID pill it developed, and it's been hacking around up near 50 for a while. And Ford Motor Company is an EV play if it breaks over 21. I don't know where it closed today. Maybe it broke the 21 today. Let's see.
1996.
Not quite, but almost. 1996. Okay, thanks. We're almost at that 21. I used to be a statistician for the Ford Motor Company, so I'm a total numbers geek, right? Or my wife, who's from Japan, calls me otaku, which means like computer nerd geek. That's fine. The geeks run the world. That's good. Anyway, Ford Motor Company is what I'd call a laggard in the EV space, right? Well, and what's up with that company Rivner? I mean, more power to them. The IPO that just came out, RIVN, I think it was. Anyway, huge run. Congratulations anyone who got a offering on that thing and cashed in. But anyway, I like Ford as kind of a lagging EV play. I used to work for the electronics division in Ford back in 1991. No, 92. It was 92, 93, 94, I think it was. Back in the early 90s, I was a statistician and quality engineer for the Ford Motor Company. A great company, a great management. My favorite company I've ever worked for. I haven't worked for another person in over 2 decades now. It's a relief. They said I wasn't a team player. I said it's hard to fly like an eagle when you're surrounded by turkeys. Bada bing. But don't get me started. Not at Ford, though. I mean, Ford had great people. Other companies I work for. Anyway, Ford's probably a really good lagging EV play, so do pay attention to this one. I would buy it. I was looking for it to break the 20, and it did, but it promptly crapped out and came back down to 1950. I got stopped out. Happens to the best of us. I'm going to rebuy this guy, not a trade recommendation, over the 21, say 2120, 2150, somewhere like that, with a hard stop at 1950. I think that'll be a really good play. I've been calling Ford long for my members in my live trading room since it was down at 10 and then again over 15. And then again now over 20. So little egg on my face because the 20 didn't hold. It's trying. It's kind of hacking around up here. But I think Ford is an outstanding candidate for an EV play, and I think there's a huge, this could easily double or triple or do a Tesla run, especially, all Ford needs to do, if any of you at Ford are listening, all Ford would need to do is release a positive press release about some progress they're making on the EV front, and that will spike the stock price enormously. So anyway, I'm a big fan of Ford. I always have been since I worked for them, and as a kind of a lagging EV play, they're starting to catch up. It's been a wonderful chart this whole past year, kind of up and down, but it's been overall very up. And lately, again, this is that acceleration ramp I was talking about. Does everyone understand that? It's like an airplane taking off. It's a steady move up like this, and then a hockey stick 45 out. For more, you can see that article I published in Stocks and Commodities magazine. I was rated #1 author in the world year before last. So thanks to all of you who voted for me in the Reader's Choice Awards for Stocks and Commodities. My articles are rated #1 and #3. So I got the gold and the silver Olympic awards or whatever equivalent. Anyway, Ford I am strongly in favor of Ford as being one of the few things that's not overbought in this current market. Everything, well, I don't say everything else. Cannabis stocks are also lagging. They had done a nice pop a couple of days ago. They pulled back. I'm still in a little bit of cannabis. I like Tilray, Canopy Growth, and My favorite is Aurora Cannabis, ACB, for the cannabis place. ACB, CGC, and TLRY. But for EV, a lot of the EV stuff still has room to run, but not without pullbacks and noise and chop up here. Forward, though, is a nice, well-mannered chart. So that one looks pretty good. Let's see what else. About 15 minutes left here, so that's good. Hey, Jeff, I can go ahead and just click on this and change the ticker, right? I don't have to reduce it back down.
Yeah, you can. Well, you can just type in any symbol you want, hit enter. It'll pull it up.
Cool. Such a handy charting software it is. Best in the net, right? So here's Pfizer's ordinary shares. Let's take a look at this guy. Ba-da-dum, ba-dum. Now 52 is the 50, and guys, name that candle pattern. That was, by the way, the 52-week high in Pfizer. What is that candle called? Trying to wake everyone up here. Come on, folks, let's get with it. Ding, 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 ding. I know you guys, if you've been watching all these presentations all day and all week, kudos to Jeff and the team at Metastock for putting the shindig together. There's a lot of work to organize and even more work to sit through all the dang presentations. So well done, sir. Anyway, and for all of you, it's a lot of, I always like learning from other people too, because a lot of times I'll pick up a tidbit or nugget that I hadn't heard anywhere else and I add that to my trading mix and test it out. Anyway, that's a shooting star. When you wish upon a star, sell that sucker. All right, anyway, a little Disney, not magic. Anyway, we got a shooting star. You sell that punk up there and you buy the hammer time. Ba, 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 da. Keeping you all entertained here. We got a shooting star that said to sell the loss of the shooting star low and a hammer that said buy the high of the shooting star high, right? Ba-da-ba-dum, ba-dum. I think Pfizer is not a trade recommendation for educational use only, but I think Pfizer's a screaming buy over 52.5. I'm going to start buying it at 53 because I like to round up to the nearest whole number. I think the 52-week high on Pfizer was somewhere near 52. Anyway, I'm going to wait for, I think it was 52.30 if memory serves. Anyway, I'm going to buy over 53 in PFE if Pfizer runs up. Look at this bullish cup pattern, right? It's got a nice swoop up. It's got a gap up. It's got the gap continuation going for it, but it's right under resistance. Right here and now would be an epic stupid time to buy. Well, maybe not epic stupid, but probably an ill-informed. You don't want to buy right under resistance. I mean, this is still a great looking chart, so maybe it's not terrible to buy right here. But personally, I want to see every other trader on the street's going to see two things. One is what's the reaction to a test or a retest of the previous high right near the 52. And the other is where's the false breakout going to be, the noise around that area. Kind of like a cup and a handle. We don't want to fool around with the handle. We want the breakout above the handle high. So we stay clear on this guy till, I'm going to stay clear till it breaks 53. And I'm definitely going to be buying Pfizer over 53 because with the hard stop, I'm going to use, say, 51. Typically for swing trades, for equities, I use no more than a $2 or so as a maximum stop, maybe $3 depending on the shares, but the number of shares. But typically you want to keep your stop losses no more than a 2 or 3 day low or $2 or $3 to maximum. So with that in mind, I used to teach college classes, believe it or not, back when I lived in Honolulu for a decade. I was a consultant to the visitor industry, and I was a instructor for a lot of the private colleges there. And that's where I came up with the idea for Day Trading University was they're doing online training, and I founded Day Trading University in '99, and the rest is history. Anyway, so for all of you in the back of the class there, wake up. Where would you trail a stop? Let's say you bought this today, and let's say you bought it yesterday. Let's say you bought it. Let's say you bought here. Where would you put your stop loss? A hint, the smart traders use tight stops. The new, struggling, still learning traders use really wide stops. Don't be forgiving. Be very, very specific and very, very tight with your trades. When in doubt, get out. Tight is right. Lots of cliches out there in the trading industry, and most of them are right. So where would you trail a stop? Who can tell me? Hey, TJ. Hey, John. Hey, Ed. Hey, Mira. Uh, 48 would be the maximum. I would use 49 or so, but yeah, anywhere in this 48 to 49 region, good answer from those of you who answered. I would personally use right here, right on 48 and a half. I would scale out. I'd sell like half of it right here. That's how I trade. I always scale in, I scale out. I'd sell half or maybe 2/3 of it if I lost 49, and I definitely go to all cash at 48. So kind of a little complex answer, but 48 to 49 is what I'm looking for. That's the region that proves the uptrend is broken, and we may well go back down. Now, one thing that you may find often is the case in your trades is a trade saving strategy where, maybe you get stopped out on some of it. How many of you rebuy? I do this for day trades daily. I was day trading UVXY like a maniac today. I was kicking UVXY up and down Wall Street, and cold too, and TZA. Those are my three favorite inverses, by the way. KOLD, the inverse natural gas, and it ran, up to 7 to 8.5 today. UVXY and TZA, the Russell small cap bear. Anyway, there's always going to be a price that proves a trade wrong. But frequently you get a false breakdown, shakes you out, and then it runs up without you. And if you've had that happen a few hundred times, you get frustrated and you say to yourself, there's got to be a better way. Or to quote one of my favorite movies, The Princess Bride, inconceivable. So don't get punked out by the market and then fail to re-enter. Always re-enter, but do so thoughtfully. Do so in pieces, right? I like when I trade, when I day trade or swing trade things, I put on 100 or 200 shares at the most at a time, and then I scale in 100 or 200 or 300 share blocks. So I buy in increments. And same thing when I get stopped out, something loses support, I'm not going to sell the entire thing because often it'll go on and go back up. So I'll sell half or maybe 2/3 of it at a stop loss value, and then have a secondary stop that I will use to sell the rest of it. And frequently what you'll find is the first half of the trade gets stopped out, but it bounces before the second stop comes back to life. Then you can rebuy the shares and you're off to the races. So that kind of trade management with position sizing and scaling is absolutely critical to success as a trader. Where traders get into trouble is trading large size based on magic chart patterns, taking large stop losses, grinding their account down painfully, bit at a time, and struggling. And if you've been there and done that like I did back in my early days, it can be really discouraging and really disappointing to see stocks not work out that you thought for sure was going to be a sure thing. The only sure thing in the market is it will take your money if you're on the wrong side of your trades. That's the only sure thing, right? Excuse me. All we've got is our stops. All we've got is our risk management. All we've got is our intelligence and the ability to put on our chart trades based on some of the things you can see on these Metastock charts. They're really clean, right? It's so crystal clear. They just pop. It tells you exactly what's going on, but you have to know what to look for. One of the things that I will mention again is very important to, before you spend a nickel, how many of you, again, pet peeve here, but how many of you, show of hands, I think that somebody's free stuff should be able to make you money before you pay a nickel to them. How many of you agree with that? I would not take anybody's time-limited special offer, buy now or derp derp. No. Make sure that their free content can make you money before you give them 1 red cent. How many of you would agree with this? When I say this at money show events, all the hands go up, but how many of you would agree that somebody's free content should make you money before you even consider spending any money with that person? I think that's a smart idea. Kind of like you go to Costco and you see, I don't know, some kind of a snack, some pretzels or something. You want to take a taste of it and see if does that get the free sample and does that taste good before you go buy the big ass box of stuff, right? So how many of you would agree? Okay, that's amen, preach. All right. Yes, okay, good to hear. And the other thing that so those are 2 key things when evaluating trading educators. Number 1, make sure that they are the real deal and actually have some kind of proof that they're not just some Yahoo talking, but they actually, come on, that they actually have tax return proof. This is from IB. This is a long, I need to post one from this past year, Fidelity, and I will in February or whatever. But anyway, or I could do this past years anyway. Make sure that number 1, they are a real trader That's really important. Are they even what they say they are? Are they a real trader, or are they a professional internet marketer / chart talker, of which that's like 98% of the educators, unfortunately. There's a few authentic people, but the vast majority of trading educators are BSers who don't trade. Make sure they have tax return proof. One reviewer, Emmett, who I like, said I was one of only 5 educators out of hundreds he saw that had any proof that they had a profitable year and some tax return proofs actually traded. I was one of only 5 out of all the hundreds he's looked at. And I agree with that, unfortunately. So make sure you're learning from the real deal. And I think we're going to wrap up here. If there's any questions, let me know. Free Saturday webinars. So learn with me for free. The price is right. There's no time limited discount. For now, for Metastock viewers only, for the next 20 minutes, you too can save off my $5,000 course is now only $29.99. Operators are staying. No, I'm not that guy. I'm authentic. I'm the real deal. I'm a UCLA graduate, former corporate statistician for Ford, Fortune 500 consultant, and a guy who used to work with a lot of big companies to help improve processes, and then turned into day trading back in the late 90s because I didn't have to put up with other people. How many of you have ever had a boss from hell, or coworkers who are morons, or customers who are really, really a pain in the butt? I used to all the time, and so for that reason, I got into trading. So I don't have to deal with anybody except people I like. The team at Metastock and Jeff and you folks who are real traders, people I relate to and that I enjoy. I authentically enjoy your folks' company instead of the office politics and that kind of BS. That's why I like trading. Anyway, so learn with me for free. My free Saturday webinars, I've been doing them over a decade. We got over 6,500 people have registered for those. So a big popular events every Saturday at noon Eastern time. I use Zoom. I had been on GoToWebinar, but I migrated over to Zoom. So anyway, those are free, and learn with me for a few months. Test out my ideas. See how well they work. See if you can make money with them. And then if you can and you like what you learn, then maybe consider joining my chat room. So that's kind of it for the presentation. Any questions? What's the website for Saturday? Yeah, just go to trademastery.com. Yeah, Jeff, yeah.
All right, I didn't have a lot of questions. Let's see, other than one you just answered. I do have a question for you though, Ken.
Yeah, sure
Will
thing.
you be willing to help us pick out the next prize contest winner?
Absolutely, I can come up with a number, sure thing.
All right, anywhere between 1 and 11,314.
Oh, it's got to be 7777. I'm all about the numbers. Lucky sevens, 4 sevens in a row.
Okay, let's find that person. And
I
then,
often buy things with 7 and like 22.7 or 31.17, and it works for me often. So anyway, I'm sorry, I digress. Who's a lucky winner? Without their last name.
Right, I remembered. It's Eric M.
Eric
in the
M.
US. Yeah. On this video, I'll look up and we'll figure out a suitable price for Eric M. Ken, thank you for coming. It's good to have you.
Thank you, Jeff. Yeah, it's a pleasure, man. It's good to work with you. All these years since when we first talked in Dallas, a long time. When was that? That was like 8 years ago or something. 10 years ago.
It was a long time. 25 years for me here at this company at Metastock in March, if you can believe that.
I salute you. You're a rock star when it comes to people in the charting software. You're visible, you're out there, you're a champion for the platform. And I was really honestly impressed with the expert advisor that you showed on the Metastock charts in the last webinar. It was really impressive. It actually really worked and would have made me money. So I was impressed. So folks, do try Metastock. It's voted #1 in this price category for lots and lots of years. And I hope to work with you guys in the future. So take care and best wishes for success. Yeah.
Thanks, Ken. I always love somebody that looks up forward. All right, let's go ahead and let me go ahead. Thank you, Ken. TradeMastery.com is where you can find him. Thank you very much for spending some time with us today, Ken. All right,
thanks.
Awesome. Okay. Okay. Let's kind of go back in here real quick. Let me make sure I'm in the right place. Let's do the prize giveaway. So, as we just said, Eric M. Let me go ahead and grab that, and let's figure out what you've won. Let's go in here and All right, we are going to give you John Seville's course. So let me go ahead and read a little bit of a description for that. John Seville is somebody that we have speaking tomorrow. He runs Acorn Wealth Corporation. Very nice guy. Has an Australian accent, and his smart mending trading course, according to the description he provided, in my best reading language, has indicators. It's a one-on-one training along with 3 months access to their smart money trading alerts. The retail value of that is $5,185. So you've won the John Seville course. Let me go ahead and kind of just put that down here, and we will contact you on how you can take advantage of that. So congratulations on winning that. And there we go. All right, my notes are taken. I find that I have to write these down, or if I just write them down, I lose them. And, you know, it's kind of a pain. I have to go watch the video to see who won, all that kind of stuff. Do want to thank all of our great sponsors today. I hope everybody's doing well. How are we doing? Let us know how you're enjoying the scale of the conference in the chat today. I do want to say thank you to Stocks and Commodities for sponsoring the event, which we did talk a little bit about last time. So this time I'll talk a little bit more about the CMT Association. CMT Association is a very, very good organization. They basically accredit some of the top hedge funds, brokerage, institutional traders. They work really in risk management, systems development, portfolio management, applied behavioral finance. We've been working with them for just 2 or 3 events now. And I have to say they're a very, very professional organization. It's been a good honor to be associated with CMT, and we really appreciate their sponsorship and their help with the event. So I want to say that. In terms of Metastock, you might have heard about Metastock today. 28 years in a row, we've been rated #1 in our price category. I love the scanning, the ability to kind of just go through all of the stocks that I'm interested in and find the ones that have an opportunity. We talked a lot about system testing today and yesterday. The forecaster, Scott shouted earlier. It's a great software program. There's a reason it's been rated #1 in its price category for 28 years in a row. I personally wouldn't trade without it. I might be the most biased person here, and I probably am, but I would recommend that you try it. What we're doing is part of the conference special. Our rates start as low as $59 per month. If you pay for a month, we'll get you the second and the third month for free. Okay. You should also consider pairing that with Learn Metastock. That's a good place to learn a little bit more about it. You can sign up for that extended trial at metastock.com/conference promo, but shortened. You can give us a call. We'd be happy to send you more information about Metastock at 800-882-3040, or you can go to metastock.com/saleschat. So our next presenter is, for the very first time, in the Metastock room, but I've known Sunny for a very long time. I remember, and I don't remember how long ago it was, but I remember meeting Sunny at, I think it was a Traders Expo in Vegas, and I remember 2 things. One, she had a dog in a handbag, and I thought that was cool. 2, she was very, very smart. But Sunny is a very, very prolific systems designer. She's been writing systems for a long time. She'll have to tell you how long, but I know that I'm very interested in kind of seeing what she has to say. And she's just finished putting her Sunny bands on Metastock, and she's going to maybe talk a little bit about that and about futures trading. So Sunny, how are you doing?
I'm doing great. Thank you, Jeff. How are you doing?
Good. I'm doing great. I want to welcome you for your first time in the Metastock, I guess, YouTube channel, GoToWebinar, whatever we want to call it. Let me go ahead. Let me get you the presenter here. So it should ask you if you want to share your screen.
You see it? I said share. Do you see it?
Yep, I see it.
Yeah, it says people can see it.
Yes, and we can hear you. You're coming through very well.
Good.
I'll get out of the way. It's your turn.
All right, fantastic. So you brought it up. Let me tell you about my dog. Of course, this is not the same one that you saw 25 years ago, but you know, because she died. She was Pewter was special. She went everywhere with me in her purse, and now I have a little one called Pumpkin, And believe it or not, she's actually smaller than Pewter was. This one weighs 2.5 pounds. And she knows 109 commands now. She is really smart and well-trained. I've been working with her since she was 7 weeks old, teaching her commands and tricks. And she's kind of amazing. So I'm proud of her.
What kind
Today,
of a dog
I'm going
is
to
she?
teach you about futures trading with Sunny Bands, which, as Jeff said, I just got on Metastock. And I have a lot of Metastock charts to show you, but I also have some other charts because there are other indicators I don't yet have on Metastock, but I am going to in the very near future because Metastock has the best customer support in the industry, and they help me out. So let's see if we can go to the next slide. This one's going to be about futures trading for the uninitiated. So it's also known as futures trading for the uninitiated because my passion is in helping beginners and intermediate traders. This talk is for traders who have not tried futures yet. You may have traded stocks, but not futures. And it's also for people who have not traded much, maybe invested, but not traded much and want to learn. And those who think futures are risky. So they are, but I have to tell you how and why they are risky. And it's also for folks who want to improve their trading results. Maybe you're trading, but you're not happy yet, and you're not wildly successful. So I would love to help you get to that point. So it's for beginners and intermediates, actually, of both types. I have to tell you that there is risk of loss in trading and investing. You can, and at sometime will lose everything you've got invested. And that hypothetical performance is not necessarily what's going to happen in the future. So many folks have started trading their investing portfolios with choice stocks, and I do that too. I do have a large stock portfolio that I keep. I do trade it. I don't just invest in it. I bought Tesla low, sold it high, waited till it dropped low, and then bought some more. So every time Tesla drops down, I buy more, but that's what I call investing. Fewer of you probably have traded futures because the word on the street is that they're too risky. So I'm going to dispel any concerns you may have and teach you how I trade futures for my own account. I am a trader. I've been trading for 41 years. I trade both futures and stocks and a little bit of crypto. And I do not trade options because the only thing I know to do with options is to lose money. First, I'm going to tell you a little bit about myself, but I'm going to show you how I trade before I do that. As Ken said, if you want to learn from somebody, be sure you learn from somebody who trades. And I have been trading for a living for 41 years. I primarily trade this S&P futures contract on 1 and 5 minute charts. I don't do it long term. I trade it 4 or 5 times a day, every day. I do have long-term stock holdings, and I consider that to be a week or more, maybe a month. And I do trade Bitcoin and Ethereum. I trade with my dynamic moving average histogram and Sunny Bands. I don't yet have the dynamic histogram on Metastock, but I will very shortly. Oh, and today, if you choose the right number out of the hat, then I'm giving a free Sunny Bands away today, which is $1,995. The only discounts I ever give are in October every year. I give a half off discount. But today, somebody, if the right number is drawn, will get Sunny Bands for free. So this, where do I get let's see, get a laser pointer here. Hang on 1 second. Laser pointer. Okay, so now you can see my mouse clearly. The Sunny Bands are the bands that are around price. There's upper, inner, upper, outer, lower, inner, and lower, outer band. And in the center, I have what I call my dynamic moving average. This, you'll see in a minute, I have 3 degrees in mathematics. So I did some mathematical calculations that smooth out averages. It's not an exponential moving average. It's not Perry Kaufman's dynamic, or what does he call it? Not adjustable, but he has a moving average. It's not that one. It's different from anybody else's, and what it does is avoids whipsaw. I learned very early in my career that whipsaw kills you. You can be a trend trader, and then as soon as you get in sideways periods like this, you get whipsawed all over the place and lose all the money you made in the trend. So this average was developed so that gold is on top here, it stays on top, stays on top, stays on top, and you would have stayed long this entire time because the gold part of the DMA was on top. The histogram is this, turns purple and green and then gold and red, which tells me when the trend is over and the market is changing direction. At the bottom, I have my RSI, which is not like the standard RSI. It's smoothed, again, with my dynamic moving average functions, so that you can actually see where the RSI is going without all the jigs and jags. So this is the kind of insight that you can get for free. All you have to do is sign up for my free Sunday night newsletter, Sunny Side of the Street. These, I think, Jeff, that these links are going to be hyperlinked when you post this on YouTube, but they are hyperlinked so that you can, if you get the slides, you can click on the links. So all you have to do is sign up. I need you to opt in because I can't send emails out just to everybody in the world. You have to opt in. So it's called Sunny Side of the Street. It gives predictions. It gives analysis. It's a technical newsletter, and it comes out every Sunday night. If you can't find it on on these links, my website is moneymentor.com. So just email me. I'm at sunny@moneymentor.com. That's easy enough. Or you can click on the links above. So just quickly, I was named by Stark Research #1 trader twice with 365% and 178% profit trading the S&P futures using Sunny Bands and my dynamic moving average. And there you can see #1, Rourke International. That's my trading company. You can also see that the third one below is 142%. So I was 365. The next highest one was 142. Kind of left them in the dust. I have 3 degrees in mathematics and a degree in photography. And the reason for that is, interestingly enough, while I was getting my bachelor's in math, I went to San Jose State, and they told me you can't just keep taking all these courses in mathematics for your electives. You have to take something else. You've got to broaden your education. I was taking 5 math classes every semester and thoroughly loving it. So I'm not, my body is just a vehicle to carry my head. So I'm not an exerciser. I don't love to walk across campus. So I said, what's next door? And they said, well, that's the English building. And I said, well, that's a possibility. I love to read, so I could take English classes. What's on the other side of the building? And they said, well, that's the Industrial Arts building. And I said, what's there? And they said, a whole bunch of different things that I didn't like. And then they said photography. So I'm like, okay, I think I'll minor in photography, which I did. And then after I retired, I got another degree in photography and film. I've directed movies and commercials and produced things and written scripts and all that kind of thing. So I've been programming for 52 years. I've been trading for 41 years. I was a systems programmer for Lockheed as my first career. And I quit Lockheed and founded a little company with some friends called ISCO, which was the world's leader in computer graphics software. And one of the things we did was Harvard Graphics. I retired when I was 30 years old. And then I did what I thought was the smart thing. I gave my money to money managers, which turns out was a bad idea. In the first 3 weeks, they lost $75,000, which in 1980 was a lot of money. And I thought, you know what? I can do that badly on my own. So I taught myself to trade. I read 117 books before I got started. And at this point, I've read 733 trading books. So I pretty much try to keep up with everything that's in the industry. And on my website, I have a little bookstore where I'm going to be linking all the books that you can buy about trading. So you don't have to hunt through Amazon for books you don't know. They're all going to be on Money Mentor. And for the first year, I did not trade. I just watched and learned, and I found that there's a rhythm to the markets. I did publish a monthly magazine for 8 years called Trader's Catalog and Resource Guide. And then I quit doing that just about the time the internet came out because I realized paper's expensive, mailing's expensive, and it's all going to be online. I've written article. Well, let's do the books first. I've written 5 best-selling books: Trading 101, Trading 102, Electronic Day Trading 101, Getting Started in Trading, and TradeStation Made Easy. And then I wrote Going Vegan with Linda Blair, a friend of mine, the actress Linda Blair. Now I'm working on a book called Easy Language, Object-Oriented Programming Made Easy with a friend of mine, Sam Tennis, who is known as Mr. Easy Language. I've written articles for, I think, all of the magazines. Pardon me. And more of those. Here are the books that I've written so far. I did write Using Easy Language 9.x with Murray Ruggiero, who has since passed. And I only have 10 copies of that book left. I'm selling them cheaper than they're sold on Amazon. If anybody wants them, go to Money Mentor and pick up your copy while there's still some left, because they're not going to be printed. And then this is the one that I'm working on now, which is currently over 700 pages, and I'm not done yet. So I've been rated in the top 10 consultants by Stocks and Commodities Magazine, top trader by Stark Research, and I belong to most of the technical analysis groups, associations. And I've been consistently rated by Stocks and Commodities in the top 10. And what else? Oh, on Money Mentor, there's a page called, you can see, where's my mouse now? You can see out here where it says quips. If you go to this menu, quips, you can see there are hundreds of quotes there that people have said. Things about my services, things about my books. I like the second one. Thanks to Sunny Vans, I have a net worth over $1.5 million. Don started 3 years ago with a $25,000 account, and now he's over $2 million in his account. I have a Facebook page where I don't post them every day, but I do post significant charts and predictions about where the market, my opinion, I do my opinion about where I think the market's going. I do have free predictions on Facebook. I have free predictions at the Sunny Side of the Street. You can click there to get my Sunday night newsletter. I have a live trading room on Tuesday mornings that's also free. I don't follow popular opinion. I've called for rising markets when everybody else was watching for a crash, and then just the reverse, called for corrections when everybody else was buying. And usually, the public buys the tops and sells the bottoms. So I watch for that. And I've completely revised my website, Money Mentor, and I would love it if you stop by and see that, check it out. So what are futures? They're also known as derivatives because the values derive from the underlying. So by that I mean corn is a commodity you buy in baskets, but the derivative is a futures contract based on the price of corn. So in some ways they're not like stocks, and in other ways they are like stocks. They go up and they go down, and the idea is to catch the bottoms and sell at the tops. If you own a stock, you own a small piece of a real company, and you can hold on to it forever, and hopefully in time it will continue to go up. Stocks don't usually drop to zero. Some of them do, but most of them don't. And if you trade futures, you're buying a contract to take delivery of a commodity at a later date. So if you buy corn futures, you're saying that you want to take delivery of that corn. If you buy in the beginning of the 3-month expiration period, you'll be wanting to take delivery 3 months hence. And yes, you could lose more money than your initial investment, and I'll tell you how, and that's why everybody thinks it's so risky. You can buy stocks, and if you want to set up a margin account and the stock is borrowable, then you can short it. I don't like to short stocks. I like to buy stocks and sell stocks, but I don't like to trade on margin on stocks. But you will have a margin account if you trade futures because you're borrowing money from the exchange. a lot of people ask me, what is shorting? And I remember when I was first learning to trade that I didn't know what long and short meant. It was confusing. And I certainly didn't know what a put and a call was. But I remember getting dressed every morning, going to the walk-in closet and saying, what's a long, what's a short, what's a put, what's a call? And practicing until I understood it. So long is buying in the hopes that whatever it is will go up and you can make profit by that. Shorting is selling something, now this is complex, selling something you don't own on the promise that you'll buy it back later on the hopes that it will go down. It's called short because back in the olden days, they had a book that they met under the buttonwood tree in New York, and they would write down in a log book, big, a banker's book of some kind. They would write down all the trades. So if Joe bought corn, they would write that down. But if Larry decided that he was going to sell corn based on the fact that he thought it was going down, his entry would, after Larry in the logbook, it would say nothing in the buy column, and then it would be short an entry. Okay, so if his price was missing, it was because he was short, and it was what was put in there was the price at which he was willing to buy back when it went down. Here's a chart, a Metastock chart of Tesla, and you can see that if you buy there at the bottom where the arrow is, you will be going long in the hopes that in time Tesla will be going up. Here's where you would short if you were going short this stock. And there's where you would get out. And again, you could short at the top and get out at that point. So in those trades, if you were shorting Tesla, those are the positions you'd be getting in and out at. I did buy at the bottom where that dot is, and I did sell at the top where the arrow is. I don't go short stocks, as I said, but I did go get out of my Tesla at that point, and then I bought back in down at the bottom of that, and now Tesla's going up again. Why did I put it in quotes? Well, because there is no futures contract that I'm aware of on Tesla. So that's why I was saying short. So Tesla is a stock. It's not a futures contract. If you go long and short like that, you need a tradable instrument. So we're going to look at the E-mini. We could look at corn or soybeans or cotton or something like that. But over the years, I have specialized in the S&P futures, and I feel the rhythm. I see the movement and feel it. I have an indicator that I call bean ticks. It makes a sound when the market's going up, and it makes another sound when the market's going down. I can hear and feel the market because I've been trading S&P futures for 41 years. So here's the E-mini. Here's ES. I'm sorry about that. I don't know why that keeps coming up. Here's the ES on a chart. You can see my Sunny Bands indicator on the E-mini. And futures contracts now, the reason you cannot hold them forever is they expire pretty much every 3 months. Some of them expire more often than that, but I'm going to show you the symbols for futures contracts. So you've got to know when you're trading one of these symbols, you have to know where it when it expires, and then you need to use the code for the month and year to designate the contract. So for instance, here's some futures contracts from the Chicago Mercantile Exchange, and you can see the name of whatever it is, Australian dollar, the symbol is AD, and it expires on these delivery months, H, M, U, and Z. And I'm going to tell you what those are in just a second. On Money Mentor, you can see, I have a little section on Money Mentor called resources or reference. I can't remember if it's resources or reference, but you go to it on the top menu and you can pull down to just all kinds of things. I use Money Mentor as the repository for everything I know and need to remember and don't have memorized. So you can go there and see the futures contracts. Oh yeah, it's reference. There we go. There's the link. And the reason you can't hold them forever is that they expire. HMUZ, they expire every 3 months. Sometimes more often, things like corn and soybeans, I'm not sure which ones, but a lot of them expire in other months as well. And I told you the history of that with the buttonwood tree, but futures used to be crops and animals. So, corn, soybeans, those are crops. Live cattle, that's an animal. And crops came to market every 3 months. You'd plant your seeds, 3 months later, you'd have a crop. Likewise, animals were born and matured every 3 months. You could sell a cow when it was 3 months old. And here are the futures expiration month codes. But the ones I know for S&P trading are H, M, U, and Z. H stands for March, M is for June, U is for September, and Z is for December. So right now I'm trading the December contract, which will expire on the 3rd Friday of December. I'll tell you more about that in just a second. And then I will go to the March 22 contract. So the current expiration is December, since September's already passed. The year's 2021. So here's how we construct the symbol. ES is the contract, E-mini. Nobody trades the big boy anymore. Z is the current expiration month, and 21 is the year. So ESZ21 is the contract. And here's the chart of the E-mini. And you can see that it, I guess it was Ken that said that it was Perry Kaufman early this morning who said that it was a very volatile contract, and it is. But I don't look at it on a daily chart. So I'm going to tell you in a minute what I do trade and show you charts of that. So delivery means that in the old days, exchanges physically delivered the commodity to your doorstep. And they still do for some contracts. But for the most part, they simply cash you out of your position, win or lose, whatever you're in, and either deposit the money in your account or take it out of your account if you're losing. Imagine for a second a herd of live cattle showing up on your doorstep. Rollover and expiration are two different things about the same subject. So you've got to remember the dates so you don't take delivery. Expiration is the 3rd Friday of the 3rd month. So expiration month H, so that's March. The expiration is on the 3rd Friday of March, because that's the 3rd month. Rollover, however, is the Thursday of the prior week, not the 3rd Thursday or the 2nd Thursday. It's the Thursday of the prior week from the 3rd Friday. Traders really usually roll over on this Thursday and begin trading what they call the front month. And that's when you see all the activity begin on that contract. Everybody rolls over on that Thursday. So what you do is you just sell the contract you're in and go into the next contract, buy the next one. I have it on my phone on an alarm, and I just said you simply close the contract you're in and buy or sell the next one. So on my phone, the calendar pops up with rollover on Thursday, the 10th of June. So you can see here, 1, 2, 3rd Friday is the 18th. The Thursday before is the 10th. Thursday of the week before from the 18th is the 10th. Technical Analysis of Stocks and Commodities magazine, most of us call it TASK these days. In the back of their magazine has a futures liquidity table. They publish that every month. And you can see out here when the stars go all the way out to the right, that's the most liquid contract. I don't like to buy something I can't sell, so I'm always trading the most liquid contracts. S&P 500 E-mini is right at the top. It's the most liquid contract. The 10-year T-note is next. The NASDAQ E-mini in Q is down at 7th on that chart. Still liquid, still very liquid, but not as liquid as the E-mini. YM, which is for the Dow, is down at 19th. I do not trade the Dow futures contract. Remember, don't buy something you can't sell. And right there's where you look for the liquidity. Let's look at how the E-mini and the Dow and the NASDAQ all compare to each other. You can see I've drawn vertical lines, so you can see top here, and a top there. On this vertical line, we've got a low here. The low was 2 days earlier on the Dow, and it's exactly the same low on the NASDAQ. High on the E-mini, high on the Dow, one day earlier was the high on the NASDAQ. When you're trading stocks, you pay the value shown on your quote. So for instance, Google yesterday cost $29.70 per share. Microsoft was $336 per share. And unless you have a margin account where you're trading on borrowed money, there's no leverage. So if you buy one share of Google, it's going to cost you $2,970 per share. Futures, however, are leveraged highly. Futures margin rates, I have those on my website. You can find those at any time. I also have an application that I use that puts it up on a chart on my computer so I can see what the current margin rates are, because they do change them. As the markets become more volatile, the margin gets more expensive. Now here you can see futures margin rates. On this chart, the E-mini was $12,100. It's currently $12,650 margin. So to control one contract of the E-mini, you have to have $12,650 in your account. Now, I don't do that. I have double the margin in my account for every single contract I trade. So 12,650 times 2 is what, about 25 something, 25,200, maybe 300. So that's what I have in my account for every contract I trade. I don't believe in being overextended. So how much is one share? It's $46.85 yesterday. There are 500 stocks in the S&P 500. 500 times $46.85 is over $2 million. So for $12,650, you're controlling over $2 million worth of the commodity. That's just 0.6% that you have to put up. If you double that, it's only 1.2%. So you're controlling a large amount of money with a small amount of money. It's really steep leverage. Now we come to the question, aren't futures risky? People think that since futures are so highly leveraged, you can lose all of your money. And since you're so highly leveraged, yes, you could lose a lot. If you don't have enough money in your account to cover for a loss, you will have a margin call. And by that, I mean that you can lose more than is in your account. If you get a margin call, your broker's going to call you and send you a notice by email that you have a margin call. And that means you must bring the account back over the margin rate within 24 hours. And they are insistent about that. If you don't bring it back over margin, they'll close your account and you won't be able to open it again. So if you're sitting on a losing rate trade, of course, this could amount to a lot of money if you get a margin call. If you had $12,650 in your account and you lost, I don't know, $1,000, then you've got to put in an extra $1,000 to bring yourself back up within the margin rate. Let's talk about how much could you make, or can I make, trading it. So the E-mini is traded at $12.50 a tick, or $50 per point. So if it's trading at $46.85 and it goes to $46.86 and we're long, then we make $50 per point. A short trade on a stock. Here's a Metastock chart showing you an example of a short trade. Let's pick this top and go to that bottom down there. See what happens. 300 points it dropped. So $1,200 in 21 days on approximately $12,000. This is Google. So $12,000 brings you $1,200 in less than a month. 21 trading days is a month. So remember that number, $1,200. Now let's look at it on the E-mini. Same idea. This is about the same period of time. It's less than 300 points on the E-mini. In fact, it's 275 points, and you make $13,750 versus the $1,200. Same amount of time, same investment. Does the S&P 500 ever go to zero? Well, I suppose theoretically that's possible, but in the 41 years I've been trading, it hasn't ever done that. What if the world came to an end? Well, that could happen, but at that point, you're going to have worse problems than worrying about your S&P account. The biggest point drop I've ever experienced was during the COVID crash when it dropped 1186 points. Thank goodness I was short before that. What you have to remember is you cannot hold on to a futures trade waiting for it to rebound. So if you've been long when the COVID crash came, then you would be holding that for months until it rebounded and came back to where it was for you to break even. You have to give it up, however. You can't hold it forever waiting for a rebound because it expires every 3 months. What if the rebound takes a year? Okay, you're out 3 months and 3 months 4 times. So you can't hold on to it forever. If you were long during that crash, you would have to, at some point, get rid of that trade. There's also something in futures called trading limits. There are limits that the exchanges put in place to avoid crashes. You can see in Investopedia that a daily trading limit is the maximum price range limit that an exchange traded security is allowed to fluctuate. So they have 2 things called limit up and limit down. Limit up is the allowance that they allow for the market to go up. And that doesn't usually occur. In the E-mini, I have never experienced a limit up. I have experienced, however, several limit downs where it's dropped more than their permitted price. And then they put what is called circuit breakers in effect. And if you look at the circuit breakers, let's see if I click on that. I can't do it with this pointer. Highlighter right there. Well, limit down. I want to see the circuit breakers for a second. Can't do it. You'll have to click on it in the presentation later. But the circuit breakers are like if it's limit down, they'll allow it to be limit down and close for 30 minutes and then wait to see if they have buy orders. If they don't have buy orders, they'll close again for another hour, that kind of thing. So now that you know it's risky to trade futures, I'm going to show you how I trade and have been trading for 41 years. In fact, I can even sell you my system and my indicators and teach you exactly how I trade them. If you buy or win Sunday bands in the drawing, then I will show you exactly how I trade it for free. Consulting comes with it. And it's the same thing that I used to make me #1 trader years ago. So how I personally trade. The first thing I put on my chart is attractors. Now, attractors is a word that I coined to mean it's support and resistance, but it's also moving averages. It's also Fibonacci lines. It means the areas to which price is attracted. It's where price reverts to the mean, okay? And it's where there's a confluence of price. I look for the predominance of the evidence. The next thing I put on my chart is sunny bands, which I've already shown you, and I'll show you again. It's based on my dynamic average, the golden purple lines that were in the center of the bands, and I designed that to avoid whipsaw. So here are some attractors on, I think this is the E-mini. Can't see that right away, but that's attractors drawn. Let me get the other pointer back again. Yeah, good. So right here, you can see that there's an attractor at the top. Right here, you can see it hits that attractor at the bottom. It hits it again here. It hits it again here, and hits it again here. That's the confluence of prices, or the predominance of the evidence. So that's why I drew that line there. Let's look at the same thing. Attractors, those same attractors in a different time frame. So you can see down here, price hit it. Up here, price hit it over and over and over again. I'm going to get a different pointer. Excuse me just a second. And I'll take a drink of water while I'm doing that. My throat gets dry if I talk too much. And then my voice is even lower than I want it to be. I have 5 screens here, and I'm not finding where the mouse is. So we're just going to go with this. Here's how I trade sunny bands. This is, I think, a 5-minute chart of the sunny bands on the E-mini. And you can see here, upper sunny band, upper outer, this one is, goes down like this. Price is under here you see price is under the purple line. So as long as price is under that purple line, I'm short. So down, down, down. Here it hits the bottom sunny band right there. I'm going long because it was coming down on a red candle, down prices, turns to blue, and now I'm long. So I go up here, hits the upper sunny band. I'm ready to go short. Comes down again, down, down, down. Here it's the lower sunny band, and it turns blue, so I'm going long again. Up here, this one's a little dangerous, and it's scary and makes everybody nervous because it hits the inner sunny band, but not the outer. Turns around and goes down, penetrates that DMA and bounces back up. So I would have stayed with that long trade all through that nervous making period. I have something else that I call my PHW indicator. It stands for potential hourly wage, because a long time ago, I decided that if you could make more money working in McDonald's with an hourly wage of, it was $5 and something an hour then. If you can make more money working at McDonald's, that's what you should be doing, not trading. Trading should only be done if you can make more money than the minimum wage doing it. So this is the PHW indicator, these yellow dots. Okay, so they call absolute highs and lows. They're not predictive. They are a hidden and historical indicator, but they show you what's perfect. So I use those to tell myself, am I doing the right thing? Am I trading where I should be trading? And I also have them to help me pick stocks. This is the NASDAQ. You can see here's my PHW indicator, and it's sorted. So you can see the arrow, it's sorted highest to lowest. The NASDAQ index, I'm not trading, but Amazon, I am. And you can see that Amazon has the highest PHW of all of them. Now, why is that? Because Amazon's the most tradable. It doesn't go straight from low to high. It goes up and down, up and down, up and down in channels. Every one of those hitting the top of the channel and dropping back down again is a tradable moment. I also have my dynamic moving average on a screening here, and you can see that it tells you what's bullish, what's bearish. Red bullish means it was going up, now it's going down. Gold bullish says it's strongly up. Green bearish means it was going down, now it's going up. So I can pick stocks based on the information in this spreadsheet. So you can see here, Amazon's tradable. High, low, high, low, high, low. It just goes up and down. So that's why I trade Amazon in and out. This is how I trade my dynamic moving average. The crossover is my macro clue. That means my overall view is governed by what that DMA crossover is doing. But that's not early enough for me. The DMA is late, like all moving averages are late. So I created the sunny bands based on the dynamic moving average, and the sunny bands are faster, and they do a great job of picking the tops and the bottoms. And then I also created the dynamic moving average histogram, which is even more precise than that. So here's how I trade them. You can see here where the sunny bands are. We're going from here, we're going gold's on top. So when it hits the gold line, I go back to the upper sunny bands, comes back to the DMA, back to the upper sunny bands, back to the DMA, back to the upper sunny bands, and on and on. Here, they're getting very close. And you can see here where this turns red, this histogram. That means that these are getting very close to a crossover. And so at this point, I would be going short. And sure enough, it comes down and touches the inner sunny band, back up to touch the inner sunny band, and back again because gold's now back on top. And so it's touching the dynamic moving average and bouncing. So that's all I do. I don't trade anything else. I look at those two indicators and attractors. You can see here I've marked the long and short turns of the dynamic histogram as it changes colors. And look how perfect those entry and exit points are. And that's all there is to it. I look at the attractors. I look at the PHW. I also look at Vantage Point. I look at their prediction every day, and I post it on the homepage of my website. So moneymentor.com, you go there, and if you scroll down to about the middle of the page, you can see the current Vantage Point prediction. I study my DMA and the sunny bands. I trade the E-mini on 1 and 5 minute charts. I'm going to show you that too. That's kind of interesting. And I trade many times a day. With equities, though, I buy and hold for weeks to months. So here's what I do to trade a 1 and a 5 minute together to show me the quote, long-term trend. What 5 minutes is long-term to me. And this one's kind of tricky. So if you refer to my YouTube channel, that tells you how to put 2 sunny bands on 2 different data streams on one chart. So just look up Sunny Harris on YouTube and you'll find all that stuff. And I'm adding regularly. So here you can see the dark green is the outer sunny band on the 1 minute, and the light green is the outer sunny band on the 5 minute. It's down here on the bottom, I've got hidden the 5 minute chart. So you can see how these sunny bands work within each other. The 1 minute's working within the 5 minute, working within the 5 minute. That gives me my long-term view. But of course, it always works. There's Tesla again, hitting the bottom sunny band. Look at that. Hits that perfectly and bounces. And today it's up to the midline. It works on any symbol. Here's Google, same story. Hits the top, drops down to the DMA. It's probably going to go up after that. And the last piece of the puzzle for me is every night before I go to bed, I put away my trading tools, and then I look at Vantage Point to see where they think the market might go tomorrow. That gives me an overall feel for the whole picture. And the gray bar on the right of a Vantage Point chart shows you their forecast for tomorrow. So here's, for instance, this is a couple of days old. It's from the 15th, but here you can see what their prediction was for the following day, and it has come true. That's why I posted on Money Mentor every day. So here are my steps. Look at Vantage Point. I draw the attractors. I put the sunny bands on the charts. I put the DMA histogram on the charts, and I read the signals. I take the trades. Hopefully I make money. Can't be any more disciplined than that. That's just the whole of it. I do recommend that everybody read all they can about technical analysis first. You need to know everything that everybody else knows, because when you're placing a trade, you're trading against me. I'm trying the best I know how to take your money away from you. So you want to know close to as much, if not more, than I know. So there's newly designed Money Mentor. It has been active and on the internet since 1995, when there were only 10,000 users. And nobody thought that it was actually going to amount to anything at that time. So if you browse through the Money Mentor, click on all the buttons, you're going to be amazed how many trading tools and resources are available there for free. So please drop by. There's what it looks like. You can see that, even if you want to look up the hex values for colors, they're right here under resources. I've got a bookstore with all the books that are about trading. Of course, I've got my products and services. If you go to About, you can see my upcoming presentations. Quips, you can see what people have said. Now let's talk for a second about the products. They were all developed for use in my own trading, and I make them available to you. And for free, I'll show you exactly how I use them. And there's where you find them. moneymentor.com, go to the order form. And I don't hold anything back. I don't give you part of the way I trade. I tell you everything I do, and I'm happy to teach you that. So here's I do coaching and mentoring. I do programming for people. And I have correspondence courses. So the special offer for today's presentation is anything you order before the end of this week is 20% off everything I've got. Or if you order before the end of the month, everything is 10% off. You have to tell me I gave you that special discount. Remind me, and we'll calculate the special price for you. Includes my consulting and mentoring time. And if you want a 7-day free trial, you send me an email or give me a call. Anytime, any day, I always say, because I do work on the weekends too. I write my Sunny Side of the Street newsletter. It takes me 6 hours to write it every weekend. And I love to trade. Trading is my passion. Teaching beginners and intermediate traders is my passion. So, pardon me, any day, anytime. Just remember, I'm in California. Don't wake me up too early. Let's see if we have any questions. Jeff, how do I see if anybody's got questions?
I can read them to you if you'd like.
Well,
Or you can click
how
on
about questions?
Yeah. I'm
Okay.
checking to see if you have any on YouTube. While you're finding them, I'll talk about the recording. We had a question about the recording. We are actually streaming this straight to our YouTube channel, youtube.com/Metastock. And that means that right now, if you could go watch Sunny replay, you just go to youtube.com/Metastock. All 3 of the conference days that we've had so far is available at the top of that page. Oh, while you're there, Kelly Clement from our control room says that you get extra karma and points for liking and subscribing. So, did you find the question, Sunny?
I found them, but I don't know that I have any.
So if you pull them out, you can see them. One of the questions I promised to ask, there's only a few of them. I'll just read some of them to you if you don't mind.
Sure,
Charles wanted to know how Sunny bands are different than Bollinger Bands.
Good question, Charles. Very good question. Bollinger Bands are computed based on an exponential moving average in the center. I believe that exponential moving averages are too volatile and they produce a lot of whipsaw, which is why I developed my dynamic moving average. So it smooths out the whipsaw. And he also uses, let's see, I use average to range from my dynamic moving average. He uses statistics to calculate his bands. And I don't believe in telling the market where it's going to go. I like to ask the market where it is going. I do see the questions now, Jeff. What time frames do you use today? So I use 1 minute and 5 minute charts for my day trading. Sunny, it's Justin. Hi, it's Justin, one of my students. He says, I want to attest to the others in the room that you're the best mentor anyone could ask for. Oh, thank you. I highly recommend anyone in here interested in becoming a better trader to invest in Sunny's products and mentoring services. That's very sweet, Justin. Thank you. When is this recording, the slides available? I think they're on YouTube now, aren't they, Jeff?
That is correct, because we stream them as we go. So we don't have to do a lot of editing. They're already there. They live.
Yeah, fantastic. One of them, Charles says, can you roll over profitable options trades too? And I said right in the beginning, I don't trade options. All I know how to do on options is lose money. So that's against my religion. What's the difference between the ES and the ESZ? That's a good question. The ES is not a tradable contract. It's just the S&P index. The ESZ is the December contract. You have to make the whole contract ESZ 21. So you tell it the ES is what you want to trade. December Z is the month and 21 is the year. Why are you rolling over the future? In options, you only roll over when you're losing a position. You roll over futures because they close, the contract expires every 3 months. So you have to roll over to the next contract. Speaker goes vegan, important. Honest thoughts. I know how to lose an option, so I trade futures only. Yeah, that's me. What's my number, please? I don't know what that means.
I think he was asking for his registration number. He was actually number 905 to register for the conference.
Oh, okay.
That's, I think, what he was looking for. I don't know. Well, that was my guess. Jean, if I missed out.
There's some 48s and 49s in there. I don't know what that's for. Maybe these are for Ken, I think. Yeah. Hi, Ken. What works for you? So I think we've got them. Are there any more questions I didn't see? Let's see here.
Very bottom. We have some more coming in.
Using risk reward. No, I don't. And I don't trade using stops and profit targets either. I'm a reversal trader, so I trade the sunny bands from top to bottom. The bottom is that's where I take profits. That's where I get out and go long from a short trade. Top's where I get out and go short. And so the sunny bands themselves are my profit targets and my stop losses. Okay, I think I got it. let me give you my information now so you can see how you can get in contact. Jeff, thank you and Metastock for hosting the event. I really appreciate talking here, and I hope I can talk more.
Would love to have you. You did great. We appreciate you coming in.
Thank you. And thanks for everybody who attended. Here's how you get a hold of me.
And Jenny, this will answer your question. We have actually a couple of requests for how to get a copy of the slides. So would the best way to do that be to email me? Okay, so email sunny@moneymentor.com. Thanks for that question, Jenny. Appreciate it. Weekeen wants to know if I have set the date for the next summit yet. Not yet. Not yet.
Yeah, you're just barely getting over this one.
Oh, yeah. I did make a decision that I would not think about that until I got through this week. So I'll have a date next week.
That's what I wanted to do. That's what Bollinger Bands use, standard deviations. Whereas I use average true range on mine to calculate my bands. And if you put Sunny Bands and the Bollinger Bands both on the same chart, you'll see how different they are. All right, everybody. All right. Thank you so very much. Have a good rest of your seminar, Jeff.
You bet. Thanks, Sunny. Actually, we're going to wrap it up here. Thank
oh,
you
that's
very
right.
much
I'm the
for
last
joining
one
us.
of the day.
Yeah, yeah. I mean, there is that euphemism that like you saved the best for something or something.
Thank you much.
Did you see Jim's last question about how to move your trading stops?
Nope. I listened to Perry this morning and I listened to Ken.
No, there's one last question that I thought we could maybe hit real quick. How do you move your trading stops?
I don't move my trading stops. I don't use stops. I use Sunny Bands to show me bottoms and tops. So when the price gets down to the bottom Sunny Band and turns up, I'm out. That's my stop. It's the Sunny Bands themselves that are my stops and profit targets.
Well, Sunny, thank you for coming in today. I appreciate it. It's good to have you.
Thank you, Jeff. I really appreciate it too.
All right, let's go ahead and let's do this. There's a little bit of you think after doing this for a couple of days, I'd be a little bit more better at it, right? But let's go ahead and let me just go ahead and kind of do some wrap up here. Okay. And let's go here, present. All right. Okay. Let me just figure out where we're at. All right. Sunny did a great job. Really appreciate her coming in. I do want to talk a lot, one more time about our masterclass that we're doing. We're doing this November 20th. That's this Saturday. The time is going to be from 10 a.m. Eastern time to 1 p.m. Eastern time. We're going to talk about how to do technical trend lines and formations. Oscar Carboni is teaching this masterclass, and he does a great job. I mean, people that go to OmniCamp really enjoy the experience. One of the reasons we decided to do it with Oscar is the last class that we did with him was just so well received, and the people that go to his classes just absolutely kind of rave about him. So I want you to come. I want you to join us on November 20th, this Saturday. It's going to be from 10 a.m. to 1 p.m. We're going to have a bit of a break in there for 30 minutes, and he's going to do technical trend lines. We're going to look at charts. It's going to be a grand old time. So the price on this is $399 as a conference special. It's normally $499. We probably could have priced it at twice that. November 20th, you can sign up for it at 800 by giving us a call at 800-882-3040 or at metastock.com/saleschat. One last shout out to Stocks and Commodities for being a great sponsor. One last shout out to CMT Association for being a great sponsor of our event. And if you have been with us today, I appreciate it. I do want to give you an opportunity one more time to sign up for Metastock. You know, we've won Best Software on our price category 28 years in a row, scanning, testing, forecasting. 800-882-3040, metastock.com/saleschat. What we're doing is if you buy 1 month, you can get the second and the third month for free. Try it out. If you don't like it, you're crazy, but you should try it. I absolutely love it. I use it every day when I'm trading. 800-882-3040. I want to say thank you for everybody that spoke so far in the first 3 days. We got another action-packed day tomorrow. Thank you for coming. I hope you've been enjoying the event. I hope you're learning something. I hope you enjoy it. You know, I think it's been going great. I hope you agree. And let me know. All right. We'll see you tomorrow, 10 a.m. Eastern.